All India Convention 2022. It is our privilege to have you with us today. I request you to stand up for the prayer, please.
நீராறும் கடலுடுத்த நிலமடந்தை கெழிலொழுகும் சீராறும் மதனமென திகழ்வரத கண்டமிதில் எக்கணமும் அதில் சிறந்த திராவிடனல் திருநாடும் தக்க சிறு பிறை நுதலும் தரித்தனரும் திலகமுமே அத்திலக வாசனை போல் அனைத்துலகும் இன்பமுற எத்திசையும் புகழ் மணக்க இருந்த பெரும் தமிழனங்கே தமிழனங்கே உன் சீரிழமை திறம்பியந்து செய்ய மறந்து வாழ்த்துதுமே வாழ்த்துதுமே வாழ்த்துதுமே.
Thank you. I request a few moments silence for the cause of world peace. Thank you, everyone. Now request Sri Sanjay Bansali, Joint Secretary, to administer the pledge.
Happy morning, everybody. I'll request everyone to kindly raise for the pledge of our FIHPA. Kindly repeat after me. We, the members of Federation of Indian Hire Purchase Association and members of its affiliate associations, we pledge that we shall do business in a fair and ethical manner, maintain high levels of honesty, integrity and transparency, serve our customers with dignity, respect and a deep sense of pride and purpose. We pledge to continue delivering last mile credit to make financial inclusion a reality and accord higher standards of service to our customers. We pledge to create self-employment opportunities for the unfunded citizens and help them earn a livelihood and thereby make a reasonable earning and profit. We pledge to act responsibly and generously with every customer, even in their times of distress. Always work towards educating customers and finding a fair solution to our customers' difficulties. We pledge to abide by the laws of our country and follow fair business practices of the industry. We pledge to always work towards growth of our customers and bring light to their lives, thereby finding the path of our growth. We pledge to make our nation proud through every transaction executed by us and contribute to the growth of our nation and fellow countrymen. Thank you so much.
Thank you, Sanjay ji. I now request President Meghraji Lunawat, Secretary General Dinesh ji Kothari, Treasurer Om Prakash ji Agarwal, past Chairman Shri VJK Prasad ji, Shri Kailashmal ji Dugad, Convention Chairman Rajesh ji Bhurat, and FCA Co-Chairman Madan Lal ji Gundecha to light the Kuttugulat. Thank you. I now request the Convention Chairman Rajesh ji Bhurat to speak about the convention.
Namaskar, respected dignitaries and all the delegates present here and watching online. I, Rajesh Bhurat, Convention Chairman, welcome you all to the All India NBFC Convention. Today convention compromises of mind-blowing subject with interactive session taken by industry expert and leaders. Regulatory aspect and legal compliances are very important and have to be compliant with. Therefore, we have to also design in a in-depth filing session. The convention will also provide the members an opportunity to interact with business leaders and industry peers. The theme of convention says, till today we have challenges. Today we will find solution here, and from tomorrow onwards, growth, growth and only growth. This is the theme. इसलिए अपने आप को, अपने हौसलों को ये मत बताओ कि परेशानी कितनी है, बल्कि अपनी परेशानी को ये बताओ कि हमारा हौसला कितना बुलंद है, कितना बड़ा है. धन्यवाद.
Thank you, Rajesh ji. Now call upon Chairman Meghraji Lunawat to give the welcome.
Happy morning, respected dignitaries, all the delegates members, and those who are watching also, our office bearers. I welcome you on behalf of our FIHPA. Friends, after a long time of COVID affairs, we could not able to hold this convention. Today this opportunity has come now to educate our members about the NBFC's new role by this RBI's affairs is also coming long way. This is the opportunity we got to learn about the regulation and other activities to our members. Friends, we have tried our best. Since previous also there was a RBI regulation was that from 2 crores to 20 crores. We have fought like anything with them. Finally, from 20 crores now RBI has come down to 10 crores. For that also, we are still trying to see that it comes as old 2 crores. Friends, Federation is doing our best to make them satisfy our all members. So again, I thank you very much for participation in this NBFC's convention. Thank you very much.
Thank you, sir. As you can see, we are also live on Zoom. We have participants from all over India. So without further ado, let us start with our business sessions. We are fortunate enough to have prominent industry professionals speaking to us today on topics pertaining to the NBFC industry. Let us hear their experience and views on the subject. I would now like to introduce the panel for our first business session of the day. Mr. R. Anand. Mr. R. Anand is a qualified chartered accountant. He has worked for over 20 years in Sundaram Finance Limited in various positions. His last position in Sundaram Finance was Vice President of Corporate Affairs. Thereafter, he was a partner in Ernst & Young. He holds a directorship in various companies, 5-Star Housing Finance Limited, 5-Star Business Finance Limited, Nani Palkhiwala Arbitration Center, and the Chennai International Center. He was a past chairman of the Indo-American Chamber of Commerce, SIPA, convener of study group on guidance note of audit of insurance companies, member of research committee of ICAI, chairman taxation committee, Madras Chamber of Commerce and Industry, member of CBDT committee on accounting standards, member of Nidhi Companies Committee set up by the Department of Company Affairs, Committee for Revival of MSMEs in Tamil Nadu, which has recently submitted its report. We have with us Sri VGK Prasad ji, Managing Director of IKF Finance Limited and IKF Home Finance. He is also the past chairman of the Federation. He has over 4 decades of experience in the vehicle finance business. We also have with us on the panel Mr. Deepak Dugar. He is the joint MD of Mahavir Finance Limited, a Chennai-based NBFC. He's a BCom by qualification and he's a joint managing director of Mahavir Finance Limited. I now hand over the proceedings to Sri R. Anand, moderator for the session. Thank you. Yes, I request you to please join us on the dais.
President and other office bearers of the Federation of Indian Hire Purchase Association, various delegates who have assembled here in large numbers, my colleague panelists, Mr. VGK Prasad, Mr. Deepak Dugar, and my other friends. In fact, as very appropriately mentioned, It is good to meet all of you post the pandemic, and in fact, I was jokingly mentioning to somebody that with a vengeance now we are meeting now more frequently. There was a very big seminar of the Madras Hire Purchase Association organized just about a month back, and the hall was packed, 300 people, and now we have about 150 people, and many more watching on Zoom. So which clearly demonstrates two things. One, people are very hungry to come back, meet everybody and sort of exchange notes. The other important aspect for which we have to feel very happy about is that business is also looking up, and therefore people are all encouraged to come and then see where else they can move the needle up and ensure that the growth agenda gets translated into concrete action. Now, I don't know whether it was by design or otherwise, the first subject itself is a subject which will kickstart the entire probably deliberations for the day. It is about growth through funding. And the catchword is equity versus debt. And if you drill it down further, it is about various other components of debt, various other components of equity, which is so important now for us to bolster our liability side of the balance sheet, which will enable the asset side to naturally grow because of the importance given to the liability side. Before I ask the panelists to come in and chip in with their experience and loads of experience which are there, I just want to make a couple of very preliminary remarks considering what has been the evolution of the liability side management of NBFCs over a period of about 30-35 years. In the good old days, and all of you know, we all like to start with good old days to reaffirm how old we are today. That is one reason why we want to say good old days. But more importantly, I remember in 1980s and 90s, we were looking at only two aspects on the balance sheet, equity and public deposits, and some parts of bank borrowing. Now, public deposits is virtually out of the window, except 2-3 large companies. Very few companies are accessing retail public deposits. So the whole architecture of your liability side has undergone a sea change over a period of 30 years. Now it's all about the right kind of equity, right kind of debt. How do you manage equity and debt? It's not equity or debt, it's about equity and debt. How to leverage your equity 6 times, 7 times as is required, and how to get the best return on the funds employed. See, finally every business is about the number which stands after you translate all your business into reality. After you collect the last installment, what is the return that you have got on each contract? What is the return that you got on your funds employed, on your equity employed? That is the test of the success of any company. Whether it's a small company, medium company, large company, it doesn't matter. You are putting in money, you are not in charitable business, you are in commercial activity. You are in the business of borrowing money, lending money, generating a return for your stakeholders. So whether it's equity or debt or equity and debt, the most important number that all of us have to track is return on equity and return on funds employed. You keep that metric in your mind and test that metric on a periodic basis, annual basis, every 2 years, 3 years, and satisfy yourself that you are doing the right thing by getting the right return on equity and your funds employed in your business. Having said that, if you have noticed in the pledge, we are not here to make usurious profits. We are here to make commercial profits, but not usurious profits. And that is why we are responsible financiers who have to manage our equity and debt in such a manner that our balance sheet looks clean, our balance sheet looks understandable, and our balance sheet is attractive from a fundraising standpoint. Now, I don't want to jump in and say which is better or what is the right mix. It depends on business to business. It depends on your class of assets on the asset side of your balance sheet. Whether in two-wheeler, a different type of mix will help. Commercial vehicle, different types of mix will help. Used commercial vehicle, used LCV, different types of mix will help. It all depends on what is your target, and based on the target, what is the right type of liability mix that you have on your balance sheet. So these are some of the preliminary thoughts, but as we take the discussion along, I am sure a lot of interesting insights will be brought in by both the speakers, and I'll try to chip in as the need arises. So without much ado, may I now request first Mr. VGK Prasad, a veteran in this field, who has seen this game again for the past 30-35 years. And he has successfully scaled up his balance sheet from a very, very starting point level to the level that he has reached now. I don't want to tell that number. He has to tell his balance sheet number. And how he very effectively used equity at the right time, at the right price, and for the right deployment. That is the journey of the equity that he demonstrated in his balance sheet. It will be interesting to hear his story and how equity is also important now for the next phase of growth as far as any journey of development is concerned. So may I now first ask VGK Prasad to start his story, and then we'll move on to the next speaker. Mr. Prasad, please.
President of Federation of Indian Hire Purchase Associations, Sri Meghnad Ji Lunawat, Secretary General Sri Dinesh Kothari Ji, my learned friend, Convention Chairman Sri Rajesh Bhorat, and Mr. Anand, veteran of, the chartered accountant and a veteran in this field, though he may not be directly involved in the business, advising all of us, and Mr. Deepak Dogar, the co-panelists. And my brother, financier, sitting before me. Thanks for inviting me and giving me this opportunity to address you. More than addressing, I am happy to have met so many friends whom I have missed for a long time. 2-3 years, most of them, and some friends who I have not met in 5-10 years. And thanks for giving me this opportunity. So the subject given to me is about equity. And so it is like a capital. Any organization, if you want to do business, you have to raise capital. So effectively, we can say in the initial stages, that is equity. We need to raise equity. But regulator in his wisdom has thought that NBFC should be given a leverage to borrow debts based on their equity, so that they can serve the society in large, which is the interest of the government and the regulator, and also in the process to make some money. NBFCs to survive cannot survive only on equity, they need to leverage the equity. So again, as you go along in the business, the initial capital that you invest will get added on by the profits that you generate, and then minus whatever dividend you have paid. Nowadays, a lot of companies are not paying dividend, are paying very less. That adds to the balance sheet, and that becomes the net worth. So now the equity can be considered as a net worth. Going forward, instead of equity, I will talk about the net worth. And I will talk with particular reference to NBFCs, because the convention itself is called an NBFC convention, and most of our partnerships have converted or are in the process of converting into NBFCs, which seems to be the intention of the regulator as well as the government. So now regulator has said the capital to risk assets ratio of 15% for NBFCs. Effectively, that translates into you can leverage your equity by 6 times. That is permitted. The maximum leverage could go up to 6 times. And your capital to risk assets ratio, Mr. Anand will explain in detail if you have any doubt how it is calculated, but it should not be more than 6 times, which effectively converts into 15% ratio. Having said that, is it possible for our NBFCs to leverage that much that much? I haven't seen any company, or maybe very few exceptions, maybe some housing companies, where we were able to leverage by 6 times. The reason is this. We say, for example, we raise 10 crores. We borrow, say, 40 crores. The bank says 25% is your margin. So to borrow 40 crores, you have to invest 10 crores. So your entire money is there invested. Now he says you have to keep paying on time whether you receive or not. And then all our customers will not be paying on time. You need some cushion for that. And then some banks say you can give only regular assets as security. Sometimes they take primary security, they may secondary security. So even one EMI due, that becomes, it cannot be given as security. Effectively what I have found is 40% margin is what we require. It is for some NBFCs. As you go forward, as you get ratings and grow up, maybe you can leverage better. But still now for our companies, I find that 40% is the leverage that can happen for us. And then regulator in its wisdom also has permitted tier 2 capital, which can be considered as a quasi-capital, where we can leverage that to raise funds. So effectively, we can say regulator himself also has permitted 4 times, and we also at best can leverage up to 4 times. I have been in talks with various banks, and they say, what is your leverage on AUM? Not on your book size. I say 4 times. 4 times is okay. And then the rating agencies, how much are you leveraged? Once you cross 4 times, then the challenge comes. The rating agency feels you don't have enough cushion by way of capital or net worth to take care of stress times, like in COVID, some other times when the economy is slowed down. So effectively, we need to keep raising capital. Maybe we can say that if you want to go into a 100 crore company, at least you need to have somewhere around 30, 35 for a companies of our size. I am not talking about very big companies where banks themselves say 10% margin is enough, or certain other concessions are given. But in our case, this is what is required. And then capital, my suggestion is we have to keep on increasing the net worth. We are riding a tiger. You cannot get down from the tiger, it will eat away. So as long as you are in the business, you have to keep riding it. How do you ride? I can also put it in a milder way. You are on a bicycle or a two-wheeler. So you have to keep driving. You cannot say, I will go back or I will be stagnant. No, it will not, your company will not be able to do that. So you have to keep growing. You have to keep doing business. The only way that you can stop business is selling your company to some other NBFC or some other bank which is willing to absorb it. Otherwise, you cannot do that. And then rating is also ask you, what is your growth? I will give you from my example. Our growth was 27% over last 5 years. Rating agencies with certain, with certain amount of reservation said, okay, we are okay because your quality is good. Then private equity investors who have invested, you are extremely low. You are not up to the mark. Mr. Prasad, this is not what I expected from you when we invested in you. So there are other peers who are doing much better. So they say 40 to 50% is what is required. I will come to that later. So what I am trying to suggest is, you have to, if you want to grow, which is compulsory, you need to add money to your net worth. One way can be that you don't give dividends, but you add it to your profit and balance sheet so that your net worth keeps going, whereby you can leverage on the added net worth also. That way is one way of growing, but that may not be enough. You have to keep on adding. So how do we raise fresh capital again? Are we able to generate? So there are various means. One is that, as I said earlier, regulator has permitted tier 2, which again, rating agencies will not consider it as a capital. Only for the sake of regulation it will help us, because again it has to be more than 5 years, it has to be unsecured, and then as a year after year it goes down, then that cushion also will be lost, and then this will have to be again like a riding a tire, you have to add more and more tier 2 capital. That is, anyway, having said that, a certain portion of tier 2 can help you in meeting the requirements of the regulator. Then other than this, you can take more partners, or you can add more capital of your own. But here we have to find, I have a lot of friends. My business I have learned from a lot of your seniors. I came from an agricultural family. I wanted to start an industry, but my finance business was doing good. So we entered finance business. So we have gone through a lot of cycles. That's a different matter altogether. But when I visited these conventions, I learned a lot of this, my experience from our people. We can learn from Sundaram, Sriram. They are all very big people. This knowledge that we earn is not applicable to what we have learned from them. These are all completely different things. But why did you not grow? Why we were able to go a little? Now, I don't say that we are going extremely well, but some growth is there. Why? Because I have found two reasons. One is you are satisfied. I am getting my money. I am doing well. Okay. And then second is you focus on NBFC business, but again you invest on one, two, three different businesses. So what is happening is that your NBFC or your finance business is starved of capital. Once the capital is not growing, your net worth is not growing, banks will not be comfortable giving loans to you. Mr. Dogar knows it, Mr. Deepak knows it, Mr. Anand as a chartered accountant, a lot of you would also be knowing. But now we will have to decide whether the focus will be this. Some diversion can happen, but that's a different. But our focus should be this NBFC, growth of this NBFC, and for the growth of this NBFC, we have to keep on investing money. We have to keep on equating net worth. And if your business does not grow, beyond a certain point, you will not get a rating. If you don't get a rating, olden days where you are very good, your quality, those things will not work. Rating is mandatory for anybody to look at you. Even NBFC's funding also, they ask you, what is your rating? So is it BBB plus, A? That question comes. So to get that rating, we have to keep on adding. It's not enough you make return on assets, return on equity, NPS, and these things will not be enough. You have to keep growing. So to keep growing, again your capital is required. So when you increase your capital, you grow. When you grow, you grow by getting more loans, by leveraging your capital, and then as you grow, your rating comes. I am told with a talking discussion with a rating agency, any customer below 100 crores, we will not be comfortable giving rating, even if he is doing extremely well. So rating, so this is going to be a major challenge for a lot of us. If you want to convert into an NBFC, then you should look at immediately from the first 2 or 3 years, it may not be enough. You have to keep growing. You have to keep adding to your capital. Otherwise, rating will not come. Rating is the most important factor in raising debt. I am trespassing into an area because this is what I am saying with reference to equity. I will not try to, I know my red line. I will not cross that. This is something related to capital, equity. That is why I am trespassing there. Please pardon me. And then there is another method by which the capital can be raised. Even that happens when you cross 100 crores only. There are some PE funds who are willing to invest. Bigger funds invest in bigger companies. There are some PE funds who invest in NBFCs. They say they find the right promoters, they find the right business, and then they invest at the initial stages. They may not come at a very high valuation or your multiples of your book value, but they come, they guide you. There is a lot of contribution they can also make. Sometimes they say there is a pain in the neck also. No, there is always pressure. That pain in the neck is like, when your father beats you or when father admonishes you when you don't study. There is something that they are all driving. There is also something that we can look at. So, as I said earlier, try for reach 100 crores, maintain your quality. Olden days where your return on assets or your profitability, those things are not very relevant. We have gone to a PE fund. I will quote from my experience. Our return on assets, return on equity, our quality of customers is considered to be extremely good for the industry. But we are not getting the valuation that our peers are getting because we have not grown at 40%. I said we have slowed down in COVID period. Post demonetization, when the heavy commercial vehicle segment was taking a hit, we slowed down there. We moved on to the small and LCV segment, where the transportation is of essential commodities which are not impacted as much as heavy commercial vehicles because of the COVID. We made there in the process. We did a lot of explaining, but they were not willing to listen. Mr. X has gone by 40%. Mr. Y has grown by 50%. All other things are immaterial for us. Mr. Dugar knows. Mr. Deep. So these are the challenges we get. So focus has to be on growth. Your growth at a reasonable pace. But again, it's not enough if you grow and your NPS increase, then again it's a challenge. If your NPS increase, your profitability is less, your return on, so there again there's going to be a challenge. So focus will be growth. At the same time, along with growth, we have to maintain the other aspects also in control. So basically, these are the things that came to my mind. It is a very limited subject. And then debt, there is a wide area that can be looked at. Mr. Deepak, my young friend, will enlighten you on it. Thank you, sir.
Thank you, Mr. Prasad, and I think you have set the ball rolling correctly. And as you would have noticed, there are two very important points he has made. One is riding the tiger. Once you get into equity, you can't get out of equity. Whether it's private equity, your own equity, once you put money in a company, you have to make a success out of it. You have to keep growing, also ensure that there is enough return on the investment. Both are very important. The second part is that today we are living in a situation that we are accountable now to everybody in terms of how you are raising money and how you are deploying money. It was not only about a relationship between you and your customers. Credit rating agencies, regulators, society at large are also looking at you very closely. And information is now spreading so fast, WhatsApp, technology, otherwise. So the moment you publish your results or on the verge of publishing your results, every regulator or every rating agency or every analyst picks up your peer's performance and they say, he has done like this, you could have done better. This part of geography, he has done better than you, you are not doing better than him. So this comparison now is becoming a very infectious type of a disease. So we need to benchmark ourselves and ensure that when we grow systematically, properly, ensuring the right deployment of funds, whether it's debt or equity. The jury is not out yet as to which is important, debt or equity or both. We will do that after the culmination of the session itself. So Mr. Prasad has explained his experience about equity and how he is masterminding the success of an equity structure in his company. Deepak Dugar has, as a youngster now, second generation company, he has ensured that they have started in a particular way, traveled a journey which is very, very learning curve for them. And today he has raised equity and he has also managed debt very carefully, very systematically around the equity base. So it will be interesting to hear his story about managing debt via equity.
Good morning to everyone. So, first of all, it's an honor standing here and addressing everyone. I think I have learned all my life from all of you, and it's a great feeling to stand here and talk about a subject. And I'd like to thank the association for giving me an opportunity. Thank you so much for this first. So, as rightly said, debt versus equity. Well, I think Mr. Prasad has clearly said it's not debt versus equity, it is debt and equity, which is the right way to go forward. I'm not a veteran in this, but I would like to just give a few technical details about debt, and then I would like to share more on the practical experience of how we have taken it forward. I guess technical, Mr. Anand, Mr. Prasad, and all of you are all veterans here, so I guess I will leave it to all of you all, and if you have any queries on technical as well, they will answer better than me. But on the practical front, the last 5-6 years of our journey is what I would like to share. Maybe it helps all of you. So I'll just start with the technical front first. Thanks. Yeah. So what is debt? Debt is money borrowed by one party from another and repaid with interest. So, and agreed period and frequency. Yeah. In other words, it's called a debt capital used for business expansion and paid over a period of time. Debt is also available in various kinds of instruments, and each instrument comes with a different cost and a structure. So these are the various kind of debts. Well, I have, as much as I remember, I have presented. There are sub-debt, there is term loan, there is an NCD, there's an ECB, there's a cash credit overdraft limit, there is a refinance, securitization, co-lending, partnership, bonds. Of course, co-lending and partnership is not actually part of debt. It's a little different, but I just added so that I thought it will be of help. So, what are the different types of debt financing loans? Well, there are three kinds of debt financing loans. One is a fixed term loan. These loans have set repayment terms and monthly payments. The loan amount is received as a lump sum payment upfront, and these loans can be secured or unsecured. And then typical examples are term loans where you are paying monthly EMIs. And of course, you have these bullet payments as well, which are commercial papers, NCD, ECB, bonds. Then we have something called revolving loans. Revolving loans provides access to an ongoing line of credit that a borrower can use to either repay or repeat or grow his business. So the typical example, I think, which all of us as an NBFC understand is cash credit limit, CC limit from banks, overdraft limits. So the last one is the cash flow loans. So cash flow loans are basically a lump sum payment from the lender, which is used, it is basically more a buyout, and the whole profit is used for us, and it is not part of the balance sheet as well. So that's the typical cash flow loans, which is refinance. You have securitization. In securitization, you have something called PTC, pass-through certificate. We have something called direct assignment. So technically, I guess, I'm sure Mr. Anand and others can explain it more in detail on that. So again, debt financing can be into two parts. One is short-term and one is long-term. So short-term debt finance gives you access to quick loans for a short duration, and it's basically used more for a temporary financial emergency, is what we understand. And typically, when you want a short loan in an emergency, the interest rates are a little higher compared to a regular loan. Long-term debt financing. These are typically loans which are taken for more than 2 years plus, is what we assume. And long-term loans carry comparatively a lower rate of interest over the course of the loan tenure, but you have a commitment of an interest, which is an obligation for longer period, which can be a variable factor. So, advantages of taking debt. I mean, this is I think the most talked about topic right now. So, it's just, one of the biggest advantages is leverage, as Mr. Prasad has already told and Mr. Anand has already informed. So, leveraging is very important. So, once you're able to take debt, you're able to leverage your business and your capital, and that helps you to create growth and to grow. So, that's very important to leverage. And the leverage ratios are very different today. Some people say 4:1, some say 5:1, some say CRAR. I mean, there are different variants in that, and we can have some direct assignments which can be off balance sheet. We can do some co-lending, so you can grow even 6 to 7 times of your book, of your capital and your NOF. So again, one of the advantages of taking debts are retain ownership of the company. Majorly, the major advantage of taking debt is it is stake free, which means the ownership stays with you. And tax advantage, I think the interest payable by the company on the loan is deducted from the company's tax returns. So this reduces the overall tax liability and cost of debt for the finance. This is another big advantage. Of course, the third, easy financial planning. Since the rate of interest is fixed and the exact, you know how much interest is to be paid month on month and your EMI to be paid on month. So you can plan your cash flow much better and engage in efficient planning and budgeting, which helps us to, maintain our credit score. So I think one more important point is it is really faster, and you have many options available today for companies to get debts. There are different kinds of debts available in the market. There's not major disadvantages, but I think one of few of them is, it's a compulsory repayment month on month, whether the customer pays or not. So we have to have that liquidity buffer in place. Then if the company goes bankrupt, then the lenders have to be paid first before the equity shareholders. That's one. And collaterals, of course, every lender expects a collateral. It can be, your company collateral or your personal collateral as well. So that's one thing which is very required and taking a debt. And then the last point, I think one of the most important points as well, as Mr. Prasad also said, is credit rating. Now today, credit rating is taking a big place with CIBIL and everything coming up, and even banks are asking for ratings, CRISIL, ICRA, everything. So when you take a large debt financing, it can affect your credit rating. So by chance, if you are delayed in making the payment, it spoils your reputation, and too much exposure also gives you an effect on the credit rating. So I think this is the discussion today, debt versus equity, and I say debt and equity. So I just put it somewhere that too much of debt, it is over leveraged, and too much equity is under leveraged. So I guess the decision is a trade-off between risk and return. A firm should adopt a policy that minimizes risk and maximizes return. This is what we feel. Yeah, so that's it, I guess. I just wanted, so these are the technical fronts which I could explain a bit. And I'm again clear that I'm not an expert. I may have missed out a few things. And I'm sure Mr. Anand and Mr. Prasad and others can help on that. So now I would just like to share a few practical experiences of how Mahavir Finance. So basically, just a quick introduction. Mahavir Finance is a company which was incorporated in the year 1981. And my dad, the managing director, Mr. Mahavir Chandugar, took over this company in 1987. And with a 10 lakhs capital is what we started. So we have gone through all different phases, and the first thing, as Mr. Anand rightly said, was public deposits. Those days it was a small equity, and the other way of getting money was public deposits. So we had a huge public deposits we had taken in those days, and then there was a new government regulation with all the Ramesh cars and all coming in. So we had to refund deposits, and that was a very big phase wherein you borrowed the money, there was a major asset liability mismatch, and we had to refund the money. So we grew the business, we had to bring down the business again. Then came the next era of, I think, securitization. So there was no limitations on securitization. You could just keep doing your business and growing your books. So that is how we started in Mahavir, and thanks to companies like Sundaram and Shriram and a lot of companies who supported us in the 2000s, and we grow our book. We were able to do close to 800 crores of business on securitization. But again, the government came up with certain rules, and due to the seasoning and all that. So again, we couldn't grow it to another level. Then we started getting into the franchisee model, wherein we tied up with Shriram Transport and grew our business as well. This was around 2010, 12. So we all started growing our business and grew. So finally, I think we have gone through almost 3 to 4 cycles from 1987 to close to 2014, 15. One thing we realized is the most important thing is your leveraging. Second, the most important thing we felt is probably, have a mix of debts. So that's when we understood. I mean, Dad came and told me and my brother also is part of this business, and he told us that, okay, now what's your plan? So as Mr. Anand rightly said, we had a lot of his other businesses as well. Mahavir Finance was one. I had some personal businesses which I used to run, my brother used to run. So Dad told me, okay, what do you want to do? Do you want to grow Mahavir, or do you want to just keep it like that, as it is, just the limited? So the idea was, either you look for profits or you look at creating wealth. These are the two things which we had to take a call on. So we decided, okay, Dad said that you have to close down all your businesses and take equity, because we were getting some equity interest that time, people were ready to invest. So that's how the equity journey started. And it was very clear when we took the equity, as Mr. Prasad rightly said, we are sitting on a tiger. So we have to keep running. Till then we were not sitting. So once we sit on the tiger, then there is the only way is keep growing. So that's how we took the plan. And with all our experiences of debts, we really understood that we should never depend on one kind of a debt. Have your varied debts available in the market. Take some NCD, take some ECB, take some term loans, take some securitization, and start growing your book. And we are proud that in 2016, before the equity came in, we were at a 40 crore book, and in the last 6 years, and today in December, we have closed 400 crores plus book. So we've grown close to 10 times, and it's been totally because of equity and because of debt. So we have a NOF of close to 80 plus crores, and we have leveraged almost 5 times. So I just wanted to share my experience that we always tell everybody that we are a 5-year-old startup company with 35 years of experience, because we started only in 2016 to grow our books, although we have 40 years of experience. So I think debt and equity is very important. And can you just see the last slide, please? Yeah. So the biggest learning is diversify debt, both in terms of providers and products. I think this is something which I have learned, and I thought I should share this. I think my experience is this totally, and thank you so much for giving an opportunity. Thank you so much.
My memories went back to, again, 1990s, when we as youngsters were making presentations. This is a new generation of people coming and confidently making presentations about their stories without any inhibition. That is what is required, because we live in an atmosphere where this type of success has to be infectious. Success has to translate into more success. And the jury is clearly out. See, in this business, I remember we used to analyze the best balance sheets of India again in a few years back. Colgate India was the best because zero debt for years. The best performing company, Colgate India, because every day everybody has to have toothpaste. There's no sort of a recession in that business at all, but zero debt. But in this business, we cannot be like that. It has to be equity plus the right type and component of debt. And as Deepak Duhar very rightly put out, look at the range of products now available. The product range is also large. The provider of finance range is also quite large. You have so many banks, so many large banks, medium-sized banks, small finance banks, and so many quasi-banks also coming in to provide debt. Only the pricing is an issue that you have to sort out. Another important point is, and made by both the speakers, see, this leveraging is a very, very difficult concept, at least to understand as an accountant, understand as a businessman. We used to call it debt equity, now we are calling it leveraging. See, at 6 times, you are very highly leveraged, but at 6 times, you will get the balance sheet which will be most acceptable to all agencies. If you are 3 times leveraged, some investor will tell you, look, Mr. Prasad, you are 3 times fine. Had you been 6 times leveraged, Your AUM would have gone up from 3,000 crores to 4,500 crore, and at that AUM you would have got 0.5% less from bank borrowing, and your return on investments would have been much better. So there is always something which is always better than what you have achieved on the balance sheet. That is the uniqueness of our business. Whatever you do, somebody will say this element could have been done better, whether it's debt component or equity component or a combination of both. But the message which is loud and clear is that as years go forward, we need to have lot of equity strength on our balance sheet, the right proportion of debt, with a clear understanding of where the money is going to, which product, which market, which geography, which vehicle, and generate the right type of return. Because the last thing that we want to do to all stakeholders is to be a defaulter. That's the worst thing that can happen. None of us want to be a defaulter to anybody, whether to equity investors, debt investors, or anybody else. So that is the success of our industry. We have never been defaulters. At best, we have faltered here and there on compliance, this, that, that's okay, fine. But we should never be called a defaulter, whether to whom, from whomever we have borrowed. We have about 20 minutes. What I propose to do is, another 5-10 minutes, I want to ask quick couple of questions, both to Prasad and Deepak Dugar, and then we'll throw open to question and answer. And Mr. Prasad, see, in your journey, as you rightly pointed out, you have used equity now, excellent, and then you have protected a balance sheet which is now very sound for the next phase of growth. According to you, in the next 5 years horizon, how do you look at various products on your balance sheet? Will it be the same, very prescriptive, or you would like to have more range of products on your balance sheet for the next phase of growth as far as your company is concerned? You can.
Thanks, Mr. Anand. This is a very difficult question. You can keep on increasing the products. Again, then you are not backed by the decades of experience when you go into a new products. But within the range of the products, there is always a possibility for diversion. And then your policies should always be dynamic. Within these products, if something is not doing well, you should not say, my father has done this business with these products, I have done for decades, and I will be stuck with this. That should not be the way we do business. Based on conditions change. The only constant in the present economy is change. We also should be prepared for change. So coming to ourselves, say, I will quote from a private equity investors. When they came to us, we had 90% vehicle book, or 85 to 90, between 90, and 10 to 15% SME book. This SME book had become a hindrance for us in raising funds, because they said, you have too many products, your experience in SME is less, whereas in your vehicles, it is a long experience. Why did you divert? I said, it is for the sake of risk diversification. But again, you are increasing your risk. These are the challenges. You can be comfortable. You also have to be mindful of the other players who are going to support you. That is one challenge that is going to be there. And then in raising debt also, these challenges can come up. Coming to us, we will be focused on the vehicle segment. Plus, what we thought was internally, SME is a good product. Actually, our SME was doing extremely fine, and it was giving us good returns, but still the investors did not get satisfied. So that became a hindrance for us in raising funds, which brought down our valuation. It is not enough if you think that this is doing good, I am going at the olden days are not. So your bankers have to support, your rating agencies, they had a lot of discomfort. Why are you moving into SME business? Some companies have failed, we know aware of that. It doesn't mean, even vehicle finance companies have failed, it doesn't mean that we are going to fail. You are prudent, your policies are there, and then you have put your filters properly, but they don't agree on that. So there they will have to convince them. And internally, some diversification for the sake of risk distribution, it can be done. That's what we propose to do.
Thank you, sir. That was very useful. Now, Deepak, I want to ask you this question. You are a youngster and you embrace technology very easily now. In managing your debt, I see two challenges in bringing in technology in managing debt. One is, of course, the MIS system itself. The other is there are a lot of covenants now in debt obligations which are in the agreements. Now, how do you see some of the dangers in the covenants in bank agreements? How do you ensure that as an organization you are protecting your company from all the risks with those covenants, and how do you use technology to arrest those risks?
So, yeah, I mean, it's a very valid point. It's a real challenge nowadays with the governance, especially, a lot of rules changing every 6 months. RBI is coming out with new policies and different. So we have to have a team in place. We have company secretaries, we have internal audits, and so that's the only way we'll have to create it and keep growing and keep controlling. I think the most important thing, as you rightly said, is MIS. So today, I think if you want to do a business, the two most important things is one is people and second is process. If you have these two right, and now I think the third buzzword is technology. So people, process and technology, these are the three things which are very, very vital. And the way the market is moving up, I think everything can be controlled on a dashboard, on a single platform, and we have teams in place. And if you're able to create the proper teams to manage it, and you have your governance in place, controlling the governance with a proper team, I think it's totally possible.
Very, very nicely summed up, because compliance, governance has got a cost, and you have to factor that cost in your workings. In your net interest margin, that's the most important element. Apart from manpower cost, compliance and governance cost has to be factored in when you do your pricing. And in your all products, on the liability side, that element also has to somewhere subconsciously work in your system, that there is a cost to manage these particular products. We have about 10 or 12 minutes for Q&A, so I would request any of you, I'm sure there is some arrangement of mic going around to enable you to raise the question, only to Mr. Prasad and Deepak and not to me. Somebody said I am supposed to answer. I am not supposed to answer. I am supposed to only raise questions. Anyway. Please announce your name and your organization, and then you can ask the question. You can just take the mic around too.
Said we should not be defaulter. We should not be defaulter to anybody, equity or debt. But whether we accept or not, some financier sometime defaulted, and it hurt reputation of all financiers.
Correct.
So what is the main reason, or what we should take care that in future at least financiers do not default? What went wrong?
Correct. Good. How do you arrest default? Prasad, you would like to take that? We should not be a defaulter, I agree. But what are the steps to be taken to ensure that that doesn't happen is very important. Preventive steps.
So, we should be conscious that we are playing with public money. The first step is that when you are lending, you have that in your back of your mind, this entire money is not yours, your responsibilities are there, so you have to be mindful of that. So there can be a lot of hiccups that can happen. There also you need to be efficiently insulated with that. But fortunately for us, if you see across the history of NBFCs, bigger NBFCs have failed, but smaller NBFCs have never failed. There may be a delay in payment. It is again related to the strategies, the arrogance, the diversion of funds. Those things will not be there. I'll give you a typical example. When the first wave, COVID wave was declared, lockdown was declared, RBI said, you can give, NBFCs can give time to all the customers. But the message that went into the market was it is a prerogative of the borrower to exercise that right. So nobody paid. So what do? We can't fight with everybody. So automatically we gave them. But how many people have we borrowed from? There were 22 institutions that we have borrowed at that time. Except Sundaram Finance. Not one has given time. Even Sundaram Finance we have not asked. Within 1 week, I received a letter from Sundaram Finance. If you require, you can use the moratorium of 6 months. So anyway, to be cautious, I utilize it. But Sundaram Finance is only a small amount of our exposure. So we have to keep paying. So we also have to be prepared for that. After 2 months, then the government and they became wise. They say they came out with TLTRO, then they came out PCG, lot of things. They supported us. But these 2 or 3 months were very crucial. You cannot default. If you had defaulted, we have a history of decades. 30, 40 years, we have never paid a single loan interest even 1 day late. If it was a holiday, we paid 1 day in advance, not late. That is our reputation. There are no godfathers for us. It's our reputation that has to build up. So we have to be mindful of our risk. We also have to be prepared for the risk. And some cushion should always be there so that you are very careful about it.
In fact, as best practices, some NBFCs follow this principle of T minus 2. T minus 2 means if the due date to payment is 30th, you have to pay it by 28th. Not on T, but T minus 2. Allowing for some bund, disruption, this, that. So that gets ingrained as a discipline in the internal system of the organization. Any other question?
You said about the concentrating on a single product. That will give you the more credit rating. During these COVID days, people with different products, they were able to manage the cash flow. How do you manage the cash flow at that time?
Cash flow in COVID times, correct?
Because single product. When we have many products, in one way or other, the cash will come in or go out.
We need to say, so your question has 2 different aspects. One, should we distribute to various products, or within these products, how do we manage the cash flow? We always need to be prepared for the bad times. Some cushion should always be there to take care of it. Economy can be booming, economy can be slowing down. We need to have some cushion always in the back to manage the cash flows. In fact, when the COVID was declared, we had 150 crores of bank balance. This is what we maintain. As a policy, we feel that 3 months disbursement and commitments should always be maintained in the form of cushion. Nowadays, CC is not coming. We have, fortunately for us, being a old generation financier, we have got around 300 crores of cushion. So there is no cost to the maintenance of the funds. This also. That is how we have managed.
This is a good formula. 3 months disbursements, park it separately as a cushion. For some calamity, some rainy day, you can draw it when you want, instead of going and running behind a banker who will not give you at that time. Any youngster to ask a question to a youngster? Less than 40 age is my definition of a youngster. Yes,
good morning, everyone. I am running a small proprietorship concern. So I wanted to ask what will be the right kind of debt I can avail now, and how can I just move forward regarding this? How can I obtain a debt? What are all the options available for me?
We need to understand your capital and your business, and then there are a lot of options these days available in the market. Basically, you have institutions like Northern Arc, Vivriti Capital, who are helping you to borrow money. They allow you to connect you to NBFCs or banks. Of course, if you are having a bank connect with your own existing, if you are having a savings bank account, you can go and check with the bank. Or you can, if you have already a cash credit limit, you can check with the bank. So there are various parameters, and probably you'll require some guidance, maybe have a consultant and ask him to understand your book, understand what you want, and then make a plan and then work towards it. And we are there to help you for sure. If anything help required, you can always call me. I'll help you on, connect you with Northern Arc or Vivriti Capital is what we know. Thanks.
Please, come.
You said you are a sole proprietor. Am I right? थोड़े खड़े हो जाइए आप. So first of all, as a sole proprietor, he has no options to borrow. Section 45S, what is hanging? You cannot borrow beyond your 12 relatives. So as Deepak said, you can think of some co-lending or doing some franchisee work. For proprietors, please try to understand.
Can't you not borrow from bank?
Bank is okay, but bank leverage, how much it will come? I'm not stressing because options are very low. See, the first bottleneck is proprietorship concern. And beyond relatives, you cannot go. So before exploring other options, you must think what all is permitted to you.
What I can add to what my two predecessor speakers have spoken is, initially if you want to borrow from a bank, because you don't have a rating, so there will be some reluctance. Their reluctance has to be overcome by way of giving collateral security which gives comfort to them. And then borrow. Slowly, based on your performance, then your collateral security can keep coming down. That's one thing. Having said this, my suggestion, or maybe my other speakers, convert into an NBFC if you want to do. It's not a very difficult thing. Our suggestion would be convert into an NBFC. Your growth will be undiminished. That is where you can grow. All these things are like a palliatives. They are not permanent reliefs. You can grow to a certain extent, but in the process, keep in mind, if you really want to grow and you want to be business for a long time, you have to convert into an. There's a policy of the government and the regulator, both of them. And the regulation is going to be tough, but still there is a lot of support. If you see, 10 years before and now, when has the government recognized NBFC industry as a priority industry? We were always treated as stepchildren. And when has the government given, the regulator given hundreds of crores of rupees to NBFCs to see that there is no liquidity crunch for them? Banks used to get those support. They have given it. They are giving support and they are also trying to regulate. They say it is a public money that's being given to you. You have to be cautious. So there is a lot of stringent regulation that's going to come. We have to be prepared for that. Something is being overdone. There we will have to fight. But if the regulators don't agree, we'll have to put up with them. There is no alternative. This is how I feel.
Initially, you will find it difficult, but then you will get acclimatized to it. You will get used to this NBFC culture once you convert. That's okay. Yeah, definitely. I think you wanted to ask. Okay.
Well, good morning, everyone. I do have a point to Mr. Deepak. Being an advocate and, addressing matter relating to drafting, we generally see that the bankers have a predetermined agreement which generally could not be amended. And since we were speaking about the covenants, how do you address these matters when you have a particular clause to be amended in your favor? Are the financial institutions who are funding us extending their support to amend those clauses, or we are forced to take it up the way it is? Can you please throw some light on that?
So I guess, when you're borrowing, you will have these kind of challenges, and it depends on the relationship you have and you discuss with the lender. Depends, it's a bank, they have their own ways, NBFCs have their own ways, financial institutions have different ways. So we have to, and somewhere we'll have to give and take, Somewhere we'll have to give, somewhere they will have to take. So that's how it works. There is no, there's no proper way of putting it. And you will have to be rigid sometimes, that these are the things which I will not agree to. And if they are willing to lend, they will lend. So it is typically like when you're borrowing money, somebody charges 15%, somebody charges 14%. Now you decide I want to take only at 13%, then you will say no on 15 and 14, right? So I think similar to that is how it works. And you will have to keep understanding, keep requesting, and maybe have some parameters of other companies who are using and get some experience out of them and ask experienced people like you to help us. So I guess that's the only way out for this.
Maybe one last question, because already there are some hints that we'll have to, some body language movement saying we have to stop. But one last question and then we can stop. You are a youngster, you can ask. If you ask, you have to answer yourself, but ask.
Having heard them, debt and equity, no doubt it's a good mix. But without having experienced both, out of my theoretical experience, I feel today private equity is difficult to service than a debt. Private equity is difficult to serve than a debt. Debt comes at a cheaper rate. Private equities, because we are also investing in alternate investment funds who are equity funds. So we expect returns of 15 to 60% from a fund. So the equity manager has to fund manager has done more than that. So in my opinion, on a crude basis, any PE will not look at you less than 18%. If 18% we have to give him, what should we make to survive as a finance company? Well, in today's cutthroat margins, I think making 21% IRR is very difficult as we scale up. So having made 21%, then your expenses, then 18% to them, how do you balance between these two? Of course, growth is needed, but how do you balance? What is the fine balance so that you are more towards debt than equity? Of course, equity helps again you for tier 2 capital, all those things. Second question is, because they have got a limited time horizon, 5 to 6 years. At the end of 6th year, we have to give an exit. If we are not able to give the exit, again it becomes a problem. So how do you manage that?
Yeah, see, it is not that one is a substitute for the other. These two are complementary.
Some disturbances.
So when you are giving them an exit, you will not give the money by way of exit. You create a valuation. As your book grows and as your quality of the book is maintained, and based on your performance, the valuation goes up. It is not that they want you to pay up. It is impossible to pay up. Your valuation has to be created. Either you go for an IPO or you go for another investor who comes in and comes at a higher valuation, seeing the value in you. This is not a substitute for debt. It is always advisable to borrow as much as possible prudently within the limitations that we discussed earlier. But again, there is a certain limitation to which you can contribute. If you want to grow, then you need capital. When we are not, if we can invest, it's the best option. When you are not able to invest, you have to go for PE funds. Everybody wants a return on that. It is a business nation. So we will have to provide valuation for them and give them an exit. That's the first. Your second question is there, you want?
Same. He knows the answer. He wanted it from you.
IPO. Once you get into an IPO, that riding is not there. You will not be riding a tiger. It may be some horse.
One good thing is there are enough success stories about how this riding of tiger has been successful in several cases. So we can leverage on those stories as well. But we have to conclude.
But one thing is appreciate is the PE funds brings with them experience,
knowledge,
governance. They hold your hands. You get people who are your partners. We are benefited by them. They give you business. They give you references. They take you to the next level. क्योंकि वो साथ में बैठ जाते हैं आके. So they want to grow and they make you grow. Many times I have seen small companies learn more from PE funds than their own directors. So definitely it's good to get PEs. We are just discussing.
He is being very upfront about who is more knowledgeable, PE fellows or directors. Anyway, that's okay. I think we have to now conclude. It has been a very interesting, fact-oriented discussion about the issue about private equity, debt, and the whole range of products. There is no one-size-fits-all approach. Each one has to decide what works in his business, in his own hemisphere, in his own geography, wherever you are situated. But get the advantages of both. And if you need to grow, you have to look at this very closely and try to find out what is the right prescription for your particular business. So thank you, Mr. Prasad and Mr. Dugar. Give them a very big round of applause. And then
the right questions. Thank you very much, sir. I think our panelists have very frankly put forth their experiences in raising debt as well as equity. Thank you so much to both of you, sir. BJK sir, on one phone call, he has accepted to travel all the way here. Thank you, sir. And thank you, Deepak ji. I now call upon Mr. Jose Kuti Xavier, President, and Mr. Basil Baby, Secretary of Kerala Hire Purchase Association, to present a memento to our panelists. Thank you, sir. I would now like to introduce the speakers for our second business session on the regulatory and supervisory aspects of NBFCs. We have with us Sri Madanlalji Gundecha, a chartered accountant by qualification. He has over 4 decades experience in automobile finance, and he was the past chairman of Madras Hire Purchase Association and the South India Hire Purchase Association. He is presently co-chairman of FCA and EC member of FIHPA. With vast and rich knowledge, he is also an active angel investor. We also have with us Deepak Ji Mehta, the Vice President of FIHPA. He is the Managing Director of Apna Finance India Limited and Director of Prem Hire Purchase Limited. He has an experience in asset financing for over 26 years. He was also the past chairman of South India Hire Purchase Association. Our third panelist, Sri Anil Doshi, is a fellow member of Institute of Company Secretaries of India and is in the field of practice for over a decade. He is also a law graduate and he has completed his LLB 5 years ago. He is a company secretary in full-time practice and currently pursuing the Registered Valuers course. His area of practice is corporate compliance and has a clientele of over 160 companies and LLPs. He has some of the prestigious entities he has served as Foxconn Technologies, Easy Access Financial Services, Fuso Gloss, PS Group, etc. I request the panelists to please come on the dais, and I hand over the proceedings to our moderator, Madanlalji Gundecha. Thank you, sir.
Good morning. I would like to use Hindi, Tamil, English. I would love to talk Malayalam, I don't know, unfortunately, because many delegates are there. For the benefit of members, I'll be using the language in a combined manner. Coming to my session, I think I'm very fortunate. The ball was set rolling by Anand's session. What a proprietor cannot do and what an NBFC can do. That was amply made clear in the last session. So from there, I will pick the threads. Anyway, I picked many threads from Anand. I'll pick this also. NBFC versus unincorporated bodies. So why do you need an NBFC? We are living in a country, or now our country is progressing towards more compliances, more organized way. Today, when you see the statistics, a simple example of organization is even a small kirana store into GST net, income tax, these, that. We were listening to Chandrasekharan of Tata Sons chairman day before yesterday, Mr. Anand also was there. So there the issue came of carbon prints, and notice a new term has come, ESG, environment and social and governance. So listed companies today, about 100 listed companies are bound to report in their audit report their ESG compliances. And we were told that forthcoming public issues, whoever is good in ESGs will command a better issue prices in the coming days. Leave that apart. Chandrasekharan made one good point. He said, carbon footprints, the way India has announced in World Trade Organizations, if companies do not do that, the companies will be out of business. That's the word he used. Those companies who do not do that will be out of business, and Tata Group as a group has taken this as a responsibility. He gave many examples. So if I draw the same analogy here, if we are moving towards organized way of working, and if we don't get organized, probably the day is not far when we may also feel that we are out of business. We know the advantages of working in a small group as proprietorship partnerships, but today with other problems like you cannot borrow debts, there are certain restrictions on borrowing, so you can borrow only from a related person or so and so forth. And the greatest factor is, though the things are not very clear, but still when any case comes for usurious interest or police cases, NBFCs are looked with respect. And still many governments and even NBFC and RBI also are not clear whether an NBFC which is registered under RBI should take a local moneylender's license. We do not know clearly. Still it should be put to the test. But still we are taking a view as a financier. Whenever such situation arises, we say, I am governed by RBI, so I will not care, you go to hell. State government, we can say that. So that's the biggest advantage. Then if you want to really grow, then that is the only alternate. People who want to work with their own money, we are happy, I am doing it in a small way, it's fine. But if you want to grow, you cannot grow unless you become an NBFC. It's like, if you want to have a family, you have to marry, you have to run a house. So similarly, if you want to grow, you have to come to an NBFC. I've got 2 learned speakers with me. So I will divide this in 2 parts. To start a company, how do you start a new NBFC? Is it better to start a new NBFC or take over an existing NBFC, get it transferred to your name? What are the implications involved? Is it easy to float a new company, or it's better to take an existing company? There were days when RBI was very reluctant to give new licenses. So we had no other choice but to take some existing company and do it. But nowadays, RBI has become flexible. Many licenses are issued, he will share with me. And the speaker here, Mr. Anil Doshi, is the person who has got my NBFC newly registered. He got a new NBFC license. So he is experienced well in that. So we'll take it that way. Creating a new company, taking over an existing company. And after you have formed a company, there are certain regulations which you have to comply with. What is the cost of those regulations? I'm in a small town. I don't have sufficient consultants. I don't have good company secretaries. I don't have good chartered accountants. These can be some ground realities. But still, that cannot be a ground to not to do certain things. So we'll try to deal as we take the session forward. So we'll take into these 2 sessions. And Mr. Deepak Mehta, who is already running an NBFC, he will share his experience of compliances. Today, I think we are regulated more than we should be regulated. Reserve Bank has no other work to, but every day brings some regulation on NBFC. The morning you rise up, you see some news about NBFCs. But all these things, as Mr. TTS always says, our resilience is there. We have withstood all these 40 years of storm, and still we are strong, we are growing, and we are existing. So we have existed, we are existing, we will exist. The economy cannot run without finance, and we are going to provide the finances. With these opening remarks, I will request Mr. Anil Doshi to first present his presentation, whatever he got. First we'll take Mr. Deepak Mehta, then we'll go to Anil Doshi. Please.
Respected President of FIHPA, Shri Meghraji Lunawat, Secretary General, Shri Dineshji Kothari, Convention Chairman, Shri Rajesh Bhurat, Convention Secretary, Shri Devang Choradia, our moderator for this session, Shri Madanlal Shagundecha, and co-panelists, Shri Anilji Doshi, past presidents of FIHPA, members of affiliate associations, and other guests. A very good morning, and it's a wonderful feeling to see you all in person. It's after a very long time that we've all got an opportunity to meet and interact. The joy of meeting and being present together is different. So we've now moved away from the virtual world back to the real world. So to take this forward, I thank you, I thank FIHPA for inviting me to interact with all of you. I have been asked to cover the opportunities, challenges, solutions, and process of conversion of unincorporated bodies to incorporated bodies. That is, what are the benefits, problems, solutions, and the process for converting from proprietorship and partnership to NBFC. Before I start, I would also wish to inform all of you that our expert on this subject, Shri T.R. Achaji, our past president of FIHPA, was to deliver this talk, but due to bereavement of his father, he has not been able to be among us today. I have made an attempt to cover the maximum points on this subject, but I am not an expert like him, but yet I would try to do my best, and kindly bear with me if in case I miss out something or some of the points. To start, there are a lot of asset financiers who are yet doing business in the unincorporated module of proprietorship and partnership. But there are limitations, as as our moderator had explained, and even the previous session, Mr. Anand, Mr. V.J.K. Prasad, and Deepak had presented that there are various challenges, and how NBFC module how the NBFC module has helped them grow. So we will be looking into each of the points and trying to let us try to understand which is better and how NBFCs help in growth. A lot of us face various challenges. The ones who are doing business in the unincorporated module, the challenges that you face day in and day out is the Money Lenders Act, Usurious Interest Act, harassment of police authorities, and questions being raised in courts about the validity of such entities in law, and a very pertinent question which is being raised for ages is that under which law or under which authority these bodies are registered and who is monitoring them. The very purpose of doing asset finance business is to earn money, make profits, grow, support the ones who need financial assistance and for the financial assistance for their livelihood, and continue this cycle. The understanding among authorities about our business is so bad that I would wish to share a couple of incidents in the past. We had gone to invite the governor of Tamil Nadu for South India Hire Purchase Association's Golden Jubilee celebrations. To our utter shock, the first point which the governor had raised, that all of you are money lenders and you take a pound of flesh. It was a very tough scenario for us to explain to him that no, we are not such. Though there are unincorporated bodies, we also have incorporated bodies who are monitored by RBI, and we are the people who are delivering the last mile credit and giving the society funds to the unbankable people and the people whom banks do not lend or institutions do not lend or do not have a credit history. It was a tough time to explain to him and convince him that all of us are doing genuine business, but as I had said earlier, it raises a question. Similarly, at this same venue, about 2 years back, FIHPA had sponsored a symposium for the Supreme Court and High Court judges and advocates. The Supreme Court judges and few of the High Court judges also felt that all of you are money lenders and you're doing you're not doing genuine business. But then again, we had cleared the air, and for the benefit of our members, we had explained in detail that no, NBFCs and non-NBFCs are doing a wonderful service to the society other than earning their profits. So I'm just trying to connect it over here that non-NBFCs have too many questions to be answered, and as an NBFC, the questions are limited since we are monitored and regulated by the Reserve Bank of India. For us to grow in asset finance business, we need to increase our business. We need to raise funds constantly. Money is our raw material, money is our finished product. So ultimately, we can grow only by raising money, churning it, earning our profits, redeploying, and keep doing this. Now, what are the options to raise money? As already discussed and we've heard, for NBFCs, equity and debt, both are the options. But what is the options for unregistered bodies or the proprietorship and partnership firms? As one of our young questionnaire and the attendant in the convention had asked, RBI has also been releasing advertisements of late regularly in various print media and social media, stating that general public should not borrow or do business with non-NBFC regulated or registered bodies, which again is an impediment for non-NBFC entities. For non-NBFC entities to raise funds, the option is by infusing capital, but there is a limitation to capital infusion. Next, borrowing from banks. Again, as a non-NBFC, it is very difficult to get funds, and at times next to impossible. Banks demand at least 3x or 4x of collateral, and various other norms are prescribed where you need to have personal guarantees, though you give it in a company, but it is diluted at many places. But for individuals, that is the proprietorship and partnership firms, it's very difficult. The next option is borrowing from friends and relatives. That too has a limitation, and as unincorporated bodies, here they would have to do in accordance with the section 45S of RBI Act. The other method of raising funds is franchisee module. In this model, there is a guideline on outsourcing which restricts funding from NBFCs to non-NBFCs. In fact, RBI has been orally instructing deposit-taking NBFCs not to lend to non-NBFCs who are not registered under State Act, which again is a big challenge that every state has a different Money Lenders Act. As NBFCs, there are various and easier options to raise funds, which was also explained by in the previous session. The first option available would be raise funds from banks, which would be initially available against collaterals and high rate of interest. But as you establish your credentials, the ratio of collateral and rate of interest would start coming down. Small NBFCs have an option to raise funds from bigger NBFCs against their receivables, and this is constantly available on performance of the portfolio, where even a little bigger NBFC looks up to the smaller NBFC, and they are there to hold the finger, and slowly you can raise yourself, raise the bar, and keep growing. I even am aware that Mr. Prasad's company, they also do funding to NBFCs. In franchisee business, the endorsements are of bigger NBFCs, but in the receivable funding, the endorsements are similar. Endorsements are of smaller NBFCs, giving you the freedom of working and issuing settlements and NOCs. NBFCs also have an option to raise funds through debentures, but this involves some statutory work and go through the process of setting up trusteeship, etc. On attaining size, NBFCs have an option to raise funds from SIDBI and Mudra also. Co-lending is an option which is opening up. In this model, smaller NBFCs would fund certain percentage and banks would lend the remaining portion. Profits are also shared in a ratio and portfolio shall be managed by the NBFC only. Here, there are various models which are being explored and tried, like the first loss and loss limitation modules. NBFCs can also raise private equity and command a premium based on the workings and profitability, giving value and wealth creation option to promoters. Commercial paper and securitization, again was spoken in the previous session also, is an available module for bigger NBFCs. NBFCs can borrow up to 6 times approximately of their net owned funds, that is the capital of the company and accumulated profits. Next advantage of an NBFC is that it shields you from the Money Lenders Act and Usurious Interest Act. As there are different acts in different states for money lenders across our country, though the matter has been challenged in the Supreme Court that Money Lenders Act would apply even to NBFCs, it is not yet cleared, nor has the Supreme Court given its verdict. So as of today, NBFCs do not come under Money Lenders Act. Another advantage of an NBFC is relaxation of Section 269 ST. As per Section 269 ST, friends, all of you would be aware, if the agreement value is more than 2 lakhs, you cannot collect payments of your installments or settlements in cash. Even a single rupee cannot be collected in cash. If you do so, penalty of equal amount can be levied. But if you are an NBFC, then each installment or settlement amount up to rupees 2 lakhs can be collected in cash. Next advantage is, if you are an NBFC, you can verify the credit history of the proposed borrower. The data given gives the credit score, default levels, whether the proposed borrower is a serial defaulter, etc., before you lend. It gives an understanding of what type of customer one is going to lend and helps you decide the risk you wish to take. NBFCs need to necessarily file customer repayment and data default data. In other words, the credit history of customers with all credit information bureaus like CIBIL. If your customer is not paying you in time and if default is reported, then his credit score would be affected. As most of the bigger institutions lend by checking the CIBIL score of a lot of customers would get spoiled if they do not pay up on time. And just to maintain their score, a lot of customers come up and pay you on time. This also acts as an impediment. At times, when you report your default data to CIBIL and all other credit information bureaus, when the customer grows, or if he needs to get better credit facilities, or he needs some other benefits, or even for any other business which the borrower is in, he would have to clear his credit score, and only then he is given the business options. There was a case where we have faced that somebody had gone for a Maruti dealership. He was a defaulter with us about 10 years back, and Maruti did a CIBIL score for him, and they refused giving him a dealership. He came back, he settled us with interest, and then he got the dealership. So that again is an impediment, and which could be used effectively as an NBFC. Large NBFCs with bigger portfolios have the benefit of SARFAESI Act, which helps speedy recovery process of defaults. Next advantage is reduced income tax for NBFCs as they come under the company format. Income tax rate for individuals in the highest slab is 30% plus of surcharge and cess, which as a net rate could go as high as 42.7%. But the highest rate for a company is 30% plus surcharge and cess, And if your turnover is below 400 crores, then tax is even lower at 22%. Hence, if the income is higher from business of financing, then one can save income tax also if you are an NBFC. If you are an NBFC, you would calculate and pay your own GST, only if it is applicable to you. But if you are a non-NBFC, then GST is paid by your payer on reverse charge basis, although it may not be payable by you in actual, which at times may increase the cost for non-NBFCs. For NBFCs, RBI has spelled out the type of manpower and training for repossessing agents who are authorized for this job, but that kind of shield is not available for non-NBFCs. Now I would like to dwell upon the challenges of being an NBFC and solutions thereof. NBFCs need to calculate income on the basis of mercantile basis, but non-NBFCs can calculate their income on cash basis. This results in payment of income tax by NBFCs earlier than what non-NBFCs are paying. Yes, NBFCs are allowed to claim a provision for bad and doubtful debts up to 5% of the total income under Section 36(1)(8)(a). NBFC can also claim bad debts and reduce their income tax outflow. NBFCs need to mandatorily follow Fair Business Practices Code, which would need to do some additional work to be carried out, and such additional work like issuance of agreement in vernacular language, etc. NBFCs need to follow all guidelines and regulations of RBI and file various returns periodically. This would be explained by my co-panelist, Mr. Anil Doshi, in detail. All this involves some additional investment in the form of professional costs, which is comparatively insignificant to the advantages in the ease of doing business as NBFC. Now, we would discuss the process of forming an NBFC. The process is very lengthy and detailed one. Several documents need to be filed to suffice various requirements for the scrutiny of RBI as per their norms and process. The planning and homework before filing application is very important. One should take the help of a professional, as all the documents should be vetted, forms shall be filled in all aspects from RBI's point of view before filing. The major requirements for formation of NBFCs are: 1. Experience in banking and financial services. RBI looks at least one director with banking or financial services experience. He should have experience of credit, have money lending, or have a money lending license or kind of business in the money lending. May also be considered by RBI, as it was shared by Mr. T.R. Achaji a few days earlier. This needs to be critically examined, and each case needs to be looked into in a different way. Second, sufficient net worth and source of capital. Your net worth and source of capital for NBFC should be clear. It should not be from borrowed money. Capital requirements and enhancement from 2 crores to 10 crores of NOF should also be kept in mind, and net worth should be supported by proper evidence. Here, immovable properties are also considered in your net worth at the market value. Fair market value is considered by RBI. Non-default credit history is the next point. The credit history of all the promoters should be clean and should be of a non-defaulter. Any kind of issue in your CIBIL score, or any legal entanglement, or any revenue issues, or any cases pending, RBI is very hesitant and they reject the license application. Non-violation of Section 45S. RBI views 45S very seriously. Any violations of 45S would not be considered for giving the NBFC license. Definition of a relative in Section 45S should be fully understood. For example, father-in-law is not a relative under Section 45S of the RBI Act. The next is no criminal cases or violation of major laws. There should not be any criminal cases against any director or shareholder, and the director or shareholder should not have violated any revenue regulations. Hence, the decision who would be a director or who should be a shareholder should also be taken very carefully. You would need to have a bank fixed deposit of rupees 2 crores. From the date of application to the date of license is received, the tenure could be for 4 to 6 months. This may be increased to 10 crores with effect from 1st October 2022. The process of application varies in each case based on their credentials. From what I have heard from a few consultants, Achaji and many other peers of the industry, I am trying to list out a few reasons for which registration of NBFCs have been rejected. Lack of experience is one of the cause. Violation of Section 45S of RBI Act, net worth not being there and insufficient for scaling up of business. Memorandum and articles of association were not drafted, keeping in mind with the RBI's guidelines. Irrelevant papers being attached, which creates irritation of RBI officials as they need to review and scrutinize documents within a given time period, and it's a laborious job for them, so they try to push the buck back to you. If the documents are irrelevant, they do not want to go into it and try to segregate. If properties are not properly valued, wrong formats are attached. Next, shareholding of directors with experience is not provided. People tend to bring in a director with experience, but he is not given any shareholding or they don't show him to be a shareholder, then the application is being rejected. Company is not incorporated with business code other than 65, code 65. Fair practice code resolution is not drafted properly. Format of bank letters are not proper. Online and offline forms are not filled properly. Net worth certificate is not supported by evidence. Name and address mismatch in Aadhaar, PIN, DIN and PAN, which is a very common problem among a lot of people. You would have an initial in your name in your Aadhaar or in your PAN, but your name in the DIN and your PAN would be separate. So that again is a problem where applications get rejected. Various required declarations are not filed. Website of the company should be formed before filing an application with RBI. But many people do a mistake. They put in unnecessary details and also share a detail in it that they've been doing finance business, they've been doing so many things, which is again taken into a negative aspect and RBI rejects the application. Group concern details and activities of NBFC are shared without obtaining NBFC registration on the website. I would like to also add that once an application is rejected by RBI, all the applicant directors may not be able to get a registration for their lifetime. RBI has a negative list where they maintain that list and it is shared across the country, all over India. As I sum up the discussion, the advantages of being NBFCs and being an NBFC outweighs a non-NBFC business model, while we compare the risks, challenges, solutions and advantages. NBFC format again gives you and your business a perpetuity for the business which you have built with all your passion and hard work. NBFCs give you more room to bring in professional management. You can attract the best of the talent and bring in the best of the employees as an NBFC. On achieving size and efficiency in working, NBFCs can also get converted into small finance banks, which we have seen a few of our peers like Equitas, etc., have got converted to small finance banks. Other benefits as an NBFC is to increase the valuation of the business, and you could sell the business in part or by equity dilution in full for higher valuation, and you can make your money. The plan of selling business in part or full is possible again in both the modules. As a non-NBFC, you can sell it in full, but as an NBFC, you can have part dilution or you can sell the business in full. Business sale is more reliable and easier if you have an NBFC module because the due diligence and understanding is easier. It is more transparent. As an NBFC, even a small NBFC gets a level playing field with the bigger NBFCs, and there is a wide scope for growth. Earlier, friends, I would like to share that earlier in asset financing business, the earnings were calculated on IRR on every contract and rupee invested, and major portion of the portfolio would earn the contracted IRR or more. We would probably, when we were investing at 24% IRR, or earlier days even 30% IRR, or 21% IRR, most of the contracts would earn us that IRR, or even additional earnings would be there because of some default or here and there. And the assets which we were funding were not depreciating this fast. So even by repossession, you were able to get your money invested and earn a good IRR. But now, as the business has gone through various cycles of churning, one cannot earn the contracted IRR and profit in all contracts. This is an era where it is an overall profit earned that is looked into. So we would all have, or you would have to change your mindset, and to be a relevant player in the volume game, you would have to be willing to take calculated risks and be content with the overall profit earned in money terms on leverage portfolio than IRR terms. So there is a big shift from what was being done earlier and what is being done today. Many non-NBFC businessmen may not be able to form an NBFC for various reasons. And here is the time for our industry and FIHPA to take an active role of merging the synergies of unincorporated bodies and take them on board with NBFCs which are wanting to expand. While non-NBFCs can bring in value addition to business, they have a niche area of operations, they have a customer base, and also could be contributing to robust management. So, with this, I hope I have explained the benefits of operating as an NBFC and the formation process and the rejections which RBI does. So I request all our non-NBFC members to explore the possibility of moving to the NBFC module. I remember what Mr. Prasad had told us a few days back. What he was told by Mr. Raman from Sundaram Finance. He was told that convert to an NBFC. If you have a problem, if you don't succeed and if you fail, come back to me, I will show you the path. And he had promised us, Mr. Prasad, in a talk a few days back, that convert yourself to NBFCs. If you have a problem and you face any issues, I am there to support you. You can come back to me. So here, all our industry peers are there to help us. Please look into it. Try to take advantage of this scenario as RBI is giving NBFC licenses at a good speed if all documents are submitted in time and quickly. So please think about it, ponder over it, and move ahead. Thank you.
So Mr. Prasad is here. I'll request him to stand up for a moment. Any problem, come to Prasad ji. We thank him for being here within a fortnight. Before a fortnight he was here. His daughter also was with him. She explained beautifully how technology can be leveraged. So I thank Deepak Mehta. He has given a very loud and clear message. Apart from this, one important thing which I forgot to mention both of us is, there are certain, earlier we had problem with central government itself when they were bringing the new Motor Vehicles Act. In that act, they were thinking of removing us from even making endorsements in our favor. So Mr. Acha, me, Dineshji, Deepak sir, 2-3 times we went to Delhi. Many friends sitting here were with us. We had 3 meetings with Gadkari ji, then we went to Transport Minister. By very great difficulty, we were able to take out the word NBFC from there. Thank God the act is still hanging. But I was told now by Acha ji that Chhattisgarh is a state where unincorporated bodies are not permitted to make HP endorsements. अगर आप NBFC नहीं हो, तो छत्तीसगढ़ में आपका endorsement नहीं होता है. राजस्थान गवर्नमेंट ने यही ट्राई की थी. Immediately they went to the court. I think they got the stay, so they escaped. These situations are very tricky and dicey, and it's always hanging. To get out of this is better. जब करना ही है तो उस रूप में करो जो रूप में आपको accept होगा. One thing is we have to decide whether we want to be in this business or not. If we have to be in this business, then I think the day is not far. At least all of you from this hall, when you get out in the evening, make one determination in your mind that we grow or not grow, we become 100 crores or 500 crores, even to work at 20, 30 crores comfortably in future, the only existence possible entity is NBFC. That message even I want to give. We will take many things during the course of our deliberations here. उसके काफ़ी तकलीफें दूसरी भी है, but in spite of all those things, एक परिवार चलाना है, एक समाज में रहना तो मुश्किल तो ही है, लेकिन समाज में भी रहना है, परिवार को भी चलाना. That is the analogy I can draw. And so Mr. Deepak has brought you to the level of company बना लेते हैं, and he has given a very clear message that no, RBI is very flexible. RBI is liberally issuing licenses. So this is an opportunity we can seize. But having formed a company, what are the difficulties we are facing in compliances? That Mr. Anil Doshi is a learned company secretary and a lawyer. He will explain, then we'll take the session for practical discussions. Doshi sir cover कर लिया बात. In compliance, even that 2 crores to 10 crores NOF, RBI has increased our NOF to 10 crores. For existing companies, they are given some time frame within which we can reach that. But for a new company to apply for a license, today it's 2 crores. From October onwards, even if you apply for a new company, you'll have to make 10 crores. But I think he had a different opinion, Mr. Anil Doshi, so I want to hear him also. His words are very comforting, but to what extent he can convince us that we are out of it, let us see. Mr. Anil Doshi, I present.
Well, good morning, everyone. We thank you for giving us an opportunity to speak here today. I may or may not be capable enough to address such an experienced industrial, people who have been into this field since decades. Probably my experience itself is beyond that. So, considering whatever Mr. Deepak ji has enlightened at this minute, I have a very few points left to say here or guide or throw some light to people here which would help them to, run the company in an efficient way without seeing much of the problems from the RBI's end. Before I take it forward with what are the proposed amendments which is going to take forward from, I think, 1st of October 2022. There is something called a scale-based regulations, wherein the most important thing all over, the legislations the country is looking for is scale-based. We would not be forced, or burdened with enormous compliances till the time your exposure to the public money or outsiders are limited. So, coming directly to the point, there is something called as scale-based regulations which has come during October 2021 by RBI, and giving a guidance of what kind of categories of NBFCs would be there, what are the additional restrictions which are being levied. So basically, there are 3 kinds of NBFCs which would be categorized, or rather 4 categories: a base layer, a middle layer, a upper layer, and a top layer. So giving a crisp of how these things work, any entity with an asset size of 1,000 crore or less would probably be categorized into base layer. And there are certain relaxations by RBI as, the detailed compliances need not be looked into. However, for an entity which has asset size of more than 1,000 crore would either be categorized into a middle layer or an upper layer, where RBI's interventions, the filings, the reportings and all would be higher than a regular NBFC companies. Okay. For time being, as per the notification, RBI has explicitly stated that the top layer would be kept empty and they would not be categorizing entities unless it is found to be systematically risky. what would be the formula to derive and categorize a company as systematically risky would be known only when we move forward. Few of the major restrictions, or rather, as Mr. Madan Lalji has said, there is a small difference of opinion, what I hold right now with net owned fund. At this minute, whenever an application for NBFC is being filed, the net owned fund, the capital criteria is supposed to be kept at 2 crore by way of an FD until the license are permitted. However, the new requirement of 10 crore of net worth seems to be applicable only for an ICC, microfinance institution, or factors. So basically, whenever an application is being applied on or after 22nd of October under these category of companies, would be required to deposit a sum of 10 crore by way of an FD, and then the license could probably become permitted if the documents are found to be in order. There is also a provision given under the same regulation stating that NBFCs falling under P2P, accounts aggregator, and regular NBFC without any deposit taking activities would continue to be at 2 crore net worth. Probably going forward, we would be having a little more clarity on the same. We are of the opinion that NBFC with a smaller scale of business, or what they said as a base layer NBFC, would continue to be at 2 crore. We will just wait probably for the RBI's clarification further on this. There are various reservations or restrictions. I would first prefer to cover on the base layer where majority of us fall until it's again like Sriram, Sundaram, TVS, and so. Under the scale-based regulations, there are 2-3 criteria which needs to be kept in mind when it comes to operations. The Reserve Bank of India has clearly cited any matters relating to related parties has to be elaborated in detail with a lot of disclosures. This is one of the area to be focused on, where any transactions are amongst the directors or relative of directors, or any entity in which the directors are connected. It has to be a well-planned transaction and could not happen just because it is an arm's length basis. So any transaction proposed would probably require a prior consultation with your accountant, company secretaries, or advocate, and taking that forward. There have been certain additional disclosure requirements with regard to the funding, the charges, and other things, which is quite procedural considering the lack of time. I would prefer not to comment on that at this minute. For the middle layer and upper layer companies, there have been a mandatory requirement of capital adequacy ratio in order to commensurate with the risk attached to the business. It would be probably a formula driven, where the percentage of NPA, the capital, and your debt would be synchronized, and an effective formula would probably be formulated and shooted by RBI. There are various notifications awaited for many of these activities from RBI, which has been explicitly stated. Proper clarity would definitely reach us on or before October, when it is implemented in full-fledged, is what we believe at this minute. One of the very essential point till now, which was being practiced but was not under the act or in black and white, is an experience of the board. At this minute, while preparing an application, filing it before RBI for obtaining license, it definitely asks for what is the board's experience, who is going to manage, what is the protocol, various things. But this is the first time, we believe, where RBI has explicitly brought into recognition under its rules, stating that for a middle layer or an upper layer, there has to be a board member with an experience under the finance industry or should be an ex-banker. This is one of the very essential criteria which would be brought into force from October 2022. It also states that during the peak time when the NBFC touches the upper layer limit, it would not be recategorized into a middle layer or base layer, even though it does not touches the criteria given there. And this would continue for a period of 5 years until RBI is of the opinion that it should be. There are lots of challenges as whether RBI would be taking it voluntarily or based upon an application to reduce the regulatory requirements is something we need to wait for clarity and the subsequent rules pertaining to the same. This was more specifically relating to the scale-based regulations, which is more relating to the quantum of business we are into, the exposure of public money or public funds. Let me also highlight a small point on public funds. It is not just a borrowing from public. A banker's loan also is categorized as a public funds. To my limited experience, we have observed as explicit reservation on public funds when it comes to core investment companies. However, does it really matter for an NBFC is something we need to go forward. But the public fund criteria does not involve the public at large, but even exposure from the bankers would be categorized as a public fund. Various extra regulations and the compliances might be applicable if we have a banking exposures. Well, this is in brief about the scale-based regulations. There is another challenges or probably hurdle which has to be properly looked into is something relating to the auditors. As per the latest norms, an auditor cannot continue to be the auditor until for a maximum period of 3 years. It means all the industrialists sitting here into the NBFC market would have to frequently change their auditors. The regulation is so beautifully drafted. It further goes in line with the scale-based regulation, wherein to our surprise, it has been stated that the auditor's appointment henceforth would be by way of a prior approval, wherein the NBFC companies would be required to file an application of a minimum 2 audit firms. It is not even the individuals who can carry on audit henceforth. It is audit firms who would be taking up. The names of the audit firms has to be given in a preference wise. They need a requisite number of partners. The partners should be full-time. Their details relating to other businesses, where are they working on a part-time, what are the other entities they are engaged into, whether the qualified professional holds a CISA qualification or a ISA qualification. There are lots and lots of conditions which would probably pose a threat on the industry to find a applicable auditor which could take our audit. It should give a comfort to the organization, bring value and guide it in a proper way. If we are a company wherein our auditors have been associated with us since a very long time, this is the time we need to change it. How there are many things on practicality, as you know, through an understanding, using their associates, many things have been taken up, but all points as well have been curtailed to a great extent. So people sitting here and who have an association with the statutory auditors for a period of more than 3 years are supposed to look into this aspect proactively so that we don't default on any of these matters. I was also informed in brief, of course, everyone here would be knowing it, but for the sake of clarity, there are certain activities what I am requested to be thrown on relating to the takeover, the change in the management and other aspects. So basically, RBI does not allow us to transfer the shares even though we are a private limited company, free to transfer. As per the RBI Act 1934, it is stated that any change in the shareholding pattern beyond 26% until it is by way of a rights issue or there is one more reservation, capital reduction or so, it requires a prior approval from RBI. Likewise, any change in the directorship beyond a 33% would also require an prior approval from RBI, and then that could probably be implemented. The process of approval generally takes around 2 to 4 months, provided things are in order. The same conditions like your CIBIL score, your experience, your net worth, how are you going to contribute to the organization, and the manner of taking things forward. During filing our applications, there have been cases where RBI have asked for the future projections, and we are also supposed to substantiate as how are we going to meet the projections given here. It cannot be superfluous, but has to be backed with certain evidences as what is the reason for giving those numbers there. Apart from that, the last point probably during this session would be on XBRL filings. It's nothing major, but the ground reality shows a lot of working from the professionals and or the accounting team who is taking care of these things. There's something called as XBRL filing, which is Extensive Business Reporting Language, wherein RBI mandates us to give a hell lot of disclosures. Bifurcations are made in thousands and thousands, and it becomes really cumbersome for NBFC many a times if their business is spread across, different classes of assets, and so the XBRL filings are either on monthly basis, quarterly basis, or annually basis. It all depends upon the category of business we are engaged into. Asset size of more than 1,000 crore would require monthly filing of certain XBRL forms validated, and as per our experience, where there were a deviation in the XBRL filing pertaining to the percentage what they have pre-prepared, the filings which were made were sent us back to be rectified, and then that was being approved. So I would like to rest my words here until there are some queries. Considering the scale-based regulations and the auditor-related matters, we believe it's a high time for NBFCs to look into these aspects, pre-plan, and ensure that there are no violations or there's no last-minute rush towards the same. So I would like to rest my words here, thanking everyone here to giving me an opportunity to present. Thank you.
दीपक सर said one word when he was addressing कि जब गवर्नर को बुलाने गए तो गवर्नर ने बोला तुम लोग सब ब्लड सकर्स हो क्या ना करके. But friends, believe me, I am very proud that we are in this business. No big industrial house in India today is without an NBFC. Take Tata's, Birla's, anybody. All will agree, all have got an NBFC in their stable of their companies. Every big industrial house wants to come in this finance business. Consumer finance is a very big basket where the entire NBFC industry को भी इतना पैसा नहीं लगा सकते हैं. Take for example a small example of Bajaj Finance. Or I was told they are coming out with a proposal where they are going to give loans up to 15,000 without any collateral, just on personal score. Fintech companies who have come in large numbers today. So every fintech company doesn't have its own NBFC captively. So they all depend on you. If you have got money to lend, you can tie up with a fintech company. Various new types of products are coming. Out of my experience in angel investment, I'll tell you, fintech companies have come with NBF companies. They are financing the school fees and college fees for the students. Take for example a school of 3,000 students. they are paying the fees in advance. They have got collaboration with the school. If the parent doesn't pay the fees, the student is not permitted to sit in the examination. Money is secured. The boy will not leave the school. Parents cannot afford to take the boy or the girl or the student out. Money is safe. They are giving some percentage to the school for managing that. So these types of products where you don't have to even think of a single paisa bad debt because these monies will never go waste. MFIs, it's a different ball game, but they are also able to recover from blue collar jobs. So these are the areas. But I was told recently by a very renowned person and who is a person whose word can be taken because he's on the board of RBI. He said that in the last board meetings, Nirmala Sitharaman was present in the board meeting and she gave a clear message to the RBI saying that whoever is not taking public deposits, don't regulate them highly. Leave them, let them work. They have got their money, they are working. Where are you bothered? And India is a country where banks cannot fulfill the needs. NBFCs have to exist. If this message is something which can be taken seriously, I think the day is not far when we will be said that below 1,000 crores companies, no regulations, just file 2 or 3 returns, matter ends. But once you become an NBFC, be prepared. Every second there will be a mail in your mailbox asking something. So coming to the question answer and practical session, I'll start with Anil sir, your experience. Is it good to take over a company or to form a new company in today's scenario because RBI is very flexible in giving licenses? So comparatively what is easy? Because again, when you go for a new license, as you said, profile of directors, projections, information to be given. Of course, that also is to be given in a transfer of management also. What is the relative advantage, disadvantage? Can you throw some light? Because taking a company, again, you have to pay 20, 30 lakhs to the seller. Then again, 10, 15 lakhs for your transfer and all. Cost, forget. But if my taking over is easier, then I will prefer that. Otherwise, I'll go on a clean slate, which is a better option in this time.
This answer would be backed with a lot of disclaimer. However, keeping it short, coming directly to the point, a takeover of NBFC is really feasible immaterial of whatever is the premium attached to it, provided all the compliances relating to the past are up to date and have been done within the time limits prescribed under the Act. Very recently, we have come across one particular case wherein an application has been filed before the RBI for takeover, but it was unfortunate that the company has missed out certain returns, like your XBRL returns or the Cosmos filing, what we call it as, due to which the profile of the directors were quite strong, belonging to ultra-high net worth individuals, a good profile with a good experience, but unfortunately their application was denied because the company's compliances were not in order. Secondly, if there are any kind of litigation which comes into picture, immaterial of whether we are responsible or not, the litigation would be first filed against the current directors. We need to break our head, go before the courts, justify that it was not during my tenure and come out due to the limitations. But it creates a pain. So a general advice here would be, until the company is known to us, we have done a thorough due diligence to find out that to the extent we can, things are in order, in compliances. It is never suggested to go for a takeover. However, the pain here when it comes to incorporating an NBFC is a waiting period of around 6 months approximately, blocking of a substantial fund into the bank account by way of an FD, and once again in a threat of application being rejected because RBI has the complete power to deny. In one of my cases known to me, an application was rejected though there were no bank borrowings, or rather the directors have plenty of capital in substantiated with auditor certificates or so. The RBI rejected the application stating that the RBI is not convinced of protection of the public funds. So we were really surprised to note that when there is no outside borrowings involved in the same, how can RBI be taking this as a call? But however, the client decided to make use of the company in other manner. So the particular application was dropped. It was a fit and proper ground to go for an appeal and take it forward. But we have to keep in mind, if we feel that the promoter's background, the experience are not sufficient enough to justify RBI, a takeover is an opt thing because an entity is already registered. Definitely when the agreements are being drafted, in practice it is in a staggered way. As and when the stage is complete, the monies are being released. So it is one call. It has both the pros and cons attached to it. We have to take it forward. Until it's a known NBFC, trustworthy people, takeover would not be suggested, is what we suggest to our clients.
So nowadays, because RBI is very flexible, it's better that you apply for a new license and get it rather than, because one is you have to see the due diligence, the old companies, what it has gone through. And not to name, but we are talking friendly way. So most of the companies available are from Calcutta. So you have to take High Court permission to change the corporate office, registered office, all these things are involved. It was a compulsion about 3-4 years back when RBI was not giving license at all. But now RBI is giving. अभी दो सिचुएशन अच्छे हैं. RBI दिल खोल के लाइसेंस दे रही है और with my experience of last 10 years with investment bankers, 10 साल के पहले कोई PE fund या VC fund were not looking with respect on NBFCs. But today if you talk to any investment banker, he says my first priority is NBFC. तो आपको प्राइवेट इक्विटी इतनी मिलने लगी है आजकल कि दे लुक एट यू विथ रिस्पेक्ट. तो दिस आर द टू थिंग्स जो हमें प्रॉम्प्ट करती है कि व्हाई नॉट गेट इनटू दैट मेन स्ट्रीम वेयर वी कैन वर्क लाइक दिस. Then the next difficulty is NPA norms. But I think NPA you have no escape, or as rightly pointed out by Anilji, if you have even a single piece of bank loan, it's a public money. You don't take deposits, you don't take any other debt. But if you have got a bank loan, whatever amount, it's a public fund. So you have to submit to NPA. Luckily, RBI has given us time till October for 180 days. But I'm sure the way the other person told me about the non-regulations or diluted regulations, this 180 days is going to stay for us, for asset-based finance on loans which are hypothecations. So we can say as relief, it's going to come. If at all it's not good, and I think the government in its wisdom should do that. India is a country where you cannot expect 90 days for commercial loans, MSE loans, SME loans, or truck operators, commercial vehicles. I think this will get into the heads of the government and we may expect some relief. Coming to regulatory side, I would like to again, they will supplement me. इतना कोई ज़्यादा एवढं पेरसा उन्नो इला पन्ना मुड़िया द compliance ऐसा कुछ नहीं है. Very simple compliances for type 2 non-deposit taking companies. There are periodical returns which have to file. और उसको and मेरे हिसाब से for such small companies, the additional cost of compliances, all these things will not go beyond 2 lakhs per annum. Anilji has to correct me on this.
Well, the cost of compliance is something, it depends upon professional to professionals, their commitment, the comfort, what they are giving to, in normal course, the scale of operations when the NBFC has higher, they do have their in-house, either qualified, semi-qualified chartered accountant to take care of regular compliances or so. And if there is a proper support from the team in a pre-designed manner, your cost of compliances for this RBI regulatory aspect should not be crossing 1.5 or 2 lakhs. Even that is on many times on the upper side. There have been cases where the client takes care of all the compliances in-house, and even after secretarial audit, we have been charging them a sum of just 1.25 lakhs or so. It depends upon the activity and the efforts, the total quantum of work involved, and accordingly it can be taken forward.
No. I think one very important aspect which has come up is in a regulated NBFC situation, how do you deal with cost of compliance? One solution which is going to emerge as we go along is, see, how did IT industry look at shared services? A lot of companies use shared services for their information technology. Today for compliance, you'll have a system by which there'll be a few people sitting in one roof offering compliance services for the entire 12,000 NBFCs, whatever I'm just saying.
Because you can reap the economies of large-scale operation. Each company need not employ somebody for compliance. There will be a roof on top of the compliance umbrella where they will do the compliance for the entire NBFC population for a particular fee, which will be much lower than if you do it on a case-by-case basis.
Thank you, Anand. And I would like to understand the benefit of these NBFCs who only can be the members of credit information companies like CIBIL, CRIF, whatever it is. Credit rating customer का जो है वो अपने लोन देने के लिए तो अच्छा है कि भी उसके बेसिस पे अपन लोन देते हैं, we are able to assess his potential or his financial strength. But the second fear which the customer runs is, any customer has got a minimum of consumer loan for a fridge or TV something. He would have taken a small cash credit loan from a bank. So no customer wants to spoil his credit score. So that is an arm twisting available to an NBFC which is not available to other unincorporated bodies. Of course, we have been fighting with Reserve Bank and credit information companies also for this, but we don't know what's the reason. RBI doesn't want. Mr. Deepak will supplement me. So we are not able to understand the mind of RBI why they don't want unincorporated bodies to submit their credit data and the advantages. And as he rightly mentioned, one advantage, his customer could not go for a dealership of Maruti because his loan was not cleared. So I have seen after getting into this NBFC with my own customers, many customers come running to us. Sir, I want to pay 2 installments. You take out the score. Boss, I can do only in the first week of the next month. Immediately we give a letter saying that he has paid these installments. As on date, that is 0. So these are the situations which is prompting a customer to maintain his credit score. That is the advantage. I will ask Mr. Deepak Mehta to supplement on this.
Thank you, Madan Lal sir. One of your question is why non-NBFCs are not permitted to share data on the credit bureaus. The biggest problem is RBI, when we met them in person, they felt that non-NBFCs are not transparent and the data is not reliable. They do not undergo statutory audits, which was again the case for 269 ST. Madan Lal sir, Achaji and myself had gone to Delhi. We had met the commissioner where he said that NBFCs are under audit. They've got statutory audits, but non-NBFCs do not undergo statutory audits. Where do you report? Where is your data? And they are not transparent. So he was not willing to take up. In fact, we were able to convince him and he was going to clear the circular that even non-NBFCs will get advantage of what is given to NBFCs under 269 ST. Because of this one reason, non-transparency, it was retained. Similarly, the challenges which NBFCs are facing in filing their returns to these credit bureaus is everybody has got a different format, which is matter of time, where RBI wants us to give our data to all these credit bureaus, but all of them have got a different way of getting data and uploading in their system. So that is an added load which we have been representing to RBI to bring it on a scale where one data can be uploaded for all the credit bureaus.
We have one question on Zoom that I'll just put up, sir, before you end. It's a specific question to Anilji asking the time period of empanelment of auditor is 3 years, as you mentioned. Is it for an external or internal auditor is the question, if you can just...
To the extent I understand, it is right now only for the statutory audit and not for the internal audit. Okay. However, there are certain cooling period like 6 years non-association of the same auditor or their partners with the same NBFC, and there have been a precondition that in case an statutory audit is proposed to be given to an auditor, he should not be serving the NBFC for those categories which is mentioned under section 144 of Companies Act, like your bookkeeping and consultation, the GST compliances or so. They have levied a cooling period for the same as well. For a period of 1 year, they cannot get the statutory audit in those cases. I hope that addresses the matter.
In continuation to what Mr. Anil said, even if an auditor by mistake has done some calculation mistakes or anything, he will not be eligible to be appointed by any other NBFC. That is very clear from our side.
Rather, one of the another challenges which has been recently noted was a single auditor or an auditor firm, what we call it as, would not be allowed to take more than 8 audits for NBFCs, which means there is a possibility that the experienced auditors would focus on the large companies available in their portfolio than to looking for a regular or a lower scale business NBFCs. So the cap on number of audits from the auditor's part is restricted to 8 NBFC. This also goes for the public sector banks and UCB kind of entities. But an auditor firm can take up only up to 8 NBFCs audits as per the prevailing rule. And I also believe that this condition is applicable for the financial year 2021-22. And there has been a citation on this particular matter stating that appointment of auditors and other thing has to be completed on or before June of this year. I'm not very clear about this aspect since it is more of procedural. My reservation here was just to ensure light is thrown on the regulatory front. So even that part needs to be focused on. Okay.
Yeah, one more aspect which we should all be careful of is you cannot have the same auditor for your personal files and for the company. RBI is very clear that the auditor should be a separate entity or a person, individual. The same auditor cannot be handling your personal returns and the company's audit, etc.
So thank the panelists, and I end this session, conclude this session only with 2 remarks. One for the members is, it's high time, start thinking, get into NBFCs, otherwise it will be difficult to carry on the business, and at one time we may feel that we are not able to continue or exist also. And one for the association, as Mr. Anilji has pointed out, that when the Reserve Bank wants us to give information to 4 companies, at least we should be permitted to give in one form. Let the 4 companies take the data from there. Why should I give 4 different formats to 4 different people?
I believe it is a single data format, Madan. It's a single data format from hence.
There are issues in the uploading, not yet fully compliant.
Uploading.
There are still it's not clearly portable, so we should try to achieve that by putting on the RBI as well as the 4 CICs has to come with a common format. Thank you.
Thank you to the panelists.
Let me also bring a positive news here. Based on my limited experience, when we see a lot of government organizations, the legislation coming into picture, during the last decade, it has been noted that the government is proactive, is easily reachable. The representations given are at least considered. And we are very sure to streamline the process, avoid duplication all across the industries. Many of the government institutions have taken this call to synchronize various things, avoid duplications. So I think the day is not far, even if at this minute it is ported. I'm not very sure about the practical aspect on how the credit rating agencies matter are being ported for, but this would definitely be synchronized, and we forecast that there would be automation tools like under a single software porting a data, it would automatically be reaching with all the 4 institutions also. But we need to wait for that for a little while until RBI comes out. So it's not that it is just cumbersome. The government is working to streamline and reduce the burden of procedural aspects. This is what I would like to say here.
Thank you.
Time is up. I want to conclude, but one thing which was left over, I'll take in my open house session. That was Sarsai.
I request the panelists to be on the stage. I request Rajeshji Singhvi, President of MAHA, and Somchandji Nahar, past President of MAHA, to present a memento to the speakers, please. Next business session. We have with us Mr. Pankala Raju M, who's a Chief Software Officer and heads the FinTech division at Novak Technology Solutions. He has played a key role in the design and development of various enterprise-wide software solutions, including Ziva, the cloud lending platform for financial service organizations. He has over 20 years of experience in this field. Thank you, sir, for agreeing to address this forum. Without much ado, sir, please.
Thank you. Thank you for the introduction. Good afternoon, all. First of all, I'd like to thank you, FIHPA, for inviting on behalf of Novak Technology Solutions. So, little nervous before talking to many industrial veterans here. So, morning onwards, lot of knowledge I got before sessions. So, being in FinTech, some of the things we know, most of the years into technology, some of the things we forgot, but those things and all I could be able to recollect and got lot of knowledge. And normally when we are sitting with a knowledgeable person along with him, obviously that positive rays will come on us also. Now I think in this, lot of energy is going in this hall from morning onwards, especially from the first row. Thank you, sirs. Thank you very much. So technology. Comes to technology in NBFCs or any industry, technology definitely plays a major role, but not definitely like business. Technology forums will tell that technology is first, but not so. Other things are important than technology. Now, coming to back days in 90s, example, where computerization is started, we used to do the transactions manually, then we used to record in the system for future reference purpose. So it used to happen like that. Most of the times, advances being done and then they enter the system. Or our collection executives go with the receipt book, raise the receipt manually and come back to branch, hand over the cash, hand over the manual receipt, enter in system. It used to happen like that. But now things has changed. So later years we have given, they come up with mobile apps. So executives are going with mobile app, they'll raise the receipt. Immediately the receipt amount will come in the SOA of the customer. Immediately customer can see SOA. And even thereafter, they need not come to branch because if they're in field more time, they spend time more in field, they can do more business. That is the idea. All these back of activities, let technology take care. So once collection is done, we have given options like they can go to any nearest bank, they can remit the cash, whatever they are carrying, because cash carrying is always a risk. So go back bank to bank and remit the cash with challan so that immediately reflect in the back office, like this particular executive raised these receipts and they remitted into bank. So reconciliation is done. So technology helps there on the back office activities more and more. And come to MIS. Before sessions also we saw MIS is very important. Earlier days MIS used to see mostly on the monthly ones because data has to consolidate, come one place, get the entire thing and do. Branch level you may see MIS immediately, but at a central place you want to see MIS, it used to take more time. Then later stages, we come to 1 day delay. So MIS is today business is closer, tomorrow we can see MIS. But now expectation is online. So the respective business heads wants to see MIS in mobile. So because that helps them to focus more and more MIS during the month ends. Say when targets are not reaching, I can see data and follow up with respect to people to increase the business. That way it is helping now. So MIS is done and compliance and all, see if you see many companies now and again mandatory also to close the books within a short period. When quarter is ending, I think next 1 or 2 weeks board meeting should happen, we should file returns, all those things are possible. When back office activities, many are automated through technology, but it's keep happening still. So many companies are doing that, keep happening that automation. And then now coming to your business or the collections, how it is happening in the online. So earlier, we used to collect the documents, say be it a KYC document or any documents we used to collect, and enter the data accordingly and see. Now there is a problem like whether document is proper or not. Is it manipulated or anything proper or not? Now things has changed. So we can able to access the data directly from the source through APIs. Say example, PAN card. So PAN card is proper or not, we can directly through API call, we'll check with NSDL and take the PAN number and who is the name, what is available in the PAN card. Even some places we are getting address, date of birth, father name, these data also can get from the NSDL. After that comes Aadhaar. Now there is some restrictions in Aadhaar, but it is having now earlier we used to allow Aadhaar, now we are having the OKYC, they say, offline KYC. So customer with the customer consent, it means OTP will go to the customer has to share the OTP with us. Once we enter the OTP, we can pull the data from Aadhaar and fill our application. So directly we are taking data. So no question of entering the data we are avoiding the entering the data, and also it gives the quality of the data or the accuracy of the data is improved. Then like this many things. Now even you say like example wherever we are taking bank statement, more of a unsecured business, we may be taking more of a income based we are funding. Wherever asset we are seeing equal fund also, it means asset values also. So bank statement also there is a lot of options like, he need not give the bank statement directly. If you put his credentials, we can able to extract the bank statement and validate. Even after taking bank statement also, we used to analyze what is the balance every weekly or every monthly, quarterly, how much balance he is maintaining, all that. But everything can be automated and extract a summary kind of data, how balance is maintained. So you can put business rules around that. If at all the customer is maintaining this much bank balance, I can give this much of loan. That can be arrived based on that. So like this, in disbursement, even collections also if you see now, like NACH, important thing. Earlier PDCs we used to take, now not much PDCs. Everybody moving to NACH, even e-NACH. NACH also is taking time because we are filling the form, we'll have to take that image, send to bank has to analyze and come back the UTR number and UMR number. So now e-NACH is directly, the customer can electronically do through net banking or debit card, he can confirm the e-NACH so that immediately we are getting response whether it is approved or not. Even now they introduce like through UPI also we can do e-NACH. One is the standard based e-NACH, then collections. Collection is concerned like UPI we are having now, through UPI they can pay, and even we are having the biller like Bharat Bill Payment Service. We can become a biller so that customer can pay from any UPI app, the collections can be paid. So these are the advantages we are having. And collections and regulatory also we have done. Then now if you see the one more main emerging in that digital or technologies now, mostly after pandemic. Now earlier days, how we are automating our process, how we can easy make it the things, how we can do. Now there is expectation from customers. So they want you, contact you through digital. They don't want come to branch or they don't want somebody goes to his location. They want to do everything electronically. That is the expectation today. Because this is mainly through pandemic can be or the technological evolution. Say example, now we will take food delivery apps. Earlier we don't have that. So food delivery apps, the experience we see in that apps. So once I book the food, I can track completely where it is there, person, whether he went or not, whether the delivery agent went there or the food is cooked or not, food is what. Even you can contact the hotel and give instructions about food, something you want. And when the delivery is coming to you, and even if you are living in a gated community, even you have apps, whether the delivery agent come to your gate or not, and based on that also you can give instructions. So one is all these emerging, and this pandemic make it a mandatory those days. Even the government want to regulate who has to come out on the pandemic time. They could able to say that all these delivery agents can come. If that is not there, the making hotel people to delivery boys to make authorized might have become difficult. So these things, and now what happened by using all our customers, now this penetration is more. The major food apps if we take, almost they are having 30 million active users. Another app is having 25 million active users. It means more and more people are using and they become digital savvy. So they are expecting you also contact them digitally or they also contact you digitally. So we should, digital presence in case of customers become important. But it is having a lot of advantages also. One is, if you make it companies into three, say small, medium, large. Small companies, the customer is coming to my branch, I am servicing. So, but that is service also, people are expecting a good service. It means a better service or a fast service again. Say, now can I make it everything digital so that in one trip itself, I'll finance him. So come to branch, come with limited documents and do checking all verified. If it is unsecured loan, I can give disbursement across itself in one attempt. If at all secured, I may have to go and check the collaterals, vehicle or whatever may be, and then may disperse. But the customer visits to branch should come down. But then only he feels that, yes, you are servicing best. The first impression should be good impression, so that makes better this thing for wherever you are operating only branch. But if you are operating branch and your sales executives carrying mobile apps, so you should have a systems like, which is backend system should be strong and also your mobile system should be strong and which is integrated completely. And the third one is digitally presence. So people are expecting, people will come through your website and how you are driving the traffic to websites and how you are make use of the social media. You give advertisements in social media and bring the customer into your website and from there onwards do this journey. Or you explore your mobile apps, B2C. Directly customer can download your app and do transact with you. Be it a collection, be it a service, be it a new business also. Say unsecured loans mostly can be done in this model because you download app, many apps we are seeing now, like you'll give only 2-3 data points, like you will enter mobile number, PAN number or Aadhaar number. That's it. With mobile number, I can match. One is with OTP I can match, or the mobile SIM is available in that mobile or not, I can check. So that mobile number is validated. Second one, with the PAN number, we can take the CKYC. Now CKYC is picking up more. CKYC I can take, CKYC is giving the information along with your document images also. I will get the KYC document images also with the CKYC. So I can pull that. Then we are checking like CIBIL score, CRIF, your experience. Some 2-3 things are there. So with the PAN number, I can hit CIBIL score and see how much the score. Not only the score, I'm having a lot of data in CIBIL. So if I could able to analyze that data, I can get more insights about the customer. So how frequently he is taking loan, how frequently he is closing the loan. All this information I can get from these CIBIL reports. One is score based you can put, and you can extract some data, put your business rules around that and take decisions fastly. So if you take decision fastly, even I should be able to disperse on the app itself, like do it yourself. So I am not doing anything. Customer himself is doing through, technically I am validating everything. Through IMPS I am transferring money immediately. So money is available immediately. One, this can be done for the new customers and it is more useful for your existing customers. Because customer is already with me. I know better. So how he is paying the money, how he is maintaining the balance, all that. So I can do the cross-sell or upsell through digitally. So the customer is good. See, he is already having the collateral with you. You can arrive through analytics how much fund I can give further to him. You fix, it's like a pre-approved loan. So whenever he is using, whenever he needs money, he should be able to withdraw from you without any separate, without any other activities. It's like it will become a 24/7. Anytime you should have money with him. And that app data, when your app is there, you are part of the life cycle of your customer. So always you are monitoring him. That monitoring means with the consent only. You are checking that what is happening with his financial things, what is expecting. So you can sell even other products which is you can partner with others and sell products through your mobile app. So customer acquisition always, it is a very high cost initial. But when customer is with us, sell small products to him and make more revenue. All this is possible when technology, because manually it can be done, but it is very difficult. You cannot reach all the customer. If you make it technical use there, then easily you can make more and more business with existing customer also. So it makes like, normally we'll tell terms like product per customer. So already as a customer, how many more products I can sell him and make. Even that the next products is, even the income is less. The fee-based income also, you'll be getting a lot of income. So these are all the emerging things are happening. So I just want to show how Novak is doing, what products we have and all. I'll just give introduction. So Novak, we call it as a digital transformation cloud solutions company. We have majorly these 4 solutions across. Like one is Jiva, which is our lending platform, and we have the Nova, which is our insurance solutions. So insurance contains like the new business or your policy maintenance, claims, reports, and all. We can do that. Kazito, which serves for the retail market, say be it a wholesaler or e-commerce for their e-commerce management, stock management and all, it will be useful. And Excel is a corporate training program. So it's a learning things. So for your employees, any training should be given and all can be used at this platform, where even we can create content. Already you are having content, we can host it and can do. So we follow in Novak the 3D approach: design, deliver, delight. So we'll understand the customer's business well with our domain expertise, our technical expertise, and then we'll make the products as a scalable or flexible product. Then we'll delight. It means we'll frequently talk to the customer to how we can improve the products. And we are proudly can say that we are part of Shriram Group. And we are CMMI level 5 company and ISO certified. We have team size of around 3,000, which contains the senior team members. And we also recruit every year the younger generation from the reputed engineering college will be taking, our reputed MBA graduates will be taking for our domain this thing. And even we'll take some laterals also to understand what market is doing. And about Jiva. Jiva is the product for lending solutions. So Jiva contains, when we are developing this application or this particular product, we take it that any company, like it's a small, mid-range or high major companies, should be able to use this application. We have variants in that. If it is, as I say earlier example, if you are having only a branch network, you can design accordingly. If you have a field network which we want mobile, we can extend mobile solutions also. If you're a larger company, you are looking for a B2C digital solutions, we can add. But whatever maybe you are doing, your backend LOS system mainly for your business, it should be strong and should be scalable. And it should be easily integrate with any solution, because today integration is important. Earlier we used to say that a closed environment, we used to keep our data or solutions. Now today we are exchanging lot of data with others. Even now it is taking up like accounts aggregator, where we can take, the concern will be having data from all the financial institution, banks and all. With the consent of the customer, we can take data and validate. So these kind of things and all possible when your system is very scalable and modularized, or it is a decoupled. So system should not be very rigid. If you're rigid, you can do, but still it will become a more of a customization. We need to work continuously in technology to make everything possible. Even one of our clients we are working for, say example, Ola. Now Ola e-scooter. So you can go and book, maybe like first you might have paid some 500 to register, then they started booking opening. So they say everything is only electronic, nothing is physical. So they want us, whenever their journey is happening, some customer is going, login, and taking this, choosing the model, what is the price, whether you need finance or no finance. For no finance, he'll pay. If it is a finance, they'll be showing what all the finance companies they can apply. So everything in single journey. It means it like he is booking, choosing the asset, and taking finance will happen at a single this, including eNACH. So there, what we could able to do is through Jiva, we could able to expose the APIs to Ola along with the controlled business rules. Even we kept all business rules in Jiva. Say, because company to company business rules is different. I may have different this thing. Say, income range. Suppose he is having 4,000, 5,000 able to capacity to pay EMI. Then only I'll offer this much of loan. Can be. Like this, the business rules is dynamic. We don't program anything for business rules. We have given only a provision to define the rules. So that is possible in this. And as mentioned, like this is Jiva is, we can put in the cloud. We can operate from cloud also. And completely automated things are there, product ready to market. And we have the, as I said, the rules and all you can define with a graphical user interface and multi-channel interfacing capacity. Like mobile also it will work, even it will work in the web also. And business user-driven workflow. Here, we can create workflow as you require. We have not structured the system like you should follow only this. Because company to company flow will change. Somebody will do primary information and take asset details and arrive whether I can fund this customer or not. Then my field verification may happen little later. Or some companies may decide, I will go and see first field verification, I will see the asset. If asset is okay, well, I will come back and fund the customer. So your decision, that is business to business can change. So our system is, you can configure how you want. Suppose even you can create multiple products. Say certain area, you are very clear. You can define one process with a straight through process easily. Certain area, you are going a new area. Suppose that geographical area, you are not there, you are going to present now only. So you want to take the decisions very, it means while check and go things. There you can define a different flow, different product. Same vehicle loan, but I will do differently in one area, I will do differently in one other area. This is possible in this system. So integrated accounting engine, so all your accounting entries and all you can configure from your LOS system, automatically data will flow to your accounting module. So nothing, that and all happen at the back end. We need not worry, we will focus only on the customer acquisition, customer servicing, doing more business, controlling the business, that's it. So compliance, risk policies, eligibility and all can be controlled with the rule engine. So these are all the lending products can be done. So example, in this, we can do vehicle, housing, jewel loan, your SME, trade advance, anything, two-wheeler loan. All these products can be configured easily in this and do. And since is the product creation process definition is dynamic, we can generate more and more products apart from this. Or in this product itself, lot of variants we can bring. Say personal loan itself can be a more variant. Now, earlier somebody was telling like, a personal loan is given for to pay the school fee. So the flow can be different. So somebody you are giving loan for a different personal loan, flow can be different. So that can be configured. So these are all the key features in the application. Like as I mentioned, the dynamically you can create product process flow and you can document. Mainly thing is whatever documents you are taking, you can upload in our mobile app itself straight away. And somebody can see the maker-checker concept. Somebody can see the document, see the data together and compare whether the data is proper or not. Wherever you are going with a taking document entry. Suppose you are taking data from the source, that also may not require. So document and data is flowing together. User-friendly UI. How we can say user-friendly is because we have segregated into entire LOS into 4 or 5 containers only. Like pre-sanction, I am taking primary details and all, then some business approval is happening. After that, some credit reviewing is happening by checking all the documents and I am giving final approval, that's it. So 4 steps will be there. So it is like 2 maker, 2 approvals, that's it. Suppose you have configured all the rules without any deviation, then with the 2 steps itself you can do the loan. So that's why it is a very user friendly, where we need more training for the users. Straight away you can use that. Because this is similar to our DIY, do it yourself. The customers, we are telling you yourself enter, take the loan. So it should happen same thing, it should come for our internal staff also. Whoever is coming to our sales staff or whoever coming to branch also should be same way. Then only we can do fastly. And we have dashboards, drill down reports to that. And notifications. Notification is very important, be it a internal or external. Say every time customer should know what is happening. Once he has given application to our sales executive, so he should know what is happening, which level it is there, when I can get the money, when disbursement can happen, or either company is expecting anything from me to update or to give some documents, anything. And also same time the notification should go to the internal staff also. Like where, when, who has to take the decisions immediately. So that all this there only your TAT will come down. So how quickly I can give the loan. Then documents we discuss, lead distribution. This is main. Lead is coming. Lead can come from various sources. Say our sales executive doing some seminars kind of thing and taking the data, and all this data is available at one place. You can further enrich the data, or you can customize or automate the distribution process, which means I can distribute based on PIN code. Suppose the customer is pertaining to this PIN code, this particular branch should go, or this particular sales executive should do. Like that I can have a distribution rules where once the lead come into your system, it has gone to respective people to take immediate action. That is the lead distribution. And rule engine already we discussed. So rule engine is concerned like you have some calculation fields. Suppose example processing fee. You want to make it a processing fee 1% of loan amount. You can define that. Tomorrow you want to change 1.5, you can change. Product to product I want to change. The liberty is given like product, not only product, I want to make a customer category wise. I can do. So or a customer income range wise I can do. Or if it's an existing customer, I want to give some rate, new customer I want to give some rate, or geographical wise also I can define. So all the configurations are given to you, control. So you define what you want. You need not come to IT every time whenever you are making a new process. So we have integrations like Civil, CRIF, and we have integration with the Karza, some fintechs also to take some more data for the validation and verification purposes. So here says that Jiva onboarding is made simple. That's what we have discussed. How easy to onboard the customer into the system. And it is built solely for digital transformation. Here only we mention like, so you will be taking only a minimum data from the customer. Yeah. So we can make the journey easily customer. So we can take the few information and pass through the system easily and convert to the loan. So that is the digital, like as we discussed earlier, like you'll be giving only a PAN number, mobile number and all. We can get all the other datas, and only a limited data we may need for the example you are funding a vehicle. So I may need vehicle number, I may get further information about the vehicle completely from digitally. So user need not enter all the data. So that can be done. So even Jiva contains, one is your loan origination piece, loan origination step, and another one is it also has the collection and servicing. Servicing is like customer can take SOA, we can send wherever defaulter, we can send the letters and all, and the repossession of the vehicle or legal, those things also available. And another one is the collection portion. Collection is like delinquency management. One is ENACH and all, we already discussed, we are processing it, and UPI we can take money, BBPS and all. Wherever further still default is there, we can follow up accordingly. It means even default loans, you can make a rule to whom it should be allocated. So you may have the different collection experienced people to allocate based on the bucket. So that can be done easily here. And then of course collateral management is independent, because if at all customer given a big collateral or more value collateral, he can take multiple loans against that collateral and all. So collateral can be separately managed. So these are all the further modules available in Jiva. So this is overall Jiva architecture. So what all the components we have in that to understand. So this is a simple screens what we have having the application. It's a login screen. Then this is the dashboard. The application is completely a dashboard approach. So it will have the what a particular user has to do, it will come in his dashboard. So you open the dashboard, whatever events are there, tasks are there, transactions are there, you should act on that. And different reports, and particularly in a customer overall 360 degree you want to see, you can see in this. The approver, somebody is taking decisions, he can see a dashboards and take the decisions. And this is a mobile version of Jiva. So where in mobile also the field executive or the verification person, everything he can get in dashboard and take the transactions and act on that. So these are all about Novak again. So these are all our clients.
Shall we take FAQ, sir?
Yeah.
Does anyone have any question? Mine's there.
Handled LMS thoroughly. Happy for that. And LOS also. But what about the liability and other modules?
So we have LOS, LMS completely. Liability, you mean to say, is it
Deposits.
deposits? Deposits is separate system we have, but not much marketing done. We have done that. But still, somebody wants, we can give deposit system also.
That means I have only one leg, right?
Yeah.
Okay. What about this auction, audit, cash management, third party, etc.?
Yes, yes, everything
that?
is there. Yes. Because now today presentation I focus more of the loan is handled.
What is the platform you have developed this application?
So we are into completely Microsoft technologies. We are into .NET as a front end. We are using jQuery, JS, all that. And back end we are having SQL Server is the main platform.
Thank you.
Yeah, thanks.
Hi, Srinivasan here. I just wanted your thoughts, if an NBFC is trying to get into a digital transformation, there are many options available. I mean, there are companies like Karzai that you mentioned that provide certain capabilities. There are companies that provide NACH capabilities. What are the things that you think the company should think when they're trying to develop it on their own using different stacks available versus going in for a complete solution provider like yours? What should be the thought process of an NBFC going through a digital transformation?
Yeah. See, if you are going complete solution provider, the advantage is already they have done all these activities. So already they have, suppose example you want to do ENAS with one bank or multiple bank, more or less process is same. Say somebody you want to do Karja, already they have done. So if you are going with already complete solution, it is many activities already done. The rollout or the coming to the live is easy. Suppose in-house we are developing, each and every time we need to understand and do. That could be the major challenge. Is it addressed? So anyway, yes sir. Yes sir. Yes sir, we take up the migration also.
Product basis or service basis?
Both we have, sir.
As a product, how much it costs?
That anyway, I have my colleague
Rough,
with
estimate,
Rahul Jain here.
Rough, because people may be interested.
Yes, sir. Yes, sir. That's what I am.
You can give an indicative price, not commitment.
Sure, sir. Sure, sir. Agree, sir. So that's what I am trying to tell now. Like I have my colleague Rahul Jain also here. Maybe he might have met already someone, some people. All
Yeah,
of
we'll
you.
take it offline, no problem.
Yes, sir. So yeah, I'm also there.
But you can enable migrating.
Yes, sir. Yes, sir.
If many people take here, it's a good business opportunity for you also.
Sure, sir. Sure, sir. Because we are also, I can say like, this is my words. We also come from NBFC only. We are from Shriram Group. So we know what is the things and all. So obviously for NBFC we can do something.
Thank you so much, sir.
Thank
You've
you.
covered
Thank
the
you very much.
technology
Thank you.
part of it in depth. I think we cannot get a better person than a chief software officer of a company. I would like to call upon Mr. Chinnam Radhakrishnan, President of... Sir, please be on that. I would like to call upon Mr. Chinnam Radhakrishnan, President of Vijayawada Finance Association, to present a memento to the speaker. We have one more session before lunch break. So we have with us, as discussed in the first session, credit rating is a very important topic for NBFCs. And we have with us Mr. Manish Jain, who's the founder and managing director of FinMen Advisors, which is one of India's largest credit rating advisory companies. He's a CA by qualification, and he has an experience of over 10 years in the field of credit rating, SME rating, IPO grading, and other financial products. His practical experience includes working with top financial institutions like CRISIL and Citicorp Finance in the area of credit rating and risk management. Skilled in credit rating consultancy, his sharp analytical skills and an acute understanding of business model enhances his ability in evaluating rating assignments and advising companies on risk management initiatives. He is also the Chief Secretary of Jito Mumbai chapter. I request Manish ji to please come on stage and take it forward. Thank you, sir.
Good afternoon, all. Thanks for nice response. But I think only one guy is active. What about all? Good afternoon. I'm really sorry. I know I'm in between your lunch. But just hear me for 15-20 minutes. We are going to discuss something which is very, very important for an NBFC especially. Though we consult all sizes of client, all sector of clients, but NBFC is, this subject is the most important. And I can say that because I also run an NBFC and I know how important this subject is. So just to start and understand, how many out of this have done their ratings in past? Okay, so few hands, good. And for all, as we understand when running the NBFC, we know for us, raw material is what? Money. So we are the one who gets the maximum benefit out of this rating as compared to other industries. So when in business, when you're running business, I don't know current trends, so what do you think? What is more difficult? Getting a customer to lend or getting a financier to give money? So raise the hand who believes getting a customer to lend is more difficult. I think no one. So I think over here everyone believes getting money at a right time, at right price is most important. Of course, money can be available at right price is also very important. So here, this is what we are going to discuss, credit rating, and why it is important for an NBFC like us, NBFC or any kind of financial institution like us. Rating is very simple. It's an opinion by a third person who is reputed enough, whose words are being taken seriously by all the financial institutions. So someone like, say, a large person coming here and saying, okay, you are a guy who has this much of, you can say, ability to pay on time. And this also helps us, the third person who's giving the money, without any question giving you the money. Because there are always happen, no? Apne normal businesses where we have LC kind of things where when one person dealing with another, they need a bankers to come between and give an LC. Rating is something like between the financial institutions. One who wants to give money, one who wants to borrow money, and rating is in between to tell how secure your money is and how safe the money is. So this is the first level of comfort a financial institution or a lender gets without talking to a company or before talking to a company. So when I talk to you or when someone talk to me about my NBFC, I will always say very good about things and all these things, but that I'll say when I meet him. Before meeting him, someone wants to know that rating is one thing, and second, it's an independent opinion. So it's not biased towards me. Though I make the payment of the fees towards my rating, but it's not that they are biased towards me. So that's the best part. They are independent guys telling me not just what good about me. They are telling me a 360 degree view about me. So what is good about me, as well as they are also telling me what is the area where I need to improve on. So it's the best thing. One, of course, they are giving you an opinion which is going to be helped by various lenders, investors, or whether equity or a debt. Or second way, they're also telling you what are the areas where we as a company need to improve. And there are advices also. We can take some of the advices to implement because they have been working with so many NBFCs, must be the thousands in number, getting them rating, getting all kind of understand the businesses and all, and finally giving us the opinion. So when we say a rating, it's like there is a rating scale and all. I'll show you in my presentation and everything. So the most important for us to understand over here is that someone who is authorized by SEBI and RBI to give us a certificate to talk about how safe the investment in my company is. Of course, we should be doing this to understand where we are strong and where we lack, where we need to improve on, and which are the positives which we need to focus on. So this is a 360 degree analysis of a company. This is a tool to raise more money. This is a tool to get a better terms from the institutions. So it's in India, when I said RBI and SEBI approved rating agencies, there are 7 who are authorized to do that. Not many. Many must have heard the names also. I'll just see in presentation. CRISIL, CARE, ICRA, yeah. Brickwork, India Rating, Infomerics and Acute. These are the 7 rating agencies. All are SEBI and RBI approved. These are the only rating agency can give the certificate of a credit rating. A NBFC can take many kinds of rating, not just one. Yeah, there are some of the benefits. So, of course, it gives a confidence to the lenders. It gives a 360 degree view about the company from the lenders and all these things. And of course, when a borrower, it gives an opportunity to understand. It gives a tool to talk to the people and all these things. The most important, what are the kind of rating which an NBFC or finance institution can take? There are 5 to 6 products which can take: fixed deposit rating, then your securitization rating, then SME rating, bank loan rating, bond ratings, and all this. The most predominant is the bank loan ratings, which most of the people take, and the SME ratings, where the smaller size companies can take the benefit. So SME rating is normally for the smaller size companies to have a 60-70 page report, and the companies which borrow normally less than say 25 crore and below. And more than that, normally bank loan ratings kick in. So both these two are very prominent. Even say in India today, when we talk about more than around 50,000 companies are rated on the bank loan rating, and more than 1.5 lakh or 2 lakh must be rated on the SME rating scale. There have been circular by almost all banks on the SME rating that if you get this rating, that rating, you will get this much % of discount on interest rate, this much % on terms, better terms and condition and all. Same ways goes with the bank loan rating. So it's not something that it is subjective. It is predetermined with the bank also. The bank also know that if this is kind of rating, I have to give this kind of interest rate to my customers, and this is predominant with all the bankers in most of the banks and most of the branches. So it's easy for us also. Just take a rating and get the best. Either we will improve ourselves or we will get best out of the lenders. Two-way benefits. So normally when you talk about the rating scale, this is the rating scale. So rating scale start with the AAA. It's the highest rating scale. Highest rating is AAA. So your reliance might be on this level, and TCS and Infosys and all. And D is the lowest. D itself says it's a default. So in between all the companies are. So in this scale only, all the corporates of India are. Whether you talk about, say, large corporates, say Sundaram, TVS or whatever, are on the same scale. Same way the small company is also on the same scale. This is for the bank loan rating which I was talking about. And as when we talk about bank loan rating, the terms are also clearly decided by the RBI. Okay, what rating, what is the type of benefit banker has to pass. So guys, very simple. I think it will not be visible from here. Per investment grade, a AAA, bank has to keep just 1.8% of capital, where if you are a double B, bank has to keep 13.5% of capital. So you can read the difference, 8 times difference in capital requirement of a bank, when everybody over here knows capital is very, very scarce. So from 13.5% to 1.8%, this is just by the rating, nothing else. You get a rating, you go to the bank, bank will decide his capital, accordingly his costing will come in, and accordingly his rate of interest to the borrower will comes in. Very simple. Of course, it varies with bank to bank on their own and sector specific requirement, own free float and various other things, their own borrowing rate and everything. But of course, more or less, a A-rated client will have a lower rate of interest as compared to a triple B, and triple B will have a lower as compared to a double B or a B. And B will have a lower than a D. So this is a general trend. And that's what we have been seeing for last 15 years in our career. So, yeah, going ahead. When we talk about ratings, so of course, थोड़ा सा education देने की try करता हूँ कि what rating agency looks. Of course, more or less parameters and everything you know. But only thing is, what is important for a rating agency, I would like to focus on that. So rating agencies normally divide into 4 parameters when they want to do analysis. Of course, when they want to understand the business side of the company. Second, they would like to understand the operational business. When you talk about his position in the market, the type of business he's into, the type of industry he's into, type of product he's into, type of distribution network he has, the type of asset he has, and all these things. And when we talk about the operational, how efficiently he operate his business, that's most important. So, so how internally he has a cost of borrowings, what is cost of borrowing, what is capital structures, what is team, what is his policies, processes, systems, and all these things. Then you talk about the financial analysis, how about his balance sheet, P&L, and everything. That's come into place. And then last is comes into the management, the people who are behind it. That is also very important in NBFC. And that's why RBI say you cannot change the directors, you cannot change the shareholdings and all these things. So that is also very important. So all these parameters when we can, from an analytical perspective and from the subjective perspective, we can divide into 2 things. Guys, you can ask in between also if you want to. If you have any doubt or anything. So qualitative and quantitative. Qualitative is very simple, which are little bit subjective in nature. these which are little different from a person to person when he analyzes, when he discusses, and might have a different opinion on the various things. When from an NBFC perspective and the rating agency perspective, if we talk about, the first things comes in the size. Of course, it's a debatable matter in rating agencies always, why size? If I have a same ratio which a Sundaram has, why my rating and Sundaram has a different rating? But size, what they believe, a rating agency believe, if you have a higher size, means you have a higher distribution, higher geographical reach, higher absorption, capacity to absorb losses or absorb economic downturns, and you have a higher reach and all these things. That's why the size will help you in taking risk better, manage risk better. That's why they say size is important. Then, of course, they understand market presence and distribution network. What is your, normally in fintech, of course, there is no distribution network. But of course, today when we talk about physical and physical, there is a distribution network is also very important, and which is has been predominant here. So how well we are diversified, not just in terms of type of, in various areas or branches, also in terms of type of products and areas. Suppose someone is only into commercial vehicle, or someone only into second-hand commercial vehicle, someone is in both, someone is into passenger cars also, someone is a two-wheeler also. That all helps. Because in different scenarios, different situations, the behavior of all these things will be different, and company will have still some risk to mitigate, some position to mitigate. Of course, it also helps what are the kind of promoters and ownership structures. So, if the promoters only managing the business, it always gives lot comfort to rating agencies, because they are the people who have invested the money, are only managing the business. On a smaller scale, NBFCs I'm talking about. Of course, in larger case, that is not possible also. So in a smaller scale, it is, of course, advisable if promoters are involved in the business. Of course, rating also takes comfort. Who are the people, what is the track record and everything, and all these things. Then management. Management is very important. So I'll just tell you what are the 3 points which is important when you analyze from the management point of view. So management first is integrity. Second is risk appetite. And third is the track record. So integrity is that the track record of the payments, the banking institution, the relationship with the banking institution, relation to government institution, and some cases going on or legal fights going on and everything. You will see many companies, they have good financial, good businesses, but some integrity issue in the management, rating will go down, well, significantly down. Risk appetite, every management has a different appetite. Those many people over sitting here might be thinking, we don't want to borrow, we just want to do business with our own money. Many might be saying, a business cannot, NBFC business cannot run just their own money. You need money to be borrowed so that you can lend. You have got an opportunity, you have got a platform, and you can borrow and lend. And some might say, I would like to borrow till the maximum capacity, say 7 times and 8 times of capital. So this all makes a difference when analyzing from a debt perspective. And most important, when the rating agency analyze, please understand, they are not much bothered about the profit and loss of the company. They are much bothered about the business fundamentals of a company. So business fundamentals is about your asset cycle, your life cycle of the tenure, your track record of the businesses, your product cycle, the type of product we are dealing into, because there are many products which are inherent very risky. There are many products which is little safe. So that is also very important. Of course, when I'm not saying if something is risky, makes a rating low. If something risky, how well you are managing is something we have to explain them. If something, suppose someone is into a personal loan business or unsecured business, but then we have to explain how it is safe, because not safe, but how it is remunerative, because there you must be charging say 24% to 36% and NPA is 4, 5, 6%, still okay. And there you might be doing a housing loan and charging 14% or 13% and doing 2% is higher. So it always, everything is being compared to the industry, but in the same industry, how you are behaving is important. So it's not something that any sector is negative or any sector is very positive. It is all businesses are equally good to do. Only thing how we manage is very important. So that's what we have to. And while doing the rating, you only will come to know how other people are managing. Will come to know about various other things, various new analysis pattern by the people who are doing the ratings. Of course, a lot of things are important. So one new thing has come up, which is in our hand. I would just like to little bit focus on that. ESG, environmental, social governance. This is still in our hand. Environmental, of course, we are into industry which does not hamper much to environment. But of course, when we might be lending to some industry which are related to environment issues, so that can impact our businesses. Social, of course, not much impacted by us. The governance is something which is very important to us. Governance is something, in simple terms, it's a sharing of power and responsibilities between the board and the management. So how you are governing, whether you have independent directors, whether you have experts on your committees, all these things matter. Whether you listen to them or not, that also matters. So kind of committee you have made, kind of board you have made is also matters, while it's not for the rating matters. It matters for our own businesses. Because when we get someone expert, it will help us, it will make us disciplined. You tell me today, when we run an NBFC, many times I want to make a decision just by my choice. But when you have a team sitting, a committee sitting, they will stop you and tell you the guidelines on which we can work. And this will help you in the long run to create value for your organization. This is all matters for the organization, not for the rating. Of course, matters for the rating, but more for the organization. That is more important. So most of the points which a rating agency asks you to do, it is not for their benefits, it is for our own benefits. Because they will make us disciplined, they will make us focus, they will make us go by the rules and regulations of an NBFC so that we don't make mistakes, don't go by our own choices, go by a collective decisions. So this all matters a lot. So when you talk about the quantity, I'm not going much in detail because if I start explaining, I might take a lot of time, and of course, we can explain much in detail if anybody wants to understand over a personal meet. Now is the quantitative. Quantity is the balance sheet side. So how your profitability is measured in three terms. Interest income, what we make, the operational cost to run the business, the credit cost, and the last is the interest expense, the borrowing cost which is us. This makes an NBFC balance sheet complete. So every aspect is being analyzed, how company is managing it, whether the company is making higher interest payments to their lenders or not. This also tell us a lot thing about the company's ability to make, ability to raise money. How much interest is company is charging in their income portion, whether they have the non-interest income also, that also make a lot comfort in terms of the processing fees or various consulting fees or all other things also make a lot of benefit to the company. One of the important point when a rating agency or any businesses should look at is the liquidity management. We have seen not just NBFCs, but various large businesses falling out, going bust just because of liquidity, not proper liquidity management. So that is very important because we are into business which requires money on a daily basis. And if you are not properly managed, suppose lockdown comes in, suppose something comes in, suppose we don't get money to refinance our debts, we should have liquidity to manage it. We should have the ability to raise money and some cushion available in case for at least next 3 to 6 months of operation to run smoothly. So that management is very, very important. We cannot be running on a daily basis that today whatever we get, we are going to lend. So it has to be properly planned. We should have some undrawn limits. We should have some sources available from where we can call the money and something like that. And we should, when we are borrowing also, we should always take care that our borrowing should not be dependent on one or two guys. It should be a mix of people. So it should be a mix of institutions or mix of various financial people so that we are not dependent on any one organization or something like that, so that if something bad happens to his choices, we are also in the trouble. And there are many examples for all these points which you are talking for. There is not a fixed formula where we say ki this percentage given to this point, this percentage given to this point, this percentage. But it is mix of all these points where rating agency has to understand how important this problem is or this positive is and how it should be benefiting the company overall. So that is very important. So for us, I think 2 ratings is very important, SMA ratings and bank loan ratings. SMA ratings for the companies who are just coming out to borrow money or are just thinking to borrow money for their first due diligence in-house, understand their internal strength, understand their weaknesses, and then do a rating. When we do this, we have to, of course, take care of many things, because not just taking the rating is important. Taking a right rating is also very important. Rating you will definitely get, any client will go. But taking a right rating is important. So when we are submitting the information, when we are explaining to them, when we are talking to them, we should be making sure to have proper homework done on all these points, all these proper policies, guidelines, what we follow, our collection mechanism, our disbursement mechanism, our client acquisition, everything which we follow. We have to be properly analyze it properly, because rating agencies are going to ask all these things and they are going to analyze it also properly. Understand it also, try to compare you with the various pool of their clients and everything. How well we are operating in the pools, in the same sector, same businesses, same geographies. So everything will be analyzed properly by them. So we should also be having, and it's, the good thing is, we might have something, what we say, not so good about something, but you can always explain how you manage it. Suppose you might have a higher NPAs, or suppose you might have a higher operational cost, or suppose you might have a higher borrowing cost, but you can always explain how it is not disturbing the overall profitability of a company, overall fundamentals of the company, overall ongoing concerns of the company. That all we have to take care. Otherwise, what happens? Just like some MBA, junior MBA will come, take documents, give us rating, and it will be of no use to you. So you have to make sure that whatever the negatives we have to properly explain, properly make them comfortable how we believe. Because when we all sitting here, this is very sure that nobody understands business better than us. Our own business, nobody understands better than us. Neither I can understand nor someone else can understand. You understand it better. Of course, you don't understand the rating agency better. That's why I'm telling you, we have to do a proper homework and see wherever you think there is a negative, explain it properly to the rating agency. Meet them, explain them, discuss with them, ask them, and give them the proper clarification. Because when you do the entire exercise, they should also give us a due time to understand it properly. So, but so my only thing is, of course, as I seen our NBFC growing, only thing I can tell you, without money to grow is very difficult. If we are not growing, is also called dying. It's not sustaining, it's called dying, because every year your expense will increase, every year operational cost is going to increase, so every year we have to grow. Of course, I'm not telling or I'm not expecting anybody to grow at a significant pace, but at least in line with the industry trends. So we should, and if we have an opportunity, we should always try to look forward to borrow money. There is a lot of institution has come up and giving money to NBFCs, because they have also understood that they cannot go to such a remote areas and give money the way a small NBFC can do. So there are many people, now NBFCs are raising money at very low rate. I mean, I think a normal mid-sized NBFC is raising at 8, 9%, 10% from the banks. So I'm not talking about the larger ones. Larger ones are borrowing at a very less rate today. But on the smaller size I'm talking about. AUM of say 10, 20 crore to 100 crore AUM size, asset size I'm talking about. So there, if we have opportunity of adding another 7%, we all are businessmen, calculate the return on equity which we are going to generate. Even if you just double 2x to your net worth, your return on equity will be just double. So this is the benefit of a power of leveraging. One should always try to do that. Okay. So this is more or less how to prepare yourself. Yourself is very simple. We have to have a proper robust credit policies. We should definitely have try to follow the policies. It also helps in the long run, because nowadays as in the morning session a lot discuss on the fund opportunities and all, and it is very well understood that anybody who is coming in would always like to believe more on the documents, more on the policies, more on the system. It will be more comfortable if a company is running on the system and not just by one's opinion and decisions. So always go by the policies, make your risk management policies proper, focus on collection the most and the quality of assets, which we believe work on. As I said, no asset class is bad. The only thing how we manage it very important. So same personal loan, someone might have a 10-15% of FA and someone might have a 1% or 2% NPA. So how we manage is very important. We have to have a policy of a continuous disbursement. We cannot have the abrupt in our disbursement. Proper liquidity at any given point of time, always available. We should always focus on seasoning of our AUM and all. This happen at the time. Always make the proper track record of our repayments to the institutions or the people who borrow. There should not be any delinquencies in the money which we borrow. It also helps in boosting the confidence of the people who are going to give the money. Try to diversify little bit. If one branch, try to open another branch. If one product focus, try to add some more products. This will also help in risk absorption or less. Try to invest into technology. That is also very important, because technology is very cheap as compared to everything we're doing at physical right now. So that is also very important. Today's when we do the analysis of the various NBFCs, this is also very important, because when a cost competitive scenario, technology is must in today's things. So that is more or less on the rating side, where which is from side. At just to give a brief about Finman, at Finman we are the first guys to start in India about rating, some 11-12 years back. And today we handle operations across India and largest guys in rating advisory. So that's it from my side. I hope I have not made you wait for more for the food and lunch. But I just trust me. I mean, I'm passionate about this subject because I'm doing this for 15 years. But since I've seen and done the rating for many NBFCs, I mean, our active client must be more than 118 or 120 NBFCs, which we consult for the rating side at least. I mean, you cannot grow unless you borrow. You cannot sustain unless you borrow or unless you try to lend more. And you cannot grow unless you have a rating, because it's become compulsory nowadays, kind of compulsory. So early we start, early we get the chance to make ourselves better, improve ourselves, and get into the mainstream faster. Okay, guys, thank you.
Any questions from the audience? Does anyone have any questions? On Zoom, do we have any questions on Zoom? No?
Yes, some of the FAQs, yeah, you can.
Hi, Manish. I have a small question. See, you said it's from C, then B, BBA, whatever. How many notches generally the rating agency gives in one go for upgradation?
Upgradations. Generally, if you are talk about, it's 1 or 2 notches normally, because normally there is not significant changes happens in any company in few months or few, every year it is exercised, so not in few months, some significant changes come. But suppose some significant changes come, rating upgrades by 4-5 notches also.
It happens.
It happens. It has happened with many clients. By 4-5 notches, 7 notches, it has upgraded. But there has to be significant change.
What is that duration for reassessing this particular rating?
What is the duration?
For reassessing the rating.
It can be reassessed. Normally it is said it is a continuous surveillance. So once you are rated, it is continuous surveillance. You can always go back. Something happens, you can go back to the rating agency. But normally they take a break of 6 months time to reassess.
Okay, thank you.
Once, it has to be due once in a year compulsory. Okay. So rating is an annual exercise. You have to do it once in a year. But something happens, say positive side, client will go to the rating agency. Something have a negative side, rating agency will go to the client.
Thank you.
Thank you, Nishji,
Yeah,
for...
some of the FAQs was there. Rating is an annual exercise, and I don't know kya kya tha do thing.
Um,
Yeah.
If I'm not satisfied with one rating of a company, how far I'm permitted to go to other company, challenging the other company, saying that, for example, valuers. If I don't get a fair valuation, I'll go to other valuer also. Here, can I do that?
Yes, yes.
And second question, every year.
Yes, yeah. As per the rules, rating agencies, you can appoint and go with n number of rating agency at any moment of time. Same time you can go to 4, 5, 6, 7, all the 7s allowed. Every year also you can change. That is allowed. Most of the people don't do that, but of course, if you believe you have not been properly assessed, you can change. But changing is not a right strategy because it gives a negative sentiments in the industry. So when you change, you have to think a lot. And you have to be sure about changing because it should not happen that you thought of going to someone and that was not even not good, or it was not as same as the same one. Huh? Yeah, that is what, I mean, I tell you, when you are talking to me personally, we as an advisor work with all the rating agencies, so we understand what is the rating model, policies, criteria of a rating agency. Today when we talk about the bank loan ratings, we are tracking almost all the 45,000 companies with us. We understand every rating agency, every company has some or more different way of analyzing things, different way of looking at things, different teams who understand differently, different experience they have. So of course, selecting the right agency is the key thing. And not just the selecting the right agency. Once you select the right agency also, selecting the right team, and once you select the right team, selecting the right documents to present, explain them properly, make them comfortable, give them proper presentation, meet them, meet the right authorities, and get the ratings done. This is a detailed exercise when someone do it. Right from the selection of the rating agency, it is just 10-20% job done. Post that also, there are a lot of documentation. What happens many times, rating agency are outside, so even they don't have much idea about inside of the company, many strengths they miss out, many weaknesses they not understand properly. So we as a company have to explain them, talk to them, and that's what we play a role where we know both the side, and we are the people who are presenting the company but knowing them better, so at least can become a bridge where explain the things better to them and get them the best right rating agency.
Give me a B rating, so I don't want to take it. Do I have a choice?
Of course, acceptance is in our hand. However, whatever rating will come, it will be published.
It will be published.
It will be published, but you don't accept. You have an option not to accept the rating. It will be published, so people will come to know you have done a rating.
So if I go to another agency also, they will know that?
Yeah, they will know that. So they will know that. So that's why I said, changing and selecting the rating agency is very important. Because what happens earlier, it used to happen. Client was going one by one to another and another. So it was called rating shopping was happening. So that why in 2018, some circular came and made that even if you change the rating agency has to publish so that client also think a lot before changing the rating agency. And if they change, at least people should know that what kind of rating they have got. So that is, of course, good for the overall sanctity and credibility of the rating agency perspective. Otherwise, normally people will try 4 and accept one who's giving the higher, another 3 will not come to know only.
Okay, sir. I think we'll be there for lunch, so if you have any other questions, you can put it up. Thank you, Manishji, for taking out your time and preparing a detailed presentation also for us. I now request Sri Purnachandra Rao, President of AP Financiers Association, to present a memento to our speaker. you, sir. We'll break for lunch now. And
பப்ளிக் டிரான்ஸ்போர்ட்ல போயிட்டு வர இவ்ளோ செலவா?
ஸ்ரீராம் டிரான்ஸ்போர்ட் ஃபினான்ஸ் வழங்கும் யூஸ்டு காருக்கு ஈஸி லோன், குறைந்த இஎம்ஐ, குயிக் ப்ராசஸிங், ஈஸி பாய், சேஃப் டிரைவ்.
பப்ளிக் டிரான்ஸ்போர்ட்ல போயிட்டு வந்தா இவ்ளோ ரகலையா?
ஸ்ரீராம் டிரான்ஸ்போர்ட் ஃபினான்ஸ் வழங்கும் யூஸ்டு காருக்கு ஈஸி லோன், குறைந்த இஎம்ஐ, குயிக் ப்ராசஸிங், ஈஸி பாய், சேஃப் டிரைவ்.
என்ன பப்ளிக் டிரான்ஸ்போர்ட்ல ஸ்கூலுக்கு போறீங்களா?
யூஸ்டு காருக்கு ஈஸி லோன், குறைந்த இஎம்ஐ, குயிக் ப்ராசஸிங், ஈஸி பாய், சேஃப் டிரைவ்.
என் ஜென்ம கூடவே
பப்ளிக் டிரான்ஸ்போர்ட்ல போயிட்டு வந்து இப்படி ஆயிட்டீங்களா?
ஸ்ரீராம் டிரான்ஸ்போர்ட் ஃபினான்ஸ் வழங்கும் யூஸ்டு காருக்கு ஈஸி லோன், குறைந்த இஎம்ஐ, குயிக் ப்ராசஸிங், ஈஸி பாய், சேஃப் டிரைவ்.
பப்ளிக் டிரான்ஸ்போர்ட்ல போயிட்டு வந்தா இவ்ளோ செய்யணுமா?
ஸ்ரீராம் டிரான்ஸ்போர்ட் ஃபினான்ஸ் வழங்கும் யூஸ்டு காருக்கு ஈஸி லோன், குறைந்த இஎம்ஐ, குயிக் ப்ராசஸிங், ஈஸி பாய், சேஃப் டிரைவ்.
Good afternoon to everyone present. We hope you have enjoyed your lunch. We request you to take your seats, please. We'll be starting the program shortly. I request all the participants to please take their seats. Good afternoon, sir. On behalf of FIHPA, I would like to acknowledge the presence of Sri Mohan Venkatesan ji, grandson of founder of Sundaram Finance Limited, Shri T.S. Santhanam ji. Thank you, sir, for gracing the function. Thank you. I would now like to introduce a speaker for our next business session, Mr. Jayakar. An MCom by qualification, he has over 26 years of rich and qualitative experience in the accounting and financial services industry. He has served in various roles for over 20 years in the financial services industry and is presently the Senior Vice President, Ardent Capital Limited. With him, we'll have Mr. Sundar of Selvaganapathy Finance Limited, Salem. Sir, we request you to start your session.
Thank you everybody for giving us this wonderful opportunity. I see here very much dignified, very enriched dignitaries with much more knowledge about the industry and veterans of the industry who are well qualified. I think this is the first meeting of this nature I am attending and giving my presentation. Thanks for giving me an opportunity and thanks for Acha sir especially. The subject given to me is of what you say, all the compliances like that thing, reporting, everything it should be covered within an hour. But I think it is a very small time and it cannot be done. Rather than, I think I will be sharing some of the points which I feel it is important, and with any clarifications anybody needs, it could be an interactive session which will be benefiting everybody. See, first thing, everyone thinks that, and in fact, to put it in the other way, are very much afraid and very much feared when speaking about compliance and other things. To put in a simplest way, we take a lot of care and gain knowledge to our business. Say, in NBFC and in the future, the compliance and business, it is going to be like two eyes. We cannot leave either of it, and we cannot do injustice to any of it. Like that we have to go. See, one thing we need not, out of my experience with the compliance agencies and regulatory authorities, the thing we should adapt is as like our customer or a friend. The only caution we have to take is we should not share unwanted details from them, as an earlier speaker said. We can be friendly with them, we can have good acquaintance so that our compliance work will be very much easier. Even if we go wrong somewhere, they will guide us to make rectifications and submit, and how it should be done. This is the way I go for I travel for the past 26 years with RBI even. And till today, the officers before 26 years are in touch with me. Like the rapport we develop. Then another thing, it is mainly basic, reporting, we need not think in it a different way. See, there are accounting standards. if we maintain accounting according to the standards and it explains us with all transparency, with all the heads, then our reporting part becomes more easier. Then another thing, the things should be very transparent and maybe like, and wherever it is asked, any queries is asked by the regulator or a compliance agency, we should be able to prove it. Say, in business, everyone may say, it is not 100% possible to do that, but at least try to show it as it is provable. That's only we can do. That no one questions it. And as far as possible, we should act ethically, based on our policies. One thing, when we go by the policies, by the guidelines, or by the fair practice code, without deviating, then we need not worry about the okay, sorry. We need not. See, regarding my earlier speakers were speaking about the investment and other things. One thing, to my experience, I realized that anything what we earn, 20 to 30% reserves should be there. And 15 to 20% can be dispersed as dividends or in whatever manner for the owners. If this is there, your company will on any account will not default, or there won't be any compliance issue. You will be sailing on a safe boat. The main thing is to function, your function should be in a systematic way. Now, every company is urged to go into the tech field. Methodology, everyone has to follow. Whether you like or not, you are forced to go into tech. Maybe you may go to a small company or a bigger company, depending upon your company size and budgets. But make it sure that all your processes are put in system, and it should be system driven, that is IT driven, because many places people doesn't comply or make a mistake only because the process is not systemized and IT compliant. See, a couple of days, for an example, I got a call from Delhi, a bigger company. The compliance officer called me and said, "Sir, our company's credit rating was downgraded in December, but we failed to report it to RBI. What is the consequence?" So it is a bigger fault, and RBI will surely take it seriously. The luckiest thing is they have reported to CIBIL, they have published in their website. So anyway, people should take it in the expertise opinion, and proper people should be kept on the positions like compliance officers, CFOs and other things. Now, another thing comes to our worry is, see, there are many small companies so far with 2 crores or 3 or 5 crores capital, which we were running to our wishes and fantasies or whatever our auditor advises, like that. Even we didn't have the company secretary obligation also. The auditor can prepare the balance sheets and give us our annual report, everything we were submitted. But I advise everybody, or as a suggestion, that all the companies, whether small or big, they take a secretarial service as they were doing before. Even though there is an exclusion, if they do it properly, they can go in a big way in the future. There won't be any negative aspects when credit rating agencies or an FI of an investor who is coming, that company will not face any problem and they can smoothly attract a lot of opportunities. And another thing, when we reach the target of 10 crores, which is fixed by RBI in this new scaling system, as per Companies Act, we need to appoint a CFO, it is a must, and a full-time company secretary, which will be approximately, to find an average person in the industry may even cost at least 30 to 40 lakhs combined. And I don't know whether a fresher will be able to manage the RBI guidelines, ROC guidelines and other compliances agencies, all I doubt, very much doubt. So when we go for a bit experienced person even, our thing will be costing more in the finance. So business cannot stop with the 10 crores norm. We have to go at least scale up the operations to 50 crores or 40 crores minimum to have a break even. So people and friends here, please work on your things and plan accordingly. This is a major compliance issue we will be facing because of this 10 crore norm. See, other services we can connect with the tech people or available in the markets, and we can get the APIs, verify the KYCs or other things, and everything can be done. But for a CFO and company secretary, it is obligatory as per ROC norms, you have to appoint. There is no other go. We cannot escape. We cannot produce a fake certificate and all here because no one will sign that. Then, when coming to my subject specifically, the reporting concept is not very complicated. The first step we have to follow is get all the details. Say, when you go to Sersoya site, you will get an application. That is know your customer applications. It will be very tough for us to get all the details except some industry leaders. When we go to a customer, he will say, I will give only PAN card or that's enough. No, you know me so many years. Why you want all these things? But it will be an application, and many of you have seen, it is like a bank application for opening an account. You need all the details to be captured. Personal details, relatives, because now RBI and other people are much focusing on the relatives aspect. Who are connected and how they are connected, because a lot of scams are happening on that grounds only. So interconnectivity details we have to capture. So our application should be very simple, and at the same time it has to capture all these details. When you are taking a security, say example, in our case we take a vehicle. We have to have all the details of the vehicle and more or less see how many people with the commercial vehicles they follow this, or I don't know. Yeah, some people follow a concept that after making an endorsement, they give a letter to the RTO addressing him that they are interested on that vehicle along with the permit, everything. Say, with the private financiers here, corporates, it is a different story. They give only on the valuation based on the hardware. But private financiers, they used to give more amounts above than the values. For them, this concept will be a helping hand, so that the permits will be held and the borrower cannot do anything with the permits. Then another big concern we have is in selecting the borrowers who will not make his dues cross 90 days. That is a bigger issue in compliance aspect today. Say for secured asset means it is okay, you can net the value and report. Your NPA provision will be less. But say for an example, to the same, your customer wants a 1 lakh rupee emergency need and he fails to pay it. You have to, which is unsecured, you have to provide full amount, 100% of that amount. So your net own funds automatically goes down. Your CRAR also affects. So this is the area we have, people were saying that leverage effect 6 times or like that. This is the area where we need to be careful and keep our, say, the leverage ratio below. Say it will be normal for a small company which have limited access to bank funds and other things to have it as 1/3 capital and 2/3 leverage or something. More than that, they will be landing into problem because they will not have free access to all the funds and other things. And their compliance aspects also will increase when their leverage rates increase. One second, please. Yes. One more thing. RBI now insists on a secretarial audit for the companies to be formed along with business continuity plans when you are above a certain level. Then IT audit also they are going to ask. See, these are all possible only when you have a systematic working and tracking system of your procedures without any lapse. The another thing, see, people who are operating from 86, they will be knowing that earlier that RBI supervision was with same department, that is Department of Supervision. And when 45S came in 86, the RBI divided the departments into 2, that is Department of Non-Banking Supervision and Department of Banking Supervision. But now, once again, they have reduced the numbers of the NBFCs and combined both the departments. The recent developments with these new asset-based classification, slab-based lower level, upper level, like that and all the other compliances are because they treat our NBFCs at par with the bank. Slowly, maybe within a couple of years, all the banking norms will become applicable to the NBFCs also. This is the scenario which is going in inner side of the Reserve Bank. Maybe our association is fighting and trying to reduce the complications and compliance levels. But how far we will be able to sustain that and fight that, I am doubting it. Because these people from banking industry cannot, they will not be understanding our arguments and things. See, why I said in 86 means because at that time, the banking people only, supervisory people came to DNBS also. But after 1 year or so, they were able to understand the practical difficulties the NBFCs are facing and the smaller structure and everything, and they adapted to this and tried to help us. But now it will not be like that. They will be expecting the bank model. So this we have to keep in mind, try to scale up, and the compliance levels also we have to do it. Once we go very systematically, I think we will not be having any compliance issues, and mainly all the compliance agencies like RBI, whenever they come for inspection, and they only ask for the KYC, proper approval, proper procedures. This is the part they ask always, sanctions. Who has the authority and who has sanctioned it. This is the main thing they have got. When we go into the IT part, I think these all will be eradicated and we will have a lesser compliance issues. And one more point, everybody now wants to go to tech side because digital lending is picking up in one pace. And one advocate, a leading personality, advised that try not to take a promissory note in digital mode because it is safer to always have a physical one as we traditionally do it. All the other agreements can be digitally signed, but for promissory note, go for a physical one. And in RBI reporting, some companies are showing, say, interest on one side and on the debit side, and on the asset side, they show overall thing assets. But RBI asks everybody to net it and show it as a net asset figure without interest, because all our hire purchase records will have the combined installment figure, which will be often principal and interest part. So you need to net it and show on the balance sheets so that it will not be boosted. And your CRR or other things also will be adjusted and it will give a good look. Now, I think I have given my experience as a brief. Regarding presentation, if anybody wants what fields are to be filled, I will show you for what is that? 1 second. See, this is the consumer. Oh, sorry. Okay. See, this is the sheet for presenting to consumer loans. See, which has mainly of all the consumer name, date of birth, gender. Sir, it is visible. Okay, fine. Thank you. See, date of birth, gender, and mainly the things are address and KYC norms, which is their PAN, Aadhaar. Now, Aadhaar is a must. Without that, we cannot proceed. All the other things are secondary. And one issue I want to bring it, for my example, I want to share with the meeting. See, suddenly, for the past 2 years, I am receiving a call from a leading finance company. it's a very bigger company, I don't want to name it, that you have to pay 8,000 and odd rupees for your loan balance. You have taken a vehicle loan. I was stunned because I don't have such loans from any any connection with that company even. I asked them, how you got my number? It is in our records. I asked them which year you got, the loan was given. Then they said, some years. I told them, before 5 years, I am owning this number in my name. How could be it in another name? And this, what the name you tell is not to this number. The company doesn't agree, and still today I am getting mails, I am getting messages and voice calls from that company. What the KYC they follow, I don't know. Even I have taken the matter up to the ombudsman. See, this example I said because capturing of this KYC is very important, and their phone numbers, their Aadhaar, everything need to be captured properly and verified properly. See, whatever records you take physically, see, if it is e-verified, it is okay. The authority is making, and through the API you get everything verified. Otherwise, if you are physical records means, small finances, they will be having still now physical records. Many finances, they follow that. Physical records means the authorized persons should sign it verified after seeing the originals. This is one of the important parts of the compliance. Otherwise, your legal validity also is questioned, can be questioned. So regarding loan status, I think many of us have the due system, and some have the plain loan system. If due system is from the due date, there is 30 days slab, then 60 days slab, then 90 days slab. After in the 91st day, it becomes an NPA. You have to classify. That is, in the 4th month, you have to classify it as an NPA. When you report, that is 120th day, you will be reporting, 4th month. In that quarter only, you need to report it as an NPA. Until 3 quarters, you need not, 90 days report, you need not mention it as an NPA. Bucket 1, bucket 2, and bucket 3. That's enough. So, and provisions can be made accordingly. Regarding the loans, say, as I earlier said, some might give an open loan, additional loan support, that you will be maybe giving on some monthly interest for a period of 2 months or 3 months per term. Emergency loans. Say, for that, normally people take, I have seen some people taking it as it is due on month end. See, normally 1st to 30th example for a month is interest calculation period. And people say it is due on 30th. And even RBI had raised this doubt to me. But see, when you pay interest or calculate interest, it is for a period, interest is 30 days, you pay it on the next day. So as it becomes then due on only the 1st of next month, not on 30th of a month. The interest period only is 1st to 30th. So everyone make it clear, because if you, this question may arise for your loan type lending, where you take interest every month. Even it is securitized, this type of question will be arising. So you have to make it, the due is next month, so that you will have 3 months after that. Otherwise, the first month itself, when you are reporting, you have to report it as a first bucket. In the first bucket, it is an NPA. Sorry, it is under red flag. So this caution, everybody please take into. Sir, one more thing. See, this credit information companies, still now, all the companies have different formats. Different formats in the sense, more or less the data will be the same. Might be one data different from each to other, one to other, and positioned in a different place. As far as this is, as far as to the consumer loan template only format, but for commercial format, business loan format, everything, all the companies, 4 companies which RBI has asked to register, it comes only in the same format as CIBIL. They follow the CIBIL format. I request the association and the members, team members, to kindly take it forward to rectify such defects and make it one reporting format or at least one reporting firm. See, let them share with other, among themselves. The credit information companies, let them share among themselves all the details and charge the client something, some amount extra. We will be able to pay. But compliance, submitting report in different formats, it will be a very hard thing. For sir, I think for commercial it will be okay, but other things, to my knowledge, it was not accepted. I see. No, for still last quarter, it was not accepted for me. Fine. I will ask them. So fine. Any questions, any clarifications, you can ask me. To my small knowledge, I will try to clarify. And one more thing, this FinGate 2 portal was newly organized, and all the companies would have got a mail to re-register your things. That you can click the mail link there in the mail, and you need to use the forget password option. Then it will ask for the new entry of the new password, everything, and you can enter it and go and load all the details which you have already given. And this seems to be somewhat easier. This FinGate 2 portal is somewhat easier to, they have rectified a lot of errors in the previous thing.
Hello, check. Respects, good afternoon. A few weeks back, Dhani Loans, India Bulls company from Delhi, was in the news. So they have given loans to people who have not applied for the loans. So how can companies mitigate this in the future, and how can consumers themselves make sure that they don't, a lot of people were checking the CIBIL and they found out they have not applied for a loan from Dhani Loans.
See, this is something internal to that company, which they have misused the data they might have or they have got from somebody else. This is the issue everybody will be facing in this tech field. See, online lending, digital lending, everywhere these issues and many more issues which we have not seen will come forth. See, that's what, and I think they will be, if question is raised or reported to RBI or other things, they will be taking action, surely. See, they will not be having any proof. Internal manipulations and cooking up of records to achieve certain norms or something they might have done.
Hello. Yeah, I think to add on to that, it's pretty a common problem in India today for the last 6-7 months or so. It is surely because of certain NBFCs that kind of take money from another NBFC, or certain banks kind of provide to NBFCs of sorts. You'll tend to find that the lending is from different set of people or different set of banks. Right, it's a very common problem. We've been seeing that on Twitter for the last few months now, and RBI does know this very well right now. So the other day I was speaking to Shri Dinesh Khara from SBI, and even he knows it really, really well that certain problems of this sort happen. The only possible way to kind of solve such an issue is surely because that a certain NBFC directly kind of gets to report that I'm lending to so-and-so and not like cross-lending of sorts. That's one. The second way to solve this is getting the banks into it. So till date, the big banks right now do not participate in direct lending, right? So banks can have certain portion that they give to the NBFCs of sorts, and then they lend it. Getting the banks directly to lend it eventually would kind of solve this problem, because the bank's books are now exposed directly to the lender of sorts. But that's a long way, which is what we are solving at FinSire. And the next few months, we hope to kind of get it to the limelight of sorts, that how lending can be kind of, shown in the right way of sorts. Digital lending in a sense.
Sir, adding to the point, see, this sort of mischievous things can be avoided if the ESIL things have come now. As per RBI, it is mandatory for the asset reconstruction or auctions like that thing and all. They have an option of digital signing and maintaining the records of the agreements or whatever it is done. And they take the confirmation from the other side party that they have also borrowed it. If it is extended to everybody, say like what I said, how to prove a promissory note taken in the digital form I was telling earlier. If this ESL is being utilized to render this job, it will be very efficient digital lending and time saving, and this sort of proving of things, whether say I have lent, I have not taken, these controversies will be excluded. So like say registering a property, we have a title deed. It is like something registering a promissory note. So this norm I think will help, and our association can pursue the possible feasibility and how to implement this.
Sir, regarding the CKYC, my question is regarding the CKYC. Every NBFC is required to file KYC data of customers.
Yes, yes.
But before that, we are doing business with only person who are already a bank customer. We are.
Yeah.
So it is our. Can we exempt ourselves that this KYC has been already done by that banker?
Sir, one thing. Tell me.
How will you verify whether that? No, we are doing with only bank customer. We are taking bank account details and checks. So he is a bank customer. So before our duty, it is a duty of the bank to take CKYC.
But how will you check whether that number is a valid one that was been provided by the customer? That is the question. Is there a mechanism to do that?
No, sir, that's why I am asking. What is? Can we exempt ourselves that this is a bank customer and he has already done KYC? Without KYC, bank will not open account, and we are taking checks and bank statement, passbook, etc. So it is sure he is a bank customer.
Sir, it is a very much valid question. See, when you apply for any mutual fund, example, you are an investor, that company reports. See, as a businessman, we will be into lot of things, having multiple bank accounts, partnership, business bank accounts, and everywhere our name and other things will be keeping in the KYC, CKYC records. Say almost as an NBFC, we are an investor, we will be having demat accounts. See, everywhere this CKYC is being updated and all the KYCs are checked. See, a system could be implemented that once a customer gives a CKYC certificate or a number, the mechanism could be developed and authorized by the RBI that with that number they can verify the physical data available, presented by the customer or the application details, whether it is correct, address is intact or it is not changed. If any deviation is there, then the company can upload. If that option is given, it will be very easier.
No, I accept your contention that since he's a bank customer, he has got a CKYC. But then you need his CKYC number and you need to check it whether its number is matching his data. How do you do that? You can verify. If you are part of CKYC, you can verify. The only labor is saved that if he's already got a CKYC number, you can just check and I don't think government will allow multiple numbers. It's going to have only one number.
Sir, it is only one number. The process of uploading all the details in a detailed way, see for PAN, if you give the PAN number, you are getting the
I get your
detail.
point. You can upload only additional data. Number will not change. Like Aadhaar, one customer, wherever he goes first, whether it's a bank or his finance company, and if he's registered as a CKYC holder, the number will be valid for his lifetime. Only you can do is, as he says, you can load additional data. Aadhaar number was not there, you're loading. Some other voter ID card number you are loading. Some other details you are loading. But numbers will not change. That's why.
Sir, I agree with this point because, see, one problem occurs. See, for Chennai, CHENNAI should come. An operator may key in there in another company, CHENAI. If this comes for the your name gets varied. Then a question rises. So, like this, some errors. This for an example I am saying. See, these sort of typographical errors can occur when multiple people are keying in the data. What's that? Yes, sir. Yes. Yeah. Yes, sir, I understand. Sir, I understand the problem. See, once I am having an Aadhaar card, what we are doing, we are uploading the Aadhaar number to the portal, getting a digital signature or a OTP confirmation from the client and verifying whether it is a valid one and what are the details mentioned in the Aadhaar, it is true or not. Whether any forgery has been done in the Aadhaar card. But why you need, in CKYC part, you are asked to upload all the details. The company, CKYC, whether it stores or doesn't store, it is a different issue. But unfortunately, if it stores and any mistake happens, my entire data will be changed. Which after fighting with a lot of submissions, I would have got my passport, PAN, Aadhaar, everything correct to coordinate in a single name and other things. See, this error could be avoided. See, I don't know, I even have said to RBI people about this functioning is not wise and other things. But these regional office peoples, they are helpless. It should be taken to the finance ministry or at the higher level. That I think our association can take it and rectify this multiple reporting or multiple compliance factors. Say everything on a single window, like licensing for, government says licensing for an industry, opening of an industry at a single door step. Like that, this also customer verification at a single door step. Why, when all the data is with the government, why an NBFC operator need a third-party application or a software vendor or a service provider and pay him a fee and go and verify.
Sir, I have one doubt regarding continuation to that. The format that you have mentioned, is there a column for a CKYC number there instead of Aadhaar?
No, it is not there. No. In the reporting
But
format,
in the reporting
they have
format,
no
they have
number,
not mentioned
CKYC numbers.
They have not asked for that.
In credit information reports or anywhere, RBI reporting, nowhere CKYC number is being asked. But we are asked to submit the details.
I vaguely remember when this first CKYC was introduced, we were told that the data person will be given a unique ID number. If he's not given, then I'll give one example. He takes loans from 4 companies. 4 companies feed in different names. Each customer, each borrower will have 4 different IDs and each data banks. I think we were told that they are going to give a 12 digit unique number, something like that. It is there.
What he raised is, why you ask many times to be keyed in. See, when I come to you, you key. When I go to sir, he keys in.
Then again, we'll proceed in a systematic way. First is, if I load the data, do I get a unique number or not?
Yes, sir, your number doesn't change.
If I get a number, then I can only feed data in the same number only.
Sir, if mistyping or typing error is there, my data would be changing, no?
No, if the customer comes with a number and I am changing, suppose his address has changed.
I can,
he says my address is changed. So I'll go the same number, same account, that is his ID number. There I will change his address.
No, sir, sir, one thing, based on these arguments, if there is a system like verifying Aadhaar, instead of keying in all the data, it would be fine.
No, Aadhaar also, there is change of address and all are permitted.
Sir, that is permitted. So that you go and do it separately. Not a finance company does. Then why for CKYC a finance company does?
Aadhaar, because for Aadhaar, the government has got a unified authority which is doing that.
Yes.
But for CKYC, the government has permitted all the NBFCs to do that, and banks and NBFCs are permitted to do. So first, as a borrower, as a citizen of India, I must say that why you allow 100 finance companies, 100 banks to change my data or feed my data?
Yes, sir.
That should be the first question.
Sir,
then.
that's what I'm saying.
That should be the first question then. Because 100 finance companies, 100 banks are authorized to change my data as a borrower.
See, there is one...
So my data is open to manipulation.
Yes, sir. That's what I'm saying. That is the problem. Sir, CKYC, there is one more additional concept they are asking for keying in. That is, I have keyed in the number. My NBFC has keyed in the data. That data they are capturing. I have lent a loan. I have lent a service interest to, I have a service interest with that customer. So I am keying in. That data they capture. But for that, entire data need not be keyed in. No. You are, say, I am coming to you for a borrowing. You key in my data, total. What you gather from me. Because of tracking of who has borrowed from where. But for that, this idea is not good because as manipulation of data or error in data could occur. If it is fine, get the CKYC number, key in that, so much amount has been lent, it is fine. For that reason, if CKYC is to be registered alone, then it is okay. We agree.
Sir, thank you very much for your
It's,
time.
I think,
you have given us plenty of food for thought, and I think within the association we'll have to discuss this, and if representation is required, we can do it.
Thank you.
Sir. Thank you. I request Mr. KL
Thank you
Parameswaran.
everybody for listening me very patiently, and kindly bear with me with any mistakes or things I have come over.
And Mr. A.R. Arnachalam from Coimbatore to present the memento to the speakers.
No, this is the first thing I initially said. Even I would have said something wrong.
I would now like to introduce the speaker for our 6th business session on human resource management. Mr. A. Ganesh holds a bachelor degree in mechanical engineering from Tyagaraja College of Engineering, Madurai. He started his career with the Shriram Group as an executive trainee in 1995. He has been working with the Shriram Group for the past 27 years and possesses extensive experience in the financial services industry. During his stint with the Shriram Group, he has shouldered various responsibilities and worked in several key roles in branch operations, HR, and training. Currently, he is one of the governing council members of BFSI Sector Skill Council of India, an initiative of NSDC. Sir, I welcome you to please give your talk.
So good evening, everyone. It's indeed a great pleasure and privilege, rather, to be among all the veterans of the financial service industry. And in fact, rather, I should thank our federation for taking up HR as one of the subject among the business subjects, so which generally doesn't happen. But I should be thankful to the Federation for having considered this topic as one of the core topic of the entire proceedings today. Friends, just few lines about NBFCs. As you all aware, NBFCs today, from day one, it has been treated as a it's unwanted entities. It's, in fact, so. But as you all know, NBFCs play a very vital role in nation building, in financial inclusion. In fact, it plays a very significant role in extending credit facilities to the unbanked by playing a complementing role to the banking and financial services sector. In fact, when we talk about NBFCs, the buzzword which we always remember is the last mile connectivity, which otherwise the traditional, whether it is a traditional banking system or a modern banking system, they could not achieve this last mile connectivity, whereas as NBFCs, we are all could achieve it in the past decades and also going forward. So when we talk about this last mile connectivity, in fact, the first thing which, as a HR person, it comes to my mind is the people. Because without people, the last mile connectivity is something which is not possible today. Of course, today, in fact, there are a lot of new things which have come up in the rural business correspondents with whom the banking sector has tied up to extend the banking facilities. But of course, I'm not sure how far it has been successful. I'm not very sure, but end of the day, it's not audible. End of the day, if you look at it, it is the people. It is the people who take the credit to the unbanked society, especially the NBFC people, are they people who are ensuring this is okay? Yeah, I'll switch off. Okay. So it is the people who takes this last mile connectivity to the unbanked society. So, next slide. So, in fact, of course, a lot of NBFCs have carved out their niche business areas, like commercial vehicle finance, gold vehicle finance, but end of the day, all these specializations are achieved only through the people. So, when I talk about people, the first and foremost area which I wanted to cover is on the recruitment. How do we identify these people? In fact, all of us as NBFCs, if you look at it, we don't get highly educated, or we don't get highly, flashy people who can talk nice English, who looks very good. So we don't get such kind of talent in the market. So the recruitment is the biggest challenge which any NBFCs, rather, whether it is big or small, any NBFCs, they face the recruitment challenges. In fact, today's generation, if you look at it, their expectations are something different. In fact, the traditional recruitments, those days have gone. You place an advertisement, there are n number of people queuing in, and you have an option of conducting an entrance test, and you had a group discussion, you can have a group discussion, and out of the group discussion you can select some people. Those luxuries have gone. Probably in NBFC it is not at all possible. Probably banking in some of the banks it could be possible, but in the NBFC sector it is completely ruled out. So those luxuries have gone for all of us. So the biggest challenge today, the talent would like, they would like to carry their growth in Swiggy and Zomato, but not in the organized sector. That's the very unfortunate thing, because they feel that working in Swiggy and Zomato gives an entrepreneurship attitude for them. They feel that they can choose their time, they can choose their nature of job, or they can choose number of clients depending on the earning potential. They can work. So the kind of flexibility what they get in these kind of companies, they feel that the organized sectors will not be able to offer it. So that's a big challenge. So today, the current generation, especially if you look at it, see, the biggest challenge for any NBFC is to recruit such kind of people and retain them over a period of time. So once we retain it, then the culture comes into the picture, then the retention becomes better. But the biggest challenge is at the entry level, which as NBFCs, all of us face this issue. So people expectation today, if you look at it, they expect flexi working hours, they work, and thanks to this COVID, again it has spoiled further. People expect work from home, and people expect hybrid work culture, and sitting at home, people apply for multiple companies, they have multiple offers at the same time. So it's becoming pretty tough in the days to come. And today's generation, as I said earlier, they would like to be an entrepreneur in whatever they handle. So probably our people management is going to be tough in the days to come. In fact, that we should move away from the traditional way of recruitments. Probably, something like, freelancing is something which is picking up. So probably we could identify some areas where we can just outsource it and we will ask for the deliverables. So that is one kind of model which people can look at it, see practically how it is possible. We are also the company where I am working, we are also experimenting it, but it's a long way to go. But we have to adapt to the new gen expectations. Here I could see a lot of youngsters from the business community. So I'm sure they will also appreciate the kind of challenges, and of course they also have the same mindset. So this entrepreneurial mindset is something which we have to play around. So partnerships is something which we can think of. Instead of treating them as an employee, we will treat them as partners, and sharing the whatever profit or whatever it is. That could be one of the model which we can look at it. So there could be many options which we'll have to think. Only thing we'll have to move away from the traditional approach and move towards this kind of options. One thing which all of us should watch out for is the apprenticeship. Today, in fact, I am one of the governing council member of BFSI Sector Skill Council of India. In fact, this apprenticeship is something which they have been putting heavy pressure in the last 2 years. And government is also behind all the companies to recruit apprenticeship, because earlier apprenticeship was meant for only factories and industries. Today, only diploma holders and ITI holders were eligible for apprenticeship, and today it is extended to even graduates also. So, in fact, if you talk about rule book, any companies which has a manpower strength of more than 30 are supposed to recruit apprenticeship in their organizations. How many of us we do, not sure, but many NBFCs have, many big NBFCs have already started recruiting apprentices and apprentices. In fact, if you look at it, there are some good futures. No, I'm not trying to market on behalf of BFSI, but let us explore, because having got challenges in terms of recruitment, I thought it is a good opportunity for you to understand as to how this model works. In fact, 30 or more employee strength is actually obligatory. We have to recruit apprentices. And the eligible strength which we can look at it is around 2.5 to up to 15% of the total manpower strength we can recruit as apprenticeship. The good thing is that the first 12 months, whatever stipend we are paying, the government is reimbursing the stipend cost. They say about 25% of, sorry, it is actually 2.5 by mistake, it is 25% of the monthly stipend or 1,500, whichever is less. So you can take it as 1,500 per month we get as a reimbursement from the government for having engaged apprenticeship in our organization. And of course, if you are exceeding 2.5% of your total manpower strength, whatever stipend you are paying, if that you can set off against your CSR liability, corporate social responsibility, which every company is supposed to spend some money. So you can set off against the CSR liability also. The biggest challenge is, again, see, everything is fine, numbers are fine. Yes, we can go and recruit apprentices, but the problem is supply. There is a huge demand, but the supply is a big concern. In fact, many forums of sector council, in fact, I have expressed our concern. In fact, BFSI Sector Council organizes a lot of Rozgar Melas across the country. But if you look at it, hardly about 4 to 5 people will attend. So in fact, I have represented to the government also that when this is the status of affairs, then how can you expect organizations to recruit apprentices? So the biggest concern, biggest problem which we all of us have today is the supply side. The supply of people. People are not available to get into this kind of profile. There are people, in fact, there are a lot of unemployment, everybody is talking about it. People are available. But taking up our kind of assignments, completely out and out field, completely talking about only customer language, especially if you are representing a trucking industry, the life of the employee becomes tougher and tougher. There are some organizations who say that you should go under the truck, you should go and take the chassis print of the engine number. So it's very rough and tough job which nobody is interested in taking up this kind of assignments in the current generation. So the supply side is still the concern remains. So apprenticeship is something which all of you can experiment it. Of course, this pandemic world has really has given a tough challenge to all of us. As I said earlier, the way we look at people has to change. In fact, our organizations, our employee, we cannot be looked at as an employee, we'll have to look at as a talent. Hierarchies in the organization have to become network of teams. It has to work together as a group of team. Competitors will become ecosystem collaborators. Organizations have to become human, otherwise we cannot survive with this kind of challenges. So the pandemic world has really given us a tough time in making the employees' life experience more meaningful and enjoyable. So this is one of the factors which all of us have to keep in mind. Coming back to, now I've switched over from recruitment challenges to training challenges. This is again a biggest concern today. Last 2 years we have been seeing, in fact, my own kids, the person who was, my son who was scoring 95, thanks to online classes, it has come down to 60 now, marks. So that's the level of online education. One good thing in the last pandemic is that our company's training costs have drastically come down. Literally it is zero cost. Because when you start conducting a training, normally what happens, you will have to go for a big hotel, you will have to arrange for a stay, you will have to arrange for 3 times food. All those costs have come down. So while costs have come down, but the level of knowledge what we could impart has actually literally has become nil. So training is something which is going to be a biggest challenge. And today's generation, believe my friends, nobody wants to sit long hours. You cannot expect them to sit more than 2 to 3 hours because it's becoming a very tough challenge. So what is the alternative? What is the way out? So the only way out is that whatever training materials you have, make it into small pieces. Micro modules, micro videos. Make it into small pieces. Circulate it them. You have a lot of social media, Twitter, social media, WhatsApp, whatever method of communication you have, just communicate to them. After communicating, whether it has reached the audience is something which we will have to check. That is the only thing which we can do. So the assessment part is something which is going to be very crucial. Today, developing a micro module, developing a mini module is not a big challenge, which we can always do from a training perspective. But we'll have to test it as to whether they have really studied or not, whether they have understood properly or not is something which we'll have to look at it. One suggestion could be a random sampling method. In India today, in fact, the COVID management is much better. It is because of only these traditional statistics or random samplings, whatever. Probably the scientific sampling would help us in understanding how effectively the students are, how effectively the employees have understood the products and process of any organization. So training is something which I will have to change our approach. Then coming back to performance management, recognition, retention, these are all which everybody is aware of. In fact, my personal experience is that fortunately in the NBFC sector, we deal with only numbers. There is nothing called qualitative. Everything is number based. So for any assessment of an employee, it is very easy for us to quantify in terms of whatever job he is doing it, whether it is a support function, support in the sense back office, whether it is a back office function or whether it is a field function, anything and everything can be quantified. So one good thing with NBFCs or rather banking industry is that the performance can be measured in terms of numbers. So for any employee, if at all you look at recognition or if at all you look at rewarding them with incentives, the job parameters have to be quantified. In fact, for us, the only activity what we do is lending and recovery, predominantly. When you talk about lending, advances you quantify what is the minimum number you expect him for the kind of salary you are paying. That you have it as a threshold efficiency level. Anything over and above that, you recognize him with an incentive. And similarly, collections, you put a threshold level depending on the market situations. If you say that today's market supports 100% collection efficiency, you put a threshold efficiency of 100%. If the market is pretty bad, you say 70% is okay for me, put a threshold efficiency of 70%, and over and above that, whatever he achieves it, go for rewarding him with an incentive. So this is something which we can all of us easily do it. There is no scientific rationale behind it. In fact, there are some NBFCs who get into cross-selling. Cross-selling also can be recognized because he gets a fee-based income for the organization where he works. You can pass on certain the benefits to the employee. That is another way of rewarding the employees. So the only summary on this part which I would like to talk about is that keep it very simple. Don't have a multiple rocket science kind of calculations for any employees to have it as simple calculation. The employees should be able to calculate it on their own. So self-evaluation is something which is very key, very important in designing the whole incentive scheme. So self-evaluation, employee should be able to see what he is earning, employee should be able to visualize as to what is his potential and how much he can go up to is something which we'll have to keep in mind while designing the incentive schemes. Of course, this pandemic has again taught us that the difficult areas, in fact, pandemic, there are many people who find it, if customers were not paying on time, so probably those things we'll have to factor in whenever we design the incentive schemes. So once our incentive schemes are in place, once we identify the right talent, once we give them an entrepreneurial mindset to an employee, then the retention is much, much better in any organization. So that's the thing which I would like to summarize as far as the retention part is concerned. This is something which all of us have to watch for. New wage code, which is expected from 1st April 22. Still the debates are going on. The biggest challenge, if you look at it, in terms of compensation planning, they say that basic, DA and retaining allowance, some naming terminologies, these three components should form 50% of the total compensation. So your variable components like conveyance, this HRA rather, in fact HRA is another component which all comes as an other allowance. They say that the government says that it should not exceed 50% of the total compensation. So in fact the industry body is demanding at least 75%, because what will happen is that once the basic increases, your employer liability, company's liability on PF and other stuff will go up. It will have a big impact on your overall budgeting, employee budgeting. So this is something has to be washed out. In fact, the Act talks about a fixed term employment contract. You will end up in paying gratuity for even 1-year-old employee. Today gratuity is applicable for 5 years, people who have served 5 years and above. Once the wage code comes into the picture, even if a person serves minimum 1 year, you will end up in paying gratuity on a pro rata basis. So this is something which is going to have a huge financial impact on the organizations, which all of us have to watch out for. But as of now, no clarity has emerged. This is something which we will have to keenly observe it. So digital adoption is something which we'll have to make our employees to get into, because especially during this last 1 year, digital tools have really helped us to get in touch with the customers. What customers wanted, we were in a position to offer it, and our employees also were finding it comfortable by sitting at the remote location. They were able to operate the whole products and processes. So that is something which all of us have to spend some money, though it is difficult, but digital tools is something which we'll have to spend some time, which will effectively make the employees' experience much better, and you will be able to spend much productive time with the customers going forward. So in fact, many tools are available today for even on the dashboard and analytics part, how much employee is contributing to the company, what is the kind of productivity. There are a lot of tools which are available in the market, which I'm sure all of you must be already having it. Employee well-being, this is something which is going to be very crucial going forward. In fact, last 2 years, there are many companies, have spent a lot of money in terms of over and above the compensation. They spend a lot of money in terms of health insurance, in terms of other well-being initiatives, death compensation. People have lost their life. Companies have come out with death compensation policies. So when I say well-being, it is not only financial well-being, it is going to be a mental well-being, social well-being, physical well-being. So all of us have to ensure that the employees are, taken care of from all this perspective. So friends, probably I will give some time in case if at all you have any questions. So in a summary, probably these are the things, something which we'll have to watch out for in the going forward in the situation. In fact, again, the uncertainty even today, it prevails. International war situations and Asian countries, they say again corona situations are going up. So the uncertainty still prevails. So all of us together as NBFC who are actually serving the bottommost society have to be well prepared in terms of any eventualities. Ultimately, end of the day, retaining people and supporting them in any eventualities is something which, as an organization, we have been doing it and we will continue to do it. So with this, Thanks for the opportunity once again for Federation and especially Mr. Acha sir, who is not here. And thank you once again. And if at all you have any questions, I'll wait for some time. Thank you. Sir.
This mandatory apprenticeship which you said for NBFCs.
Yes, sir.
It's only for NBFCs.
No, no, sir. Any organization, sir. Any establishment.
If any organization, then
any establishments who are having 30 or more.
Correct. So in that case,
yes, sir.
A company is employing thousands of people, hundreds of people. There's a lot of attrition. Every month they're taking new people.
Yes, sir.
Anyway, they put a contract that first 9 months, which is permitted on labor code.
Yes, sir.
You are going to be apprentice, then you are going to be a temporary worker. It takes care. Then where do they default on not appointing apprentices?
No, no, sir. It has to be actually apprenticeship. What happens, sir? They expect us to register in the government portal now. Every organization has to register themselves in the apprenticeship portal, and there from the apprenticeship portal we'll have to publish as to what are the vacancies and other things. The students have to come through the portal. So that is where the biggest challenge is. In fact, many organizations have been recruiting trainees, this, that, and all, but it is not tagged as apprenticeship.
Because otherwise, it's a silver lining for the employer. Many employers don't want to take people before understanding them. So they put them on apprenticeship, probation, whatever you call it.
No, only thing, sir, we have to officially tag them, that's all, nothing else. And one good thing is that there is no ESIC, PF liabilities and all, it is only a stipend which you will have to pay. So that way companies also are saving a lot. Sir, apprenticeship is something like offering a training. In fact, they are otherwise they are as good as our employees. Only thing they have some rules like, overtime is not allowed, this, that and all, but otherwise they are as good as employees. But only thing is that the naming ceremony has to be changed. Instead of calling them as a trainee or associate or something in our organization, if we go through that apprenticeship portal and we call them as apprentice, then matter ends there. So at least we are satisfying the obligation, government obligation, that's all.
You had mentioned about the employee well-being, right, in which financial well-being. Do companies have funds allocated in their CSR funds specific for this?
Now, CSR as it is, if you look at it, if at all you spend any money on behalf of the employees, it doesn't come under CSR purview. It doesn't come under CSR purview. But specific to this, because it is again, CSR is something skill development initiative, which is a national initiative. Hence, they are allowing it. Otherwise, any expenses spent on employees doesn't come under CSR.
Is there a way to route it through the CSR, or there's no?
No, as of now, what comes to my mind is this: if you are able to recruit apprentices more than 2.5% of your employee strength, then whatever stipend you are paying, that can come as a CSR expenses.
Sure, thanks.
Sir, they say up to 36 months we can go up to. Up to 36 months you can employ them as apprenticeship. Thank you so much. I think no more questions. Thank you for the wonderful opportunity. Thank you.
Sir, thank you, sir. Please stay on the dais. I request Shri Madan Lalji Nahar to present a memento to our speaker. I think in our NBFC seminars, we normally don't focus on HR too much. Thank you, sir, for giving us your valuable time. Thank you, sir. I now request our learned speakers, Shri Madan Lalji Gundecha and Shri VGK Prasadji, to take the dais for any questions that our delegates may have. Open house sessions. Please feel free to raise your questions. Two very learned members of our industry.
We have got a panel deficiency. A third panelist is not here. Anyway, this open house is not to answer your questions. It's almost a brainstorming session where we are going to discuss practically what we are facing, the difficulties. Though we are sitting here, just that the dais is not left blank, not necessarily that we are only going to answer the questions. Members can share their experience, share any instances which are worth sharing here. Even for questions, answers can come from the floor also. So this is almost a very free session with a brainstorming. So I would like members to interact more than us. Floor,
yes,
mic floor पर रख दो.
Yeah, I am Dev Ryan, founder and managing director of NKC Finance, a startup NBFC. I want to interact regarding the recent dividend policy of NBFCs announced by Reserve Bank of India. RBI says that those companies where the net NPA is less than 6% only can declare dividend. And dividend for the current year has been restricted to 50% of the payout. Dividend payout has been reduced. I would like to know, it is our own money. We already set aside 20% of the profits as statutory reserves. Beyond this, why RBI is insisting on that? Can association take up this matter?
Your question is, why should RBI restrict? It is our own money. We have it. The view of the RBI is, most of our NBFCs take money from banks. So there is public money involved in our business. See, if your NPS go be above 6%, they feel that there is some risk to the money that is being lent by the banks. Not only our money, but also money to them. There is a view they have taken. I don't think there will be any change in the policy. We can try to convince them, but it's a very difficult challenge. And this 6% will be breached by many NBFCs once a new RBI NPA norm regulation comes into force. This is going to be a challenging time for us. So anyway, it can also be an advantage that you don't pay dividend, you improve your net worth and you leverage it more. You know, this is an opportunity in adversity. Anyway, your point, I think the Federation should take up with the regulator. And a lot of times we have come disappointed. Even this guideline on NPA provisioning, in fact, that we wanted it to be waived, but finally they have agreed to defer it.
We spoke about a lot of regulation that are coming up, in the next few months. We spoke things about standardization of NBFCs. We spoke about things that are impacting NPAs. So one general request to the association is, if a lot of these regulations can be archived in a way that's easier for members, because even while discussing, there were different viewpoints and there were new regulations that were being brought to the fore. I think it will be helpful to the members if they can be summarized. I understand there is always fine prints on how to interpret, but at least if they can be collated, just a request that it will be useful. That's one request. The other question is, if you can talk about this whole NPA and after NPA, what it takes to make it a standard loan. I think that will be useful.
Sorry, your second question, the first question, I think the Federation would be more than willing to take up and, and give a detailed information to all the members regarding the regulatory things. Your second question is, what I didn't comprehend it clearly. Can you say it again? From NPA to regular? It has to be. Yeah, I think the recent guidelines of RBI, which has been deferred that I was referring to, if an account becomes an NPA, so we are in March, if it breaches 90-day norm as on 19th, on 20th we have to declare it as an NPA. Now, that is a reason. Earlier the practice was that we wait until the end of the month. After the month end, then we declare it as an NPA. Now it is on a daily basis, number one. Second is, if it is an account is past due by 90 days, then if the customer pays one, it comes back into 60 days. So then it need not be classified as an NPA as per old norms. But now RBI says, if it once it has become an NPA, until the entire outstanding, both principal and interest is paid, it cannot be declassified. So it will continue as an NPA. I remember this was mentioned in Basel 6 norms for banks. I don't know how it has come into our NBFC thing. But anyway, we are going to be viewed as rigorously as banks. This is the new norm.
Of course, this is a very damaging regulation or compliance we can call, because, for example, 3 ड्यू बाकी है, 2 ड्यू भरता है तो स्टैंडर्ड बन जाता था. अब 3 की 3 भरना, neither the customer can pay nor I can upgrade to standard asset. So this is going to be difficult for the customer as well as for the finance company also. And many companies will face degradation or whatever you call it because of this. But I think practically this will not work, sir. I think we have to wait and see, and the RBI may relook at it. Because any default, there is no history where the entire default amount is paid in one stroke.
Our profile of customers, if he can pay the entire amount one time, why would he go beyond 90 days at all first time? These are all only one single vehicle owners, driver come owners. The financial inclusion that the government is trying to do, we are doing it. But again, elevating us on par with the banks is something very unfair. But anyway, this has been represented. Good thing is that it has been referred. Not only this NPA thing, once it becomes an NPA, you can't book profit on the interest. Interest or income on the NPA cannot be earned. Our profitability will go down. Once the profitability goes down, then the rating agencies, all these people will say, no, your profitability has fallen. Why should I not reduce our rating? Once the rating reduction happens, then the banks will become uncomfortable. They will say, there is a higher risk with you. We can increase your rate of interest, or we can even say that we will not give you any more funding. This is a challenge that can come up. I think this needs to be taken. FIHPA is taking up. FIDC also, we have been in touch with them. They said they also have taken up. The presentation has gone twice. I think, I thought someone from TTS or from Sriram would have come here. Then it would have been helpful, we would have taken it up. But I think Mr. TTS is on the committee of Reserve Bank of India. We have to talk to them and take them to the Reserve Bank and convince them about this thing.
Sir, to add up to your thing, I would like to clarify. See, many banks and finance institutions had a habit of, in the name of restructuring the loan, when it came to an NPA stage, they will ask 1 due to be paid or 2 dues to be, some servicing of the loan being done, and they took it to the normal position. See, this was the practice. Or another thing they were doing is, they give another loan to that party, fresh loan, and ask them to pay this balance outstanding. So before it become NPA. So this was the things done by many banks in the back door. And thereby now resulting into lot of NPAs and runaways, absconding, everything, scams like this. This is an unfair practice as per the banking industry. See, he can be given time or reconstruction can be made. But giving loan on another side before it becomes NPA and asking him to service the previous debt, many banks have done it by increasing the limits, ad hoc sanctions like that and all. See, there is why RBI is now forced on this and asked to classify everything as a NPA. I doubt how RBI will view on our representation.
Sir, this is something different. This norm was there for RBI, for banks even earlier. That has been brought in for NBFCs now. So if banks have done something, nothing we can do about it, and we cannot throw stones at the banks, there's nothing we can do. Regarding NBFCs, this restructuring also has happened. There is a special facility.
Sir, restructuring is allowed, sir. This is not restructuring. This is in giving another loan before becoming a particular loan becoming NPA. Then asking him to service the old debts. That is a malpractice.
That is an irregularity where we cannot discuss in this open house. If there is something done, that is a violation of RBI guide. We cannot discuss that here.
But the only difference I find here is when the government or the RBI wants us to practice the same compliance which banks are doing. In case of banks, the total NPA provision is out of tax net. But for NBFC, only 5% they allow. If they want us 90 days, let them give us also exemption. Otherwise, when you say at par you have to create provision like a bank, then give us at par tax benefit also. Here you say only 5%, there you say 100%. I think this is a strong case of discrimination, which FIDC, they are more affected because larger companies are there, but FIHPA can join them and this can make. No, when you say we are at par with bank, yes, we are at par with bank. Treat us in taxation also at par with bank. You cannot have one for other, one other thing for other thing.
What our friend is suggesting, it is not restructuring. In banking terms, that is called evergreening. Yeah, that is a different part of the story. Let us not discuss about it. And regarding restructuring, as per extent RBI circulars pertaining to NBFC, we cannot do restructuring after 30th September. Okay.
Good afternoon. I am Raj Bhandari from Rich Finance Incorporation, Chennai. Although it was discouraged in this forum, I would still like to know a few things about taking over an existing NBFC. Three-step question is, my question is three-step. One is, how do we arrive at the valuation of an NBFC? Because right from namesake NBFC, we get a NBFC with a particular book size. So what are the parameters which we look at to arrive at the valuation? And second thing is, can we conduct a scrutiny or audit where we can, arrive at all the litigations or any, illegal activities already conducted in the NBFC and absolve ourselves of that responsibility while taking over? And third thing is there a marketplace where buyers and sellers of NBFCs meet online or virtual, whatever?
The first question and second question are similar. See, forget an NBFC, any takeover, any strategic interest, even for example, a private equity comes into your company, anybody who is going to invest in the company is going to do a due diligence. Due diligence is done in three areas. One is financial, then legal, secretarial. Secretarial, you will know whether they are complying with all the ROC matters or not. Legal, you will find out any pending cases, litigations. Financial, you know the health of the company. So without doing this, nobody will, forget a takeover. A strategic investor also will not come to a company without doing these diligences. And these expenses are borne by the person who wants the money. Correct? You select your own due diligence people, you can give it to reputed companies who are merchant bankers or investment bankers who are doing these services. Or if you are very smart enough, you can have your own chartered accountant for financials, your own company secretary for that, and your known lawyer for that. So diligence is taken care. After that, diligence only do you come to valuations. Valuations, there are industry-specific multiples. For this industry so much, this industry so much, finance industry so much. So these valuations are laid by the investment bankers over a period of time through their common practices. That will prevail. Plus they'll expect some premium for the company which they are handing over. And the last question, there is no marketplace because this is not a thing, it's not a commodity which is traded in the market. There will be buyers, there will be people who are acquiring. The best people are either these brokers or merchant bankers or chartered accountants.
So after the due diligence is done, does the ROC issue a clean bill of health that, yeah, this company?
When the diligence, he is doing corporate diligence, that company secretary will give that he has gone through all the records in the ROC filings and he doesn't find anything adverse. If any adverse remark, non-filings, he will say it's a non-filing. So first he will make the company to file. All these things, deficiencies will be covered by them. He is charging for that. He will not only tell you what is lacking, he will also tell you what is deficient and what should be done. So before you take the company, you will see that all those formalities are completed. You take on a clean slate.
ROC doesn't issue a NOC.
ROC will never give. ROC will give only report what is available there.
No NOC will be given.
Don't expect anything from the government. They will never give you.
Thank you.
My question is, last 3 years, how many NBFC has been license given by RBI? So I hear that lots of NBFC are freely, and then how many license approximate has come from last?
This number is difficult to say because RBI got many offices in India, 5-6 offices. So even we will not know how many NBFCs, but Chennai also. But I think from Chennai office in the last 6 months, Chennai RBI should have given at least 5 to 10 licenses. That was 5, I was told. But we don't know how many are issued from Calcutta, Bangalore, Bombay, because there were various offices. If you ask me on a very crude estimate, I think all offices put together maybe about 50 licenses a month. Corporate houses are taking, almost all the corporate houses have got NBFC today. They've got for two reasons. One is they are in the business because business is lucrative. Second, they need it for their own fund transfer here and there, intercorporate deposits. Questions, if members have got any instances to share, ऐसा कोई situation which you have handled and which is worth sharing, what difficulty you faced, how you overcome that difficulty, or anything specific to your area.
As a NBFC, we are registered with FIU. And at FIU, we are as a reporting entity. So now a income tax mail is coming. As an entity, you have to file Form 61B. So is it compulsory for all or is there any exemption?
These mails have been received by all the NBFCs now.
Okay.
My simple advice is, as a finance company, as an NBFC, you get registered with the registering authority. Even if you don't have any transaction report, file a nil report. I've been doing that for the last 2-3 years. Every year we file a nil report. So I received the same notice from the Delhi office. Now they are sending from Delhi. No, it's once in a year you file. Once in a year. My auditor told me surprisingly how they are sent from Delhi because it's not our jurisdiction at all. Your jurisdiction is Calcutta, my jurisdiction is Chennai. But anyway, because it's a government authority and they have got a mail which is a group mail, they are sent to hundreds of mail. So what's best is you always file a yearly return saying nil. So what I did was, I said I am already registered with FIU. I took the screenshots of the last 2 years returns filed. I filed it. They have closed it. No, from where you got the mail, please give a reply that you are a non-deposit. You are non-depositing.
Yeah, non-depositing.
I am a non-depositing company NBFC. These provisions are not applicable to me. However, I have filed these returns, which are nil returns. I am enclosing a screenshot for your perusal.
Nil return of what? FIU?
If you have filed already 61A, have you filed 61A?
At FIU? Or where?
Yeah.
That screenshot has to be given. Okay.
If you are not filed, I'll tell you right to first file that 61A.
Okay.
Screenshot that you can send them.
Okay. Thank you.
Wind up or members want to share some information? Sir, Kerala yaravadu pesa virumringa? Kerala situations, what's happening, how we are doing, how we are managing Money Lenders Act. People from Andhra, any problems from Money Lenders Act, from revenue authorities, from or RTO connected, or you have solved a difficult case.
They are insisting for higher purchase.
Sir, in Kerala we are not facing much of trouble from money lending license perspective. I have a question regarding this debt rising. In the morning session, we have seen many products like subdebt, NCDs, refinancing bonds, overdraft, ECBs, CPs, PDI, etc. Is there a specific list that we have these many products available in the debt segment, and probably we need to comply with these provisions like that?
Generally, people with experience in fundraising will be able to tell you. If required, FIHPA can send a detailed report on what are the avenues that are available.
I think again, see there is no one model, one suit all. If you take ECB, you've got certain qualifications, otherwise you cannot go for ECB. A commercial paper has got a minimum size. If you don't need that amount or if you are not able to raise that amount, you cannot go for that paper. Something like what suits you. The best is your own advisor who is raising funds for you, depending on your size and your requirement and your tenure which you require. It's based on that. No general prescription will not work. thing I can share here is I think small companies of asset size up to 300 crores, 400 crores, who don't go much aggressively to the market, they rely more on NCDs, bank borrowings, something like that, private equities.
Direct assignment, securitization, these are the avenues that we normally would be looking at. Bigger NBFCs, the other products are available. Even if we go into the market, there may not be many takers for that.
And for other bigger products, you need, a competent rating also. If you are not AAA, BB, or something like that, you cannot go to the market also.
Sir, in Tamil Nadu, we are now getting smart cards after registering a vehicle or doing TO. We are not able to verify the authenticity of the vehicle. We are not able to check the photo, passport size photo or signature or chase print of the vehicle. Previously, in the printed RC, we were able to verify the chassis number, photo and this signature of the customer. Now we are not able to do that. How to do that if we want to do it now?
Yeah, this is a new situation which has come to our knowledge. In last meeting also we discussed that. We are going to take up the matter with them. For the time being, you can only search in the portal or get that BX tag register copy, something like that only can be done. But this is a genuine problem.
One.com M Parivar, you can check up in that, cross check with that. And engine number, chase number is also mentioned in this smart card. And once the TO is done, they mention the TO, that the vehicle has been done TO with the smart card. HP cancellation, they say HPTR, HPN is mentioned and HP cancellation will be done in that.
No, his concern is photo and signature.
Photo, why? See, photo you have to cross check with the Aadhaar card. You just give me a smart card, you give me a PAN card, you give me Aadhaar card. Cross check with that the name and everything is tallies, then that's fine with that. Now the smart card when this comes, you cannot fix a photo, signature. Why they hide the signature also? Because nobody can use the, nobody can misuse the signature of the hirer, that owner. Otherwise what they generally they do, brokers, அவங்களே sign போட்டுறாங்க. அவங்களே sign பண்ணி அவங்களே TO பண்ணி கொடுத்துறாங்க. That is also come. So you can, one.com is very safe and a smart card is also very safe in that. And easy to go about the job also. Except one thing, some of the RTO office, they don't punch the smart card. Once they issue the second smart card, the first card is not punched. That is also given as it is and this is also given as it is. So that difficulty is there. For that, we have to check with the one.com, then you have to proceed with that. All right, this is one which is have to be used. And they don't mention the date also which they issue the smart card. No date is also mentioned in the smart card. There no date is mentioned. Huh? Big mistake. Yeah, but you have to go only the one.com. Thank you, sir.
So from Kerala, there are a lot of companies going for gold loans. These regulating authorities, RBI and all, do they allow loans, give loans for digital gold? Do you know anything about it?
You want to know whether they can give gold loans on digital gold?
Yeah.
I don't think there is a provision for that. Of course, we don't have members here from FCA chairman is Mr. George Muthoot, who is doing aggressively gold finance. But
they haven't gone for that. They haven't gone so far.
But you tell me one thing, if I am a finance company who is lending on gold, I would like to have physical gold with me. Otherwise, if your question, if suppose I go on digital gold, then I must have a mechanism whereby I can create a lien on that. Okay, digital gold is held in. So, no, can I mark a lien in that DP account?
Sir, adding to that, digital gold is almost held in demat accounts.
Demat form, yeah.
So you can create a lien.
I can create a lien.
Yeah. Anything is in demat, you can create a lien with the NSDL or the particular authority. It should be possible, 100%.
So, suppose I got a license for that. Can I do a lending on digital gold as per RBI's license which I have obtained from them?
Sure, sure. It is
Secondly-
equivalent, sir. I have not done it practically, but gold in any form, it should be taken as gold.
No, but it's
as
not
per the
yet
rule.
there, I guess. It's not yet there.
Secondly, okay, how do we address that issue? I think NBFCs, even those NBFCs lending against gold, they have to take local pawnbrokers license for Tamil Nadu. It is like that.
Yeah.
So they take. So Tamil Nadu Pawnbrokers Act doesn't permit that. It's clear. They don't have to take state loans, state licenses. Not necessary. Then I think
So far.
Then I think if RBI doesn't prohibit, it's a good way of doing things because it saves your problem of keeping lockers, safe deposits. Lien is very easy to mark. No, but the problem is, I'll tell you one thing. Families own gold only in physical forms,
Yeah.
which has been a habit of Indian culture. Only these new age people, new techies, they all hold only in that. And it is not to be quoted on an open forum, gold is always bought by cash. So it will be kept only physically. Correct? People who are holding gold in demat form is only who buy through credit cards or bank checks and all. But this is a good, it's a good thought. If digital gold is permitted to be pledged, I think we are taking away many problems. Thefts will be, there's no
but
theft, no east.
I feel the demat, the brokerages, they should be open to do this because they let the data out. They usually don't let the data out very easily, like be it Zerodha or Grow. Very hard for them to give it out so easily.
No. The customer will come, he will say, this is my DP account, you mark a lien. Why should I take from the DP? If I sell my shares, I would only say, where is my DP? Why should I say, why should my DP tell me that I am holding the shares or not? The customer will come with his DP holding statement. I'll see the statement. I'll mark a lien by sending a letter.
Is this digital gold is 22 karat or 24 karat gold?
Physical.
Generally, there is a restriction with RBI 24 karat gold.
Yeah, it's 24. What you get on MCX prices, that gold is.
What I'm saying is RBI doesn't allow to lend on 24 karat. We have to lend only to ornaments, not to pure format of gold.
You mean to say you cannot lend on metals?
RBI doesn't allow.
That's a good point.
Is what
That's a good point.
I
That's a good point.
But is there any regulation change?
No, but then if you say, I will interpret different way. I can lend on
can't
ornaments.
lend on 24 karat.
No,
That is
that's not.
for there.
No, I cannot lend on. No, there are assayers who will give the certificate.
That's why RBI doesn't permit that. Maybe
even
that's
for,
the main thing.
No, for ornament also the same question. There's an appraiser.
Ornament, you can
There's
appraise.
an appraiser in the bank who appraises.
Ornament
Here
you can
got
appraise.
assayer who will give the assaying certificate.
It's difficult to appraise other metal.
No, I think his point is different. He says, you are not permitted to hold certain metals. So you cannot lend on that.
Yes, it's not that we cannot hold it. It is because normally there's a sentimental value is there for gold. So this RBI once says that it can be these ornaments only can be pledged. That's because they will take it back.
The point we are discussing is, can we lend on digital gold?
Yeah.
Digital gold is held in 24 karat form. So if you want to lend on for a 24 karat gold, is it permitted as per regulation? According to Sriman, you cannot lend. So that is one, okay, let me complete. The second point is, again, in case of default, you have to sell. A process has to be set in place where you can sell, like you sell shares pledged to you, you sell them off. Like gold is held in the demat form, you should be able to sell and there should be people to buy, and then the formalities for the sale process has to be established. If it is already established, you can go ahead. Sorry, you were saying
Sir,
something.
in fact, this sovereign gold bonds is definitely in the form of
But that is for banks. That is for
segment.
banks, not
Demat-
for lending. That's not money. That is for banks.
So that is also basically public can also subscribe into, sir.
Yeah, you can
Public can also
subscribe,
do that.
but they are not being lent on that. Here we are lending. There we are buying and holding them.
I can actually mark this particular SGBs as my collateral. I can give loans against that. Probably one need not to take that as a gold loan segment. I can do it otherwise also as a gold against security,
No,
right?
there's a difference, subtle difference what he's selling. See, he has got a demat form. So there's a DP holder. You can mark a lien. Here you're holding a certificate.
Yeah.
There's no provision for entering endorsement on the certificate.
Okay.
If I am a certificate holder,
Yeah.
I pledge it with you. Okay? You don't have any official marking on the certificate as that is blocked somewhere. Tomorrow I go to my bank and say, I lost my certificate, I want to redeem the gold.
Right.
I can redeem and go.
Okay.
So where is your safety of that endorsement, which is available in the case of the online, this DP holding, demat. Here it's not, he is not demat, but it's not physical, not demat, it's in a third form.
That's true, that's true. So there are ETFs also. Probably one can look at that.
See, earlier, it is something like earlier you used to get loans on physical SAR certificates, correct?
Yeah.
But you used to have a TD form.
Yes.
So in this gold certificate, if there is a provision which says that it is transferable, and if you take a purchase form, I don't know because I have
That's
not
true.
gone through that, you
That's
can
true.
examine that.
Probably, yeah.
If gold certificate, they
But even
permit.
ETF can be done like that because similar like a shares only,
Yeah.
that is credited to our demat
No,
account.
but again, ETF is in demat account.
That's very true.
Here you are holding a physical certificate.
Correct.
So this is third form.
Yeah.
Physical gold, demat, and physical certificate.
Yeah.
So this is the third form you're talking.
Thank you.
Sir, a question regarding vehicle loan. We discussed about registration and how the registration can be checked through Vaughan, and several state governments also have websites against which you can validate. Is there something similar for vehicle insurance that as hire purchase financiers that we can validate against?
We didn't understand what you wanted.
So for the vehicle registration, today we are able to validate it with portals of state governments, right? So you can go to different state governments or platforms like Vahan.
Achha, you want to know the validity of the insurance?
Yeah. But
Whether
for
the certificate is genuine or not.
Correct. But for vehicle insurance, is there similar?
Jangda sir, Gautam sir Jangda, you can reply. He wants to know, a customer comes with the insurance certificate in hand.
Insurance.
He might have done the insurance, he would have returned the check.
No, there's. But whether the insurance is valid.
Insurance is linked to Vahan, sir.
No, 1 second. His question is, insurance is linked to Vahan. I'll tell you one thing. I do insurance today for my because many insurance companies are seeing these fellows who are brokers who are doing the insurance business, they want business. நீ குடுப்பா செக்க குடிப்போ நான் இப்போ போலீஸ் போட்டு கொடுத்துட்றேன் நாளைக்கு இன்சூரன்ஸ் ஆஃபீஸ் சாட்டர்டே லீவ் சண்டே லீவ் நான் மண்டே தான் பேங்க்ல போடுவேன் வெட்னஸ்டே தெரியும்.
Sir, the policy is not issued till the check is cleared.
Sir, they are issuing. Once the check is given, they are issuing. Earlier they used to give cover notes.
I think Madan Lalji Nahar, our insurance specialist, can address.
Thank you very much, friends, for giving me an opportunity to address these lovely people before me. Madam, you too, all of you. Insurance, if a check is given and later it is dishonored, that means there is no insurance. And no claim will be entertained. So this kind of cheating which has been done earlier is not the way, and financiers have got to be careful, and they can do one thing. They can, if they really want to know whether it is in force, in that case, we as the insurance brokers can help you. Thank you.
His reply answers the question. The insurance company is not liable if the check is returned. You cannot say that, boss, you have issued me a certificate. He says, it is check subject to, you also give a receipt. The customer says, you are going to receipt. Bottom note says, check subject to realization.
Original question was whether like Vahan, insurance policy, can it be verified? As far as we recollect, I don't think there is any website where you can go and check the insurance. But it is a good suggestion if it can be represented to GSC, but all these things have to be uploaded. That's a good suggestion. We can write to them. But as of now, it is not there.
Yes, I think, yeah, we'll, yes, sir, so thank you very much, sir. We had leading industry veterans with us. They have answered the questions. If anyone has any further questions, they can write to us at FIHPA1972@gmail.com and we'll try and put it forward to them. Suggestions also is what they recommend. Thank you, sir, for your time. Thank you. Thank you so much. For the final business session, we have Mr. Kailash Malji Dugad, Executive Chairman, Deccan Finance Limited, past President, SIPA and FIPA. He has an experience of over 60 years in the vehicle finance industry, and we request you, sir, to sum up the day's proceedings.
Friends, at the outset, I would like to congratulate President FIPA Meghraji and Secretary Dinesh Kothari for organizing this excellent day's program where we could not only go back, but we can come and see, could feel that what is in foresight, what we should do as an industry, looking into the entire perspectives which are happening in the industry. I was also very happy in this program we have got veterans and also youngsters. This is what it is, because youngsters are the future of tomorrow, and therefore I'm very extremely happy, because when I look back, FIPA and South Indian Highway Association, FIPA, which is almost now more than 50 years old, how this was started, and how veterans like T.S. Santanam, Sogam Rajmutha, and all the people brought it to the level today with what we are. And we had lovely conventions across the country, right from Cochin to Kanyakumari, or Cochin to Kashmir. We went up to Kashmir. And Calcutta, also we had beautiful conventions. Om Prakash is there. Today, we had very interesting sessions right from the beginning. I'm required to sum up because somebody told me, I think Ganeshan was telling, that more than 2 hours and all that, people don't want to sit. In normal, he said, if you want to be very effective in any kind of discussion, training programs and all that, people don't want to sit for more than 2 hours. But I'm very happy that even after lunch, more than 2 hours, all of you are sitting very and intensely participating. But I would like to follow Ganeshan and to see that I'm as short as possible, because you have been going through the whole thing. But still, I've been asked to do the duty to have a summarization. So as I said, we had a very interesting day, right from the morning. A very experienced person, Anandan, Anand, brought out very well, beautiful thing, equity versus debts. And right in the beginning, he very rightly said, it is not equity versus debt, it is equity plus debt. So both the things are important, equity and debt. And two people, Mr. Prasad, so I've been knowing him for the last almost 4 decades, and is one example how one can grow. So I think it was a great inspiration for all of us, and he brought out very practical things how to grow. And he could make it out very clearly that equity is also important as well as debt, and both should be combined. And he was very clear that actually net worth has to increase, and you have to work for increasing your net worth, then only you can grow. We had a very dynamic person in Deepak Dugar. I feel happy and proud that Dugar clan is growing. And Deepak brought out very interestingly that how a small NBFCs can grow. That was a very, one example was from Prasad, that a small can grow very big also, because I think, sir, you crossed 2,000 crores, if I'm not wrong. So a small can grow, what is it? Okay, that is why I said 2,000 crores to be on safer side, but I can say nearing 3,000 crores now, with 2,800 crores is a. So here is one example. He has been amongst us, and he has grown from a small company to a very big company. And whereas Deepak also brought out, yes, I think I'm very happy about it. Deserves a big appreciation. And why? Because all of us can get enthused about it, and we can also at least try to emulate the Prasad to that extent. Deepak brought it out, that question which somebody raised, what kind of, how can we raise debts? I think Deepak brought it out very well. He made out a complete list of debts which we can, various types of debts. Not only that, BC model and co-lending, the VC model. So without much capital also, these are some of the areas where we can increase our business, we can grow our business. So overall, what I could feel is growth is very important if we want to survive in this business. Prasad made it very clear that today, RBI and anybody in the lending business, they want that you must grow. You cannot continue to remain small. I remember we used to say small is beautiful for the cases of small industries and small this thing. But now I can very emphatically say that as far as this, in this business, we cannot continue to remain stagnant. We cannot continue to remain small. We have to grow. We have to become bigger. Then only we can survive. Because as NBFCs, compliances are almost same. So unless and until we grow, we will not be able to make the compliance. That was the next session where this was brought out very well by the Mr. Matan Lal ji and Deepak Mehta, who could bring it out, the process, how we can convert ourselves very well from partnerships and proprietorship to NBFCs. This is one area where I will like to emphasize, because a few of us here are still continuing to be proprietors and partnerships. But I think the time has come if you want to survive in this lending business. Because I remember most of Sokarpet friends and most of our community people were forerunners in the lending business, particularly pawnbroking and financing. But today, we are lagging behind because we have not changed ourselves. Pawnbroking is in a modified form, is today what Muthoot and Manapuram and a lot of companies are doing. Similarly, finance, we were doing in a small way, individually, and doing very well also. But still today we have to, now things have changed. And we have been lagging behind because we have not changed. Therefore, the biggest lesson we must takeaway we can take from this conference is, if we want to survive in this business, we have to grow. And growth is only possible converting ourselves into an NBFC from a proprietorship and this thing. It may look difficult for the time being, but this is the only way we can grow, and growth is important. Anil Doshi brought out the various layers which all of you know, and he also brought out what kind of compliances are required very well. Then we had a good presentation from Novak regarding the changes which are happening and why technology is important, how technology can help us. And today, the entire business is being done technology-driven. And therefore, those who are still lagging behind technology, we have to change ourselves and see that we fully entrench ourselves in the new technology. The same thing was by then digital technology is also another area where it was emphasized by another speaker. Mr. Jagar brought out regarding CYKC. He also brought out a very important point, because that was a little different than morning we were talking what kind of leverage we can do. Though technically we can go up to 1:6 times, but in practical parlance, Prasad ji said that 1:4 times practical. But Mr. Jaikar came to 1/3 and 2/3. It's almost 2 times only. So I think it was very safe. But I think growth, if you do very diligently and properly, 3 to 4 times should be a good norm to grow. Yes, today we had a very, if at all we want to grow, I think human resources is also very important. This is an area where some of us have to emphasize, for growth, we must have good people with us. And that was very well emphasized, Ms. Ganeshan. And human resources, how we have to give good training, how to employ people, how apprenticeship is also important in NBFC. This is also very well emphasized, Ms. Ganeshan. And I believe that many of us could not grow because we did not give due importance to human resources. Good human resources, if you want to grow, we have to take it as a team and grow. So these were the very important takeaways of today's session. So ultimately, I will only sum up saying that growth is important, and growth is only possible if we convert ourselves into NBFCs. To my friends, many of you are here, you are trying, the opportunity to try to register yourself as an NBFCs at the earliest. In October, you got a time. The Reserve Bank may extend or may not extend. So let us try to see that how many of us can convert ourselves into NBFCs. If necessary, come together, form a group to see that at least you get into the NBFC mode. I was also inspired to become an NBFC because I remember Mr. T.S. Santanam, when we had a convention in FIHPA in Chennai, he very emphatically told that we have to convert ourselves into NBFC if we want to grow. So it's a long back. We could not take it up seriously, but the time has come that for the entire federation, this today emphasis on NBFC was the right way to emphasize that NBFCs has become a very important aspect. Federation of Indian Agriculture Association doesn't say that it is representing only proprietors and partnerships. It is very open, and therefore today I think particularly small NBFCs have to come together and see that we grow and this business grows. Thank you very much. I had a very, after a long time, I could meet a lot of friends, old friends and all that. Mr. Prasad, Mr. Purnachandra Rao, all that I've used to meet them. So I'm very, very happy. So once again, I thank the organizers for giving me the opportunity to be with you all. Thank you very much.
Thank you, sir. Please wait on the dais. I request FIHPA President Shri Meghraji Lunath and Secretary General Dineshji Kothari to give a memento.
Thank you, sir. बहुत wait कराया.
I request Dineshji Kothari to give the vote of thanks, please.
Just take a couple of minutes. We have just picked up the flowers from various centers and areas and presented in the form of a bouquet to you in the form of All India NBFC Convention. I think you would have liked it. Say yes or no? Thank you, gentlemen. Thank you, ladies and gentlemen. It's a type of convention today what FIHPA has taught. It's NBFC convention which we have organized first time in FIHPA's history. Challenges, solutions, growth. This was a theme of the day. Based on this theme, we have deliberated, discussed, and all the subjects, and which was well presented by various speakers and moderators who were mixture of veterans and youngsters, mixture of experiences, and showed us the way of innovations. So I thank all the speakers and moderators of the day for presenting their presentations on various subjects. And some of the speakers have come from Bombay, Coimbatore. We all thank you very much for giving their time in spite of their busy schedule. I should thank all of you. There are about 160 delegates physically attending this convention today. First, when we started our plans, we thought that it would be, we'll stick to 60 to 75 since it is an NBFC convention. But then, when we contacted all the presidents, secretaries, and the office bearers, we got very tremendous response from all the regions. And we touched 160 physically and virtually about 110. So totally 270 delegates for our convention. Thank you to all the delegates who have attended today physically, and thanks to all the office bearers, presidents, secretaries of regional associations. Thank you very much, sir. I think we should thank our sponsors of the event. Shriram Transport, Sundaram Finance, Cholamandalam Finance, IndusInd Bank, All Cloud, Worldline, and Lohia. We thank you, sir, for your continuous support you have been extending to Federation of Indian Hire Purchase Association, and we expect in the future too. Thank you very much, sir. And today's bouquet would not have been possible to present before you without the help of this committee. I would like to thank all the committee members who have been working tirelessly from the past about 10 days. May I request committee members and office bearers to please come on the stage, and I would like to please acknowledge them. May I request our vice presidents, Deepak Mehta, I think he has gone, okay. Our joint secretary and registration, Chairman Sri Sanjay Bansali, please come on stage. He was accompanied also by Mr. Praveen Nahar. Mr. Deepak Parekh, please come on the stage.
Thank you very much for your guidance and support. Mr. Guman Singh Lodha, Mr. Ankesh Ostwal, where is he? Please come on the stage. Please come fast, yeah. Surinder Mehta, he is gone. And above that, our convention secretary, Sri Devang Chodia, please come on the stage. And convention chairman, Sri Rajesh Bhurat, please come on the stage. I request our president, Meghrasa Lunawat, to please join. Our past president, Prasad sir and Kailash Mansa Duga, to please come on stage. I would also like to thank Madhur Lalsa Gundecha for sharing his thoughts and ideas behind the programs, speakers, and all that. May I request Madhur Lalsa Gundecha to please be on the dais. These are all the part of bouquets, part of flowers, who has made a bouquet and presented before you this All India NBFC convention. We thank you, all these members of the committee. One sec. I also join them. Thank you, ladies and gentlemen. This was a team behind the convention. And we also request all the members and non-members, specifically for the non-members who have not become the member of the FIHPA are requested to enroll themselves as the members of Federation. It would be very useful. We will be in regular touch and will get regular communications. Last but not the least, FIHPA thanks all the staff, management of Hotel Hilton for their cooperative support and guidance, and our office staff, Mr. Natarajan and Mr. Vinayagam. Thank you very much, sir. Thank you. Please stay. Please, all the delegates, we request you to please stay for national anthem. Please. May I request all to raise for national anthem.
Janagana Mana Adhinayaka Jaya He Bharat Bhagya Vidhata Punjab Sindh Gujarat Maratha Dravida Utkala Vanga Vindhya Himachala Yamuna Ganga Uchala Jaladhi Taranga तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Jai Hind. Thank you very much. See you again. Do you want more? Yeah. Okay, we will again come back in the month of September, October. Thank you very much.
अब तो ये गाना है ना
Yeah.